US is, alone able to create those advanced semiconductors, but what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those.
Everyone, good morning, good afternoon, good evening to all of you. Welcome once again to this live analysis. स्टार्ट करते हैं आज का सेशन. फिलहाल के लिए देखोगे नेचुरल गैस, क्रूड ऑयल ऑलमोस्ट फ्लैट ही है, थोड़ा सा गैप अप है. क्रूड ऑयल, नेचुरल गैस हल्का सा गैप डाउन. इंडियन मार्केट थोड़ा सा प्रॉफिट बुकिंग आ गई है कल सेल ऑफ के बाद. मुझे लग रहा है शायद शॉर्ट अनवाइंड हुई है तो थोड़ा सा मार्केट अपसाइड मूव किया, बट स्टिल अभी भी सेलिंग का प्रेशर है. कल ट्रम्प की ओर से स्टेटमेंट आया था कि ईरान हैव 10 to 15 days, उसके बाद फिर हम कोई ना कोई एक्शन लेंगे. सो वी कैन एक्सपेक्ट नेक्स्ट वीक शायद कुछ हो सकता है. इस वीक तो मैं एक्सपेक्ट नहीं कर रहा हूँ ज़्यादा कुछ खास. एंड क्रूड ऑयल की बात करें तो कल फ्यूचर एक्सपायर हो चुका है क्रूड ऑयल का, तो उसी के अकॉर्डिंग ट्रेड करना. क्रूड ऑयल ऑप्शन में ऑलरेडी मार्च मंथ का ही ट्रेड हम लोग कर रहे हैं, तो उसी के अकॉर्डिंग फ्यूचर चार्ट भी मार्च मंथ का ही यूज़ होगा. ठीक है, एक्सपायरी में अभी काफ़ी टाइम है, 26 days इन क्रूड ऑयल ऑप्शन एक्सपायरी. सो फ्यूचर भी मार्च मंथ का ही यूज़ करना. ये करंट चार्ट अगर अभी देखोगे, ये अभी कल वाला ही चार्ट है, बट दिस इज़ अप्रैल चार्ट, क्योंकि कल फ्यूचर कॉन्ट्रैक्ट एक्सपायर हो गया है. सो यू कैन चेंज द चार्ट नाउ. ठीक है, ये 6013-15 वाला जो लेवल है, दैट विल बी चेंज्ड. करंट मंथ का चार्ट ही यूज़ करना. ओके, करंट मार्केट, करंट मंथ का फ्यूचर का चार्ट, मार्च मंथ का, ट्रेडिंग एट 6085-86 के अराउंड. सेम 6085-86 के अराउंड कल का ही लेवल है, कोई खास चेंज हुआ नहीं है. ठीक है, नीचे आता है तो वापस बाइंग का प्लान करना. इसमें अभी और कुछ खास तो कर नहीं सकते. सो दिस इज़ द लेवल, स्टिल सपोर्ट जोन यही है. प्राइस थोड़ा सा 6000 के ऊपर ट्रेड कर रहा है, तो थोड़ी वॉलेटिलिटी ज़्यादा हो सकती है. एसएल का थोड़ा ज़्यादा ध्यान रखना होगा. ठीक है, बाकी मोस्ट प्रॉब्लम मुझे लग रहा है शायद ये 6125 एज अ रेजिस्टेंस की तरह थोड़ा बहुत काम कर सकता है. और कोई सपोर्ट नहीं, रेजिस्टेंस अभी फ़िलहाल तो बने नहीं है. कैंडल क्लोजिंग बेसिस पे देखेंगे कि कैंडल कहाँ क्लोज हो रही है. नेचुरल गैस की भी एक्सपायरी है, तो नेचुरल गैस में भी जो लोग ट्रेड करते हैं वो लोग ध्यान रखना. नेचुरल गैस एक्सपायरी इज देयर. फरवरी मंथ की ऑप्शंस की आज एक्सपायरी है. फ्यूचर में भी फरवरी मंथ का ही चार्ट चल रहा है, तो कोई इशू नहीं है फिलहाल के लिए. नेचुरल गैस में कुछ खास नहीं है करने के लिए। परसों भी कुछ नहीं था, कल भी कुछ खास नहीं है, अभी भी कुछ खास नहीं चल रहा है। परसों सेल ऑफ में ठीक ठाक चला गया था, उसके बाद से रिवर्स किया, फिर नीचे आ गया। कल एक मैंने आप लोगों को फिबोनाची रिट्रेसमेंट के अकॉर्डिंग मोमेंटम बताया था, एक पॉसिबिलिटी ये लग रही है मुझे, वही शायद थोड़ा सच हो। एक सेल ऑफ आया है पॉइंट ए से पॉइंट बी, 50% गोल्डन रेशियो था रिजेक्शन। प्राइस अगर कंटिन्यू करता है तो कुछ इस तरह से जाना चाहिए। ठीक है, सेम फॉर क्रूड ऑयल। क्रूड ऑयल में भी देखोगे तो जिस तरह से ये मोमेंटम आया है बॉटम से, उसके अकॉर्डिंग कल भी हम डिस्कस कर रहे थे, यहाँ पर कल परसों का सपोर्ट था, परसों से एक दिन पहले मार्केट कंटिन्यूसली अपसाइड जा रहा है। तो अगर ये इस लेवल तक जाता है, तब अगर ये थोड़ा करेक्शन देता है यहाँ से, देन इट इज़ अ वेरी गुड साइन कि प्राइस फिर अपने वापस जो कल का सपोर्ट मैंने बना रखा है वहाँ फिर से आए और फिर इस लेवल पे हमें एक बाइंग देखने के लिए मिले। इट विल बी वेरी बेनिफिशियल। ठीक है, तो ये एक सिनेरियो फिलहाल होता हुआ लग रहा है फिलहाल के लिए। ठीक है, तो मुझे लग रहा है कि यहाँ से रिजेक्शन मिलने के चांसेस हैं। रेजिस्टेंस तो खैर कोई नहीं है वहाँ पे, देयर इज नो सच रेजिस्टेंस, बट या प्राइस शुड टेस्ट 29 जनवरी's हाई, वेरी हाई प्रोबेबिलिटी। ठीक है, कल प्राइस ने कोशिश जरूर करी थी वॉलेटिलिटी दिखाने की, नीचे तक आया, एग्जैक्ट लेवल तक नहीं आया है, अभी देख पा रहे होगे। आई थॉट एग्जैक्ट लेवल तक आ जाएगा, नहीं आया। ठीक है, नहीं आया, कोई सुनी, वापस आएगा तो यहाँ बाइंग के लिए रेडी है। ठीक है, बाकी फ्राइडे मुझे लगता नहीं कुछ बहुत बड़ा मोमेंटम होगा। अभी 6:30 सॉरी 1:30 लंदन सेशन ओपन होगा, शाम को 6:30 न्यूयॉर्क सेशन। 7 बजे आज यूएस का जीडीपी का डेटा आने वाला है, इंपॉर्टेंट है, ध्यान रखना, एडवांस जीडीपी का डेटा। एंड कोर पीसी प्राइस इंडेक्स का डेटा भी 8 बजे यूएस मार्केट। और फिर 8:15 पे इंपॉर्टेंट डेटा यूएस का मैन्युफैक्चरिंग पीएमआई और सर्विस पीएमआई का डेटा है। और फिर 8:30 पे न्यू होम सेल्स का डेटा। एंड 8:30 पर ही कंज्यूमर सेंटीमेंट और इन्फ्लेशन एक्सपेक्टेशन। तो काफ़ी डेटा है, इम्पैक्ट डालेंगे, स्पेशली ये जीडीपी का डेटा शाम को 7 बजे, वेरी इंपॉर्टेंट। सो आई एम एक्सपेक्टिंग अगर ये नीचे आएगा तो बाई करेंगे, फिलहाल के लिए इसको रिमूव कर देते हैं। ठीक है, बाकी लेट्स सी, ये यहाँ से कहीं रिजेक्शन लेता है तो चांसेस तो हाई हैं कि रिजेक्शन ले इस पर्टिकुलर जोन से। ठीक है, परफेक्ट होगा अगर यहाँ से सेलिंग आती है मार्केट में। दिस लेवल इज बेस्ट देन बाय, फॉर बाय। तो एक सेलिंग देखते हैं यहाँ पर से, इवन तो वहाँ पर कोई रेजिस्टेंस तो नहीं है। 15 मिनट में वहाँ पर कुछ लेवल भी शो नहीं हो रहा, 30 मिनट का रेजिस्टेंस भी दूर है। सो एक एज अ पॉइंट ऑफ इंटरेस्ट के तौर पे वहाँ पर एक सेलिंग प्लान करेंगे, नॉट एज अ रेजिस्टेंस। वैसे प्राइस ऑलरेडी बुलिश ही है क्रूड ऑयल का। नेसेसरी शॉर्ट मत कर लेना। निफ्टी बैंक निफ्टी थोड़ा बहुत प्रॉफिट बुकिंग में चले गए हैं, बैंक निफ्टी तो थोड़ा ठीक ठाक आ गया प्रॉफिट बुकिंग में। कल हम बात कर रहे थे डेली टाइम फ्रेम की कैंडल क्लोजिंग की, आई थी कैंडल क्लोजिंग ऑल टाइम, जो प्रीवियस ऑल टाइम हाई है उसके नीचे। आज ओपन इक्वल टू लो बना है, मुझे लग रहा है शायद कंटिन्यू हो सकता है करेक्शन बैंक निफ्टी में स्पेशली। बाकी बीच में और कोई सपोर्ट है नहीं क्रूड में, तो अगर फॉल आएगा तो मुझे लगता है एक सफिशिएंट फॉल आना चाहिए, अनटिल कोई अगर न्यूज़ नहीं आ जाती। तो मुझे लग भी नहीं रहा आज कोई न्यूज़ है वैसे क्रूड ऑयल में। जितने न्यूज़ आनी थी ट्रम्प कब तक अटैक कर सकते हैं वो उन्होंने खुद ही बता दिया, कल 10 से 15 दिन का टाइम। एक पॉइंट ऑफ इंटरेस्ट है, यहीं से देखते हैं सेलिंग। ठीक है, ये फिबोनाची के अकॉर्डिंग बन रहा है लेवल, अदरवाइज ऐसा कोई पर्टिकुलर लेवल नहीं है रेजिस्टेंस का। यहाँ पर रेजिस्टेंस ऊपर है 30 मिनट का 6350 टू 400। ये फिलहाल सिर्फ एग्जैक्ट लेवल बता रहा है। अगर प्राइस को फॉल करना है एज पर द फिबोनाची मोमेंटम के अकॉर्डिंग, मैक्सिमम 6190 6200 तक का ये एसएल होगा, उससे ज़्यादा बड़ा एसएल रख नहीं पाएंगे, टू हाई, बट दैट इज़ द ओनली वे। नेचुरल गैस भी कल डीप लेवल से, ऐसे फिबोनाची को तो कल मॉर्निंग पे टच कर दिया था गोल्डन रेशियो के अराउंड, बट फिर भी डीप लेवल से जाके गिरा नीचे। तो चलो एक एक्सपेक्ट करते हैं, ठीक है, छोटे से एसएल के साथ, ज़्यादा बड़ा एसएल नहीं लेंगे, बार बार रिपीट कर रहा हूँ, कोई रेजिस्टेंस नहीं है यहाँ पर मेरे अकॉर्डिंग। मेरे अकॉर्डिंग क्या, मेरे को चार्ट दिख नहीं रहा है 15 मिनट में, अगर होगा तो 15 मिनट के ऊपर तो नहीं है, 30 मिनट में भी नहीं है, 1 आवर में भी नहीं है। सो लेट्स सी, इससे बड़ा एसएल तो लेना सही भी नहीं है। ठीक है, बीच में कोई सपोर्ट नहीं है, विच इज़ अ गुड साइन। नया सपोर्ट ना ही बनाए अब। क्रूड में वैसे बेरिश नहीं हुआ, ओवरऑल तो मैं क्रूड में बुलिश ही हूँ, बट मुझे लग रहा है थोड़ी बहुत प्रॉफिट बुकिंग आ सकती है अब। एंड यहाँ पर ये जो सेलिंग का ट्रेड है, दैट इज एज पर द फिबोनाची रिट्रेसमेंट गोल्डन रेशियो बेस्ट रहेगा। अगर नीचे सपोर्ट पे आना है प्राइस को, तो उसी के लिए लगाया हुआ है ये। गोल्डन रेशियो वैसे हिट तो हो गया नीचे। अगर मैं एग्जैक्ट लेवल देखूँ, नीचे 5615 के अराउंड से बाइंग स्टार्ट हुई थी, लो वही है 5614-15। तो वहाँ से प्राइस अभी जिस लेवल पे चल रहा है, वहाँ से भी अगर फॉल करता है तो 0.5 का लेवल एग्जैक्टली यही बनता है, 5850, और लोअर एंड 0.6 गोल्डन रेशियो का 5796। तो ऑलमोस्ट हम उसी रेंज पे तो आ गए हैं। थोड़ा सा अगर अपर लेवल पे देखा जाए तो फिर हमारा ये लेवल बिल्कुल बीच में आ जाएगा। एंड इसको एग्जैक्टली अगर यहाँ तक कंसिडर करें तो बाकी गोल्ड और सिल्वर भी रेंज के अंदर फंस गए हैं। मे बी वेटिंग फॉर एनी ट्रिगर पॉइंट। मैं एक्सपेक्ट कर रहा हूँ कि अगर नेचुरल गैस थोड़ा नीचे आता है ना, कहीं रेजिस्टेंस बना के गिरे तो बेटर है। इस पूरे बीच में कोई लेवल ही नहीं क्रिएट हो रहा है जहाँ पर प्रॉपरली कॉन्फिडेंस के साथ बाई कर पाएँ या सेल कर पाएँ। जस्ट ट्रैपिंग फॉर द रिटेलर्स। अगर एक रेजिस्टेंस बना के गिरता है तो थोड़ा कंफर्मेशन मिल जाएगी कि यस मार्केट अब डाउन ट्रेंड में ही है। इवन दो न्यूज़ की वजह से तो कुछ भी हो सकता है, बट कंफर्मेशन मिल जाएगी। अगर ऐसा नहीं होता है तो फिर ये पूरा स्पेस ओपन ही है। अभी भी कोई फ्रेश रेजिस्टेंस बनानी है। ठीक है, ये रेजिस्टेंस था आपके पास सेलिंग का, लास्ट वाला। यहाँ पर एक सपोर्ट एरिया था परसों, उससे एक दिन पहले, याद होगा आप लोगों को। मार्केट ने इस लेवल पे होल्ड करने की कोशिश करी थी, लेवल रिमूव कर दिया था फिर, बिकॉज जिस तरह का प्राइस एक्शन बना था ना, वहाँ पर बाइंग करी थी ना सेलिंग करी थी। प्राइस ने ब्रेक किया, प्राइस डाउन साइड आया, फिर अगले दिन गैप अप ओपन हुआ उसी लेवल से, फिर बाइंग आई, फिर उसके नीचे आ गया। तो ये लेवल अभी हमारे काम का नहीं है, तो इसको हम रख नहीं सकते अब एज ए सपोर्ट या रेजिस्टेंस। बाकी इन्वेंट्री तो नेगेटिव ही थी कल, नेचुरल गैस की। यहाँ पर थोड़ा सा ये पॉइंट ऑफ इंटरेस्ट पे एसएल बड़ा ही बन रहा है टारगेट के हिसाब से देखोगे, क्योंकि रेंज है। एग्जैक्टली तो नहीं कहा जा सकता एग्जैक्टली कहाँ पर रुकेगा, बट या एक मिडिल पॉइंट 6140। बट अगर मैं उसको फिबोनाची के अकॉर्डिंग कंबाइन करूँ तो हो सकता है मिनिमम यहीं से सेलिंग आ जाए 6110। मैक्सिमम हो सकता है अपर लेवल पे अगर जाता है तो 6210, गोल्डन रेशियो के अकॉर्डिंग। क्वांटिटी का ध्यान रखना है, एसएल बड़ा ही हो रहा है यहाँ पर, एटलीस्ट 40 पॉइंट, 30 टू 40 पॉइंट फ्यूचर में। एट दी मनी का पुट भी बाई करोगे तो 20 पॉइंट का तो एसएल बन ही जाएगा। ठीक है, इस रिस्की ट्रेड को नहीं लेना तो फिर वेट ही करना पड़ेगा, कोई सपोर्ट रेजिस्टेंस बन नहीं रहे। ओवरऑल क्रूड ऑयल बुलिश ही है, कहीं से भी बेरिशनेस नजर नहीं आ रही है। लुक एट दिस कैंडल अगेन, ओपन इक्वल टू लो है। बस आई एम एक्सपेक्टिंग लिटिल बिट प्रॉफिट बुकिंग की आए। इवन फर्स्ट कैंडल भी देखोगे गैप अप के बाद प्राइस नीचे जरूर गया बट फिर से रिकवर है। तो ज़्यादा मुझे रिस्क मत लेना सेलिंग वाले ट्रेड में, ठीक है, क्रूड में। क्रूड ऑयल भी देखोगे जिस तरह से ऊपर जा रहा है, बिल्कुल पैराबोलिक कर्व की तरह ही जा रहा है, जैसे गोल्ड और सिल्वर के मोमेंटम हुए थे। यहाँ से देखोगे बिल्कुल भी कोई बड़ा पुल बैक आया नहीं है, इवन गोल्डन रेशियो तक भी कोई बड़ा पुल बैक नहीं है। ऑलमोस्ट एक सीधी लाइन जैसी लग रही है, बिल्कुल स्टीप कर्व है। इंडिया का तो आ गया है मैन्युफैक्चरिंग पीएमआई और सर्विस पीएमआई का डेटा। India's manufacturing PMI increased to 57.5 in February up to 55.4 in previous month, तो ये तो ठीक है। इंडिया का मैन्युफैक्चरिंग इंडेक्स इंक्रीज हुआ है, गुड साइन फॉर इंडियन इकोनॉमी। सर्विस पीएमआई का डेटा देखोगे कुछ खास चेंज नहीं हुआ, 58.4 है फरवरी में, लास्ट मंथ 58.5 था, तो 0.1 ही कम हुआ है, तो ऑलमोस्ट कह सकते हो न्यूट्रल ही है। सर्विस में ज़्यादा कुछ खास किया नहीं है इस बार हमने। अन अकेडमी सेंटर बंद? अन अकेडमी क्या है अभी है? ओके, ऑफलाइन सेंटर बंद।
Christine Lagarde has told the Wall Street Journal she expects completing her mission as president of the European Central Bank will take her until the end of her term. This after a recent report suggested Lagarde will resign early to allow the French government to help pick her successor before next year's election. And coming up, Nigeria moves to redirect oil revenues to shore up its public finances. We'll bring you that story next. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Nigeria is moving to shore up its public finances by ordering the state oil company to share more of its oil and gas production proceeds. Under a new directive signed by President Bola Tinubu, income from production sharing contracts will now flow directly into a federation account for distribution across all tiers of government. For more, our chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. Jen, this seems to me like quite the shakeup in terms of how oil revenue is distributed. What does the directive actually say? What does it do?
Certainly, Jumana, especially if you look at how the NNPC, which is the state-owned oil company, how it was structured. So the reason why it was able to, as President Tinubu says, able to trap revenue was really because it was operating as both a commercial entity and also a regulator. And so what this executive order does, as you were just alluding to there, it directs the NNPC to stop withholding funds, centralizes all of some of these production sharing income that is coming in from a lot of these oil and gas proceeds directly into what is called the Federation account. And that account will then be the one to distribute between the state, the local, and also the federal government. He is hoping that this gets to a lot of the reforms that he had instituted back when he first came into the presidency just a few years ago. But really, it seems like he's trying to do away with a lot of the red tape and the bureaucracy that the NNPC was operating in before. It's not only that, though. He's doing away with some of these fees that the NNPC had instituted, which was 30% for management of some of these contracts, and then also 30% for exploration. So hopefully cutting down some of the income that was trapped essentially in the NNPC, distributing it out more for development within the country.
And you mentioned, President Tinubu has been in power for a couple of years now, has implemented many reforms. Yeah. Why was it necessary for Nigeria to also reform the way oil revenue is collected?
Yeah, if you take a look at oil revenue in Nigeria, of course, they, like many other oil-producing countries, are trying to diversify, but it still makes up just over 30% of revenue. So it's very important for this economy. And then if you look at some of the statistics, revenue collection in Nigeria has been quite weak, really. And so some of the projections actually estimate that revenue, because revenue collection is so weak, a lot of the funds that are coming in and that is within the government is actually being used to pay off loans. And so it was needed to at least shore up some of the public finances and the public purse. Potentially, this gets to doing that. But still, it's going to take quite some time. If you take a look at some of the statistics that actually came out from the World Bank, Nigeria has one of the lowest tax to GDP ratios, making oil revenue efficiency critical for any sort of development. And we saw some of that statement being put out, some of those sentiments being put out when Tinubu put out this statement about the NNPC. So it seems like this is what he is trying to get to, and this is just another step in his I guess, effectively reform of the economy.
Jennifer, thank you so much for bringing us that story. Jennifer Zabazaja, our chief Africa correspondent in Johannesburg. Now for a look at some of the other stories we're following. Thailand has emerged as a key hub for Chinese-made drones heading to Russia. According to Bloomberg analysis, exports of unmanned aerial vehicles from Thailand to Russia have surged since 2022, mirroring a jump in drone imports from China. Beijing says that it does not aid Russia militarily. However, Chinese-made technology is routinely found in the battlefield in Ukraine. Bloomberg has learned that Europe's 5 biggest military spenders are set to jointly develop low-cost air defense weapons. The new initiative would develop autonomous drones and missiles based on lessons learned on the battlefield in Ukraine. The UK, France, Germany, Italy, and Poland will work together within the framework of NATO. And coming up, we're going to be talking about this price spike in oil. Oil prices rallying on the back of rising tensions with Iran. We are sitting at a 6-month high now for the price of oil. Brent trading at just above $72 a barrel here. Carol Nachli, the CEO of Crystal Energy, will be joining us next to talk us through it and the drivers ahead. This is Bloomberg.
For climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian equities fall and oil rises to a 6-month high as escalating tensions in Iran weigh on sentiment. President Trump warns Tehran they have 15 days at most to reach a nuclear deal. This as the U.S. assembles a vast array of forces in the Middle East. Plus, the risk of war mounts in the Horn of Africa as Ethiopia and Eritrea deploy troops and military equipment to the northern Tigray region. Well, it's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Geopolitics high on the agenda this morning and heading into the weekend. That buildup of U.S. military assets, as we were just discussing earlier on the show, are really sending alarm bells across the world. And we're actually now seeing global markets react to it. The handover from Asia Pacific, quite cautious this morning, down 0.3%. Hong Kong is back online after being off for Lunar New Year. So cautious handover there. S&P futures, however, leaning towards positive, up 0.3%. Attention will be focused on the PCE data coming out later today, GDP and PMIs. So a bunch of data dropping in the U.S. later this afternoon. The USD also seeing a bit of a bid this morning. This is the Bloomberg U.S. dollar. We're up 0.1%. We're up 0.9%, so almost 1% over the course of this week. It's been a while since we've seen a week of gains for the USD, but perhaps some of the hawkishness that's come through from those Fed minutes, in addition to geopolitical concerns, are actually bringing out a bit of a bid for the greenback. And then Brent, $72 is where we are at, up 0.6%. Old geopolitical premium. We'll talk about that in just a moment. And the terminal chart for today, one that I wanted to just briefly talk about, is the fact that the U.S. trade deficit last year came out almost as large as it did for 2024. And remember, this was a year where President Trump imposed those tariffs. And what this shows is that it didn't actually deter U.S. consumers from buying goods from overseas. And certainly there's been a redirection away from buying Chinese imports, but they've still bought from other countries, which means that the actual trade deficit is still substantial, just shy of $1 trillion. These are still huge numbers. So from this perspective, and only this chart alone tells you that perhaps one of the stated aims of applying the tariffs has not necessarily transpired to lower import volumes. So just going to leave that there. Okay, let's go back to talk about oil now, because prices have been rallying on the back of these Iran tensions, trading near 6-month highs. President Donald Trump said Tehran had 15 days at most to reach a deal over its nuclear program as the U.S. assembled a vast array of forces in the Middle East. Joining us now is Carol Nakhle, CEO of Crystal Energy. So, Carol, I'm guessing that traders are really on high alert going into this weekend. How much geopolitical premium do you think is priced into where oil is trading? Brent at around $72 here.
Well, if I strip the geopolitics aside and I look at market fundamentals, I did not see many significant changes. So yes, we saw some disruption in Central Asia from Kazakhstan, but that was short-lived. We saw a seasonal disruption in North America with the cold weather. But apart from that, nothing major has happened on the market fundamentals. The only thing that has happened in oil markets and globally is geopolitics. What is happening today in the Middle East, we have not seen in decades since the invasion of Iraq. The buildup of military presence from the Americans in the Middle East is something quite worrying. And that by itself is keeping everyone on alert, nervously watching what could happen and allocating all sorts of probabilities to different scenarios. But so far from what I have seen, I think the highest probability today is being allocated to a military action on Iran with significant consequences on oil markets. So that's what is translating into these additional dollars that we saw being added to oil prices in a very short period of time, and we haven't seen the end of it yet.
Yeah, but Carol, for many jurisdictions around the world, Iranian oil is sanctioned. So I just wonder what the actual knock-on effects would be if you see a complete removal of Iranian exports. What does that actually mean for the impact it could have on oil markets?
I don't underestimate Iranian exports because they are still substantial, a few 100,000 barrels a day, depending. Some say 500, some say a little bit more. But I don't think that what is causing the fear in the market today is the loss of Iranian barrels. That can be easily compensated for. The serious risk today that people are concerned about is the impact on oil and gas, LNG trade going through the Strait of Hormuz. This is, for me, is a real risk factor here, the trade for oil and gas. You have almost 25% of oil trade, global oil trade going through that strait, 20% of global LNG also going through that trade, and also not only the trade. What if Iran, let's say, in one of the many scenarios, what if Iran is attacked and it retaliates by attacking the infrastructure of its neighboring countries in the region? You're talking about Saudi Arabia, you're talking about the UAE, you're talking about Kuwait, you're talking about really major producers. This is where I would say is the worst case scenario. And that's why we are watching nervously about how the situation will unfold and what scenario is going to result in case there is military action. So it's not really the loss of Iranian barrels that is worrying us.
Yeah, okay, fair point there. But at the same time, we have been talking for months about the massive oil surplus that's hitting the market in 2026. Should that not be enough to absorb any of the geopolitical shock that could emanate out of the region?
It depends on how bad the situation is going to unfold, because if it's just going to be, let's assume it's going to be a military action, right? So if it's going to be a targeted, short-lived, as we saw, for example, last year, that will have a very minor impact. We might see a spike in prices only for them to be readjusted. But in the worst-case scenario where trade from the Strait of Hormuz is disrupted, where infrastructure, energy infrastructure is attacked, as we saw, for example, in 2019, then that surplus might well turn into a deficit. Of course, it's not going to be long-lasting, because the market is much more comfortable. I have not seen very high expectations for oil prices, as we saw, for example, in 2022, where even some were talking about $200 or $300 oil price. That is unlikely to be the case today. But if we have the escalation of the situation in the Strait of Hormuz, then we could see that surplus turning into a deficit and putting upward pressure on prices.
Okay. One thing I also want to ask you about, and I read about this in a report that Goldman Sachs put out this week. They've noted the huge rise in Russian, Iranian, and Venezuelan crude on water. But at the same time, they've also noted that as it pertains to OECD stockpiles, levels are still pretty low. We're not seeing that massive inventory buildup yet on land. Why is that the case?
Because you do have the sanctioned barrels. First of all, the sanctions on Russia and elsewhere, the enforcement of sanctions is being tightened. We saw how the dark fleet, several ships have been attacked in water. And we see also some conventional buyers of those sanctioned oil, primarily the Indians, moving away from maintaining their purchases, even if it's temporary. So we're seeing on the buyer's side, there is less appetite for taking the risk to buying those sanctioned oil. And that's why you're seeing this kind of build-up happening. You're not finding a market easily for those barrels. But given the history of oil markets and what we have seen over the years, sanctions barrels will always find a buyer at some point. Maybe today we have a dip in the demand and the appetite, but I think it's a question of time before it finds a home. We can always evade sanctions, but at the moment, the situation calls for a more cautious approach on the buyer's side. We're definitely seeing the Indians being much more careful. The Chinese are still maintaining their purchases, though they are facing a bit of a pressure from Venezuela because of the growing American influence there.
Yeah. Carol, always a pleasure to chat to you. Thank you so much for coming on our show. Carol Nakhle, CEO of Crystal Energy. Well, tensions are rising again in the Horn of Africa, with Ethiopia and Eritrea deploying troops and military equipment near the Tigray region. The buildup is fueled by lingering friction between Ethiopia's government and Tigrayan forces, as well as spillover from the ongoing conflict in neighboring Sudan. For more, we're joined by Bloomberg's Simon Marks. Simon, how serious is this military buildup?
Well, quite serious. The last war in the region only ended 3 years ago with a peace deal. And since then, large sections of that agreement just haven't simply been implemented. And so we're in a situation now where the regional government in the Tigray region is upset at the implementation of that deal. And meanwhile, the Ethiopian government has also seen large numbers of troops move towards that border in recent days and weeks. That includes heavy artillery, lots of men, and they're also shaping up with their air equipment, including drones. And we've also seen the Tigrayans now, unlike the previous war, joined by Eritrea. They are now supporting each other, ironically, even though Eritrea was committed horrific crimes inside the Tigray region during the last war, when they actually backed the government of Abiy Ahmed. So things are really at an all-time point of tension in terms of the recent years.
Okay, so the high levels of tension, if the conflict does reignite, what does it mean for Ethiopia, which has been going down the path of these economic reforms? They're undergoing an ongoing debt restructuring process. Could it set them back?
Most definitely. I mean, everyone you talk to, economists, analysts, they all say Ethiopia doesn't really have the money for a war. If it did go to war, there'd be huge costs. They're only just starting to recover from the last time there was conflict. The hangover effect from the COVID pandemic took a long while to sort out. And creditors are just beginning to see light at the end of the tunnel in terms of restructuring that debt. So it would really set them back a huge amount. The thing that Ethiopia, I think, is banking on, though, is help from proxies. You see proxy support in various conflict zones, not just in Ethiopia, but in Sudan also. You have the United Arab Emirates strongly backing Abiy financially in recent years. And likewise, his opponents have close ties with the likes of Egypt, which is obviously keen to set Ethiopia back because of its control of Nile waters and this massive mega dam. So this could easily fuel a war, nonetheless, just despite the economic situation.
Bloomberg's Simon Marks, thank you so much for bringing us that story on Ethiopia. Now for a look at some of the other stories we're following today. United Nations experts said Sudanese rebels who captured a key Darfur city last year targeted non-Arab communities in a bloody campaign that carried the hallmarks of genocide. They said the Rapid Support Forces militia was responsible for a systemic pattern of ethnically targeted killings, sexual violence, and destruction around El Fasher. An earlier UN report found more than 6,000 people were killed over 3 days when the RSF took El Fasher. The National Bank of Rwanda delivered its largest interest rate increase in almost 3 years to curb inflation in the near term. The Monetary Policy Committee lifted the key rate to 7.25% from 6.75%. This brought total rate increases to 75 basis points since the central bank began tightening policy last year. And coming up, OpenAI says it has visibility into its future chip needs, even as the industry faces a supply shortage. That's next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. OpenAI says it has visibility into its future chip needs, even as the industry faces a supply shortage. Chief Global Affairs Officer Chris Lehane also told us that democratic nations need to develop shared safety standards for AI.
Democratic AI is going to prevail, or if the world's going to build out on democratic AI, I do think the world does need to work together collectively to make sure you're addressing and identifying the elements that are going to be needed. And look at, we are, and I know you guys talk about this and cover this, right, in a unique and perhaps challenging geopolitical moment where I actually have some optimism in terms of where the world's going, particularly democratic world, is that we all are going to have to work on this together. Democratic societies do need to start to develop shared safety standards on this technology. You're seeing emerging AI safety institutes, US, UK, Japan, Australia has an early version, India's thinking about an early version. And he talked about, can we think about this as some type of analog to the IAEA, the International Atomic Energy entity. But I think those are the types of I think muscles that we're going to really need to develop to ensure that democratic AI does get built. But inclusive within all of that too is how do we all work together, particularly on the supply chain piece.
But as it stands now, do you see this chip shortage deepening further? And will that slow down the AI build out? From your perspective, how does it look?
From our perspective, I think, look, we feel confident that we have visibility onto what we are going to need. Now, we also make sure we sleep with one eye open, right? Because you want to continue the old line, trust but verify on all of this. We ourselves are working with a variety of really strategic partners who are, really supportive of us in terms of access to chips. We ourselves think about how do we impart our knowledge on chip design.
OpenAI Chief Global Affairs Officer Chris Lehane speaking with Bloomberg's Haslinda Aman in New Delhi. Now for a look at some of the other stories we're following today. The co-chief executive officer of Netflix says his company's acquisition of Warner Brothers Discovery will lead to more films in theaters. Ted Sarandos says it is likely there will be even more high-quality films for theaters if the deal goes through, as Netflix will use Warner Brothers distribution network. Netflix co-CEO Ted Sarandos says the streaming giant's bid to acquire Warner Brothers Discovery will offer great value to shareholders of both companies. He says a merger would lead to more films in theaters if the deal goes through, addressing a key complaint from Hollywood. Netflix is vying with Paramount Skydance to buy Warner's studios and streaming business.
We think this deal will have a positive impact on the business for the long term. Remember, what we're doing in buying these assets is we've been creating original programming on Netflix for about a decade. They've been making original films and series for about 100 years. They have incredible IP, and we just happen to have a consumer model that can better maximize the returns on that IP. So I think it's a great long-term outcome.
Bloomberg has learned CVC Capital Partners is working with Goldman Sachs to explore a sale of Mediterranean marina operator D. Marin. D. Marin has a network spanning about 26 locations across Europe and the UAE and is one of the largest operators of yacht marinas in the Mediterranean and the Gulf. Coming up, President Trump says his border peace has received about $17 billion for Gaza. More details next.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslinda Amin in Davos, Switzerland, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Well, President Donald Trump said his Board of Peace has received roughly $17 billion in pledges towards humanitarian aid and reconstruction efforts in Gaza, and that more than half a dozen countries have promised personnel to a stabilization force. Trump made the announcement during the group's first meeting in Washington. He said the U.S. would contribute $10 billion, which was a small price to pay to secure lasting peace.
The United States is going to make a contribution of $10 billion to the Board of Peace. Thank you. And we've had great support for that number. And that number is a very small number when you look at that compared to the cost of war.
We're joined by Bloomberg senior Middle East reporter Sam Daghir. Well, it was always going to be a big Trump event, the first inaugural meeting of his Board of Peace. The Board of Peace, part of that 20-point plan that the Trump administration released a few months ago, with the view that they will work towards Gaza reconstruction and lasting stability in the region. What did we get out of yesterday's event, Sam?
I mean, as you said, we got the usual Trump razzmatazz, the big show, the big numbers, the big revelations. I mean, that's kind of vintage Trump, as we say. It was interesting in terms of the people who were there. I mean, none of America's traditional European allies. And if you look in the room, there was no UK prime minister, no French president, no Italian prime minister, none of these, traditional allies of America. It was more what one analyst described as middle powers, like Saudi Arabia, the United Arab Emirates, Turkey, who have basically partnered with Trump on this vision of a new world where things can be done outside of the traditional UN system, right? Which they feel which the Trump administration feel is broken.
Yeah, so we got a few commitments on the stabilizing force, the international stabilizing force. But one of the bigger questions, at least from Israel's perspective, is the pace of Hamas disarmament. And that has to be a big focus in the coming weeks.
I would say that is the question for Israel. I mean, it's front and center. And on Monday, before this Board of Peace meeting, we had one of the senior aides to Prime Minister Benjamin Netanyahu come out and say Hamas has 60 days. I mean, obviously, the Americans have not commented on that or confirmed that, but that's coming from the Israeli side. One interesting thing, I mean, that I observed last night was the High Representative of Gaza, for Gaza, who was appointed by the White House. His name is Nikolai Mladinov. He's a Bulgarian diplomat. He used to be at the Anwar Gargash Diplomatic Academy here in Abu Dhabi. He actually said the first thing we need to do is disarm Hamas. I mean, he spelled it out, and that sort of comforted the Israelis. But how you go about it is a whole different business, because you have certain countries in the Arab world who feel it has to be, as one Gulf official told me, it has to be linked to a political horizon, meaning, the steps towards a Palestinian statehood. must be linked to the disarmament of Hamas.
Yeah.
And then you have countries like the UAE are saying, no, it has to happen now.
Okay, so this is what I was going to bring up with you, and you've also, you talk about it in your article. There was good representation from the U.S.'s Arab allies at the board yesterday, but within the Arab region, are there differing visions of how this should all play out?
Absolutely. And I would say the representation also sent a message, particularly the Saudi representation. It was the Minister of State for Foreign Affairs, Adel al-Jubair. It wasn't the foreign minister himself, Prince Faisal. So that was interesting, a slightly lower representation. But the Abu Dhabi sent, Sheikh Abdullah, the Minister of Foreign Affairs, who, as you know, plays a leading role in all of this. He was the one who signed the Abraham Accords 5 years ago. So it's normal for him to represent the president at such, high-level events. So he was there. The Turkish and the Turkish foreign minister was there. The Qatari foreign minister and prime minister was there. So there are differences over, for instance, the Saudis are pushing openly, even saying this period has to be transitional. We don't want to establish facts on the ground, like these temporary towns and cities in Gaza that would somehow solidify this separation of the West Bank and the Gaza Strip. That's their greatest fear. And they feel like the Palestinian Authority is reforming and is reformed enough to come back as soon as possible, and that everything done in Gaza should be transitionary, for a short period. And here's where they differ with the UAE, which the UAE is saying, these issues of statehood are very complicated, particularly given that Israel rejects any talk of statehood at the moment. Why don't we just focus on improving the lives of the Gazans by, fixing their housing, providing for their needs, their humanitarian needs, their education need? That should be our priority now, to stabilize Gaza. But then you talk to experts, the rubble, of removing the rubble, I mean, that's a whole different issue. We're talking about
$70 billion.
Tens of millions of dollars.
Sam, thank you so much for bringing us that story. And with that, we end our show, Horizons Middle East and Africa. Stay with us. Daybreak Europe coming up next.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Oliver Crook. Here are your top stories. Deal deadline. President Trump warns Tehran they have 15 days to reach a deal. This as the U.S. military amasses more forces in the Middle East. Asian stocks fall as oil hits a 6-month high, walking that tightrope between war and peace. Plus, investors brace for U.S. PCE inflation, U.S. GDP, and a potential Supreme Court ruling that could strike at the heart of Trump's tariff policy. Let's get into the markets this morning, looking at where we are trading going into the last session of the week. We've got Eurostoxx 50 up by 0.5 percentage point. You can see this morning giving back some of the losses that we saw yesterday across the board within Europe. The dollar index we're watching very closely, gaining yet again. We're up almost 1% over the last 5 days, really reversing that trend that we've seen in the dollar over the last year, really. And Brent crude, obviously, very sort of top of mind for everybody as we watch that U.S. military amassment around the region. Brent breaking through $72 a barrel. This morning, we're also watching 7 a.m. today, UK retail sales. We'll also be watching, as we were mentioning, U.S. PCE, GDP, and, of course, the possible Supreme Court ruling from the Supreme Court of the United States on Trump tariff policy. All that and much more. Let's get started. Well, a growing contingent of U.S. military forces in the Middle East is escalating tension in the region once again as the U.S. president ramps up pressure on Iran to strike a nuclear deal. President Trump has now signaled limits to the diplomatic process, setting a deadline for Tehran to reach a deal.
We're either going to get a deal or it's going to be unfortunate for them. I would think that would be enough time, 10, 15 days, pretty much maximum.
As ever, let's get some more from Bloomberg Horizon Middle East and Africa anchor Jumana Brzezinski. Jumana, once again, getting an update throughout the week. What do we know about this U.S. deployment and how Tehran is preparing?
Well, look, that 10 to 15 days comment is new and is what people are really latching onto in the last 24 hours. And really, it's Trump applying last-minute pressure on Iran to come to the table. This as we talk about the huge buildup of military assets in and around the region. Just to give you the context here, analysts in the space say that the buildup of military equipment, ammunition in this part of the world is the biggest we've seen since the Iraq War, going all the way back to 2003. It actually dwarfs the buildup that the U.S. did in Venezuela earlier this year, and even surpasses that of what they had prepared in anticipation of U.S. Midnight Operation Hammer, which happened in the June War a year ago. So it does tell you that they're most definitely prepping for something in terms of those 2 aircraft carriers we spoke about. We've got missile destroyers, F-35 fighter jets, helicopters. Tracking sites are reporting that there's been a surge of flight activity out of military transport and aerial tankers as well. So yes, the positioning is certainly there. What we understand is that President Trump did have a meeting with his son-in-law, Jared Kushner, and with Steve Witkoff on Wednesday. He was briefed on the negotiations with Iran. And while they did say that there had been some progress, they're still very far apart in terms of getting Iran to agree to some of the concessions that the U.S. are asking for. At the same time, a U.S. security official has also briefed the Pentagon, saying that the military assets will probably be ready to go as of mid-March, which is probably why President Trump gave that 10 to 15-day timeline. And so the region is on high alert. You're seeing it in the price action in oil and even some equity markets today. And I would just caution as we head into the weekend that roughly a year ago, before that June war, President Trump had also given a 2-week notice to Iran, and then they struck a couple of days later. So at this point, really, all options are on the table. Ollie.
That's right, Jumana. And in tandem, we also have the president convening for the very first time the so-called Board of Peace. What came of that meeting, and do we have a clear understanding of what function this Board of Peace is actually supposed to play?
Well, the Board of Peace is ostensibly one part of the 20-point Gaza peace plan that the Trump administration unveiled a couple of months ago. The view is that it would oversee the reconstruction, the rehabilitation of Gaza, in addition to steering over a committee of Palestinian technocrats with the view of long-lasting stability in the region. But still, lots of issues. Number one, an issue of cost. The UN estimate that reconstruction costs alone in Gaza are going to top around $70 billion. Yesterday, a combined $17 billion was pledged from 9 countries for the reconstruction of Gaza, and the United States said that they would tip in another $10 billion. But that's still far off that $70 billion target, of course. The other bigger topic, and I would say the main one for Israel at this point, is the question of Hamas disarmament and over what time frame that is going to happen and whether it is actually going to happen in the next couple of weeks. An Israeli official briefing also that they would like to see that happen over the course of the next couple of months. Otherwise, there's always the possibility of restarting the war again. And then finally, the question of the international peacekeeping force, the ISF is what they're calling it. Some countries have committed to sending military personnel to the Gaza Strip. But again, in the absence of that full disarmament, many countries are also quite reserved about sending troops to the region in the absence of knowing that they will be sent to a strip that actually is not under the command of Hamas. Indonesia, however, did say that they may send as many as 8,000 troops, so perhaps a little bit of progress on that front. But ultimately, it was a very much Trump-type event, a lot of fanfare, of course, and very noticeable. You as well would have noticed this, Oliver, the absence of many European nations who still had a lot of questions about the exact composition of this Board of Peace and how it plans to interact with the United Nations.
Yeah, exactly. And how expansive the ambitions for the Board of Peace might be going forward outside of the question of Israel and Hamas. Thank you so much, Bloomberg Horizon's Middle East anchor, Jumana Bersetchi, for the latest on Iran and the Board of Peace. Let's turn now to the oil market. We have seen a rise of 6% over the last 2 sessions over those tensions building between the United States and Iran. Joining us now is Anthony DePaula, our Middle East energy reporter. For oil, walking this tightrope between war and peace, where do you see as the ceiling and the floor for this commodity really going into this moment of intense uncertainty?
Good morning, Oliver. Yeah, as you said, we've seen quite a run up in oil this year, which is basically all that geopolitical risk put into the price there. We are probably pretty much at the top of a range of geopolitical risks that a lot of the analysts and traders that we've been speaking to have indicated something, as little as $3, as much as $10 of this kind of geopolitical risk, and that risk is there because of that buildup, the deadlines, the talks going, yes, positively, but going slowly. And if you just look at the last time that the U.S. and Iran reached a nuclear deal under the Obama administration, that took months in preparation. So a 10 to 15 day window to reach a deal is really tight. There's a lot of fine print, a lot of things to be sorted out. So Trump is really putting up the pressure. So that's really the risk that we're seeing in that price there. Of course, if we do get to this stage where there is an actual attack and there are missiles and bombs flying, then we potentially can see oil spiking up even higher. We saw prices jump in June in the brief war there when a facility, an energy-related facility was hit. It turned out to be very domestic focused, and prices fell back from that. But if we see a real impact on production or an impact on export capacity, then that could really spike the oil price even further than where we are now, while traders assess what the damage is, how much oil is going to be interrupted, and how quickly it could come back to the market. So what traders are really watching is Iran's own ability to export, Iran's own infrastructure, as well as any potential strike back by Iran, any retaliation by Iran, which could hit some of the other Gulf producers here. There's a lot of production, there's a lot of exports, there's a lot of assets in the region, and those assets can become targets in a shooting war. So that's what's really keeping the market on edge, Oliver.
Well, Anthony, thank you very much. Anthony DePaolo, our Middle East energy markets reporter there. We should say that Brent trades at about $72 a barrel. Back in June of last year, we saw that reach almost $79 a barrel. So we're watching that very closely as we watch the buildup of U.S. Troops and equipment around Iran. Asian stocks are falling as the escalation tensions in Iran also weighing on sentiment there. We'll get more now from our Bloomberg Asia Equities Deputy Managing Editor, Balazs Pence. Balazs, we did the oil story. How is this reading through into the equity story over in Asia? Good morning.
Good morning, Oliver. On the stock market, there was a continuation of the mild risk-off sentiment that we saw in U.S. trading. It looks like these geopolitical headwinds taken together with the U.S. data coming up and the potential Supreme Court decision on Trump's tariffs created just enough momentum towards haven assets that some of these more riskier stocks saw a movement downwards. We're not talking about any sort of broad sell-off, just to be clear, but this is more a move towards safer assets. When we look for winners in this situation, one sector that stands out, as is often the case in times of geopolitical uncertainties, defense stocks, particularly in Japan and Korea. Names like Hanwha Aerospace come up here, or Kawasaki Heavy have done really well. And the other sector, off the back of the movement in oil that was just discussed, was the energy sector. We also saw some pretty significant gains there by names like INEOS in Japan or S-Oil in Korea. Woodside in Australia also comes to mind. So there are some winners in this, but broadly, it's a risk-off sentiment.
Well, Bloomberg Asia Equities Deputy Managing Editor Balazs Pence, thank you very much for that update. And the dollar also gaining this morning on the Middle Eastern risk as the greenback heads for its best week since October, really reversing something we have seen for the last year. Let's bring in Mark Cranfield, Bloomberg Markets Live cross-asset strategist. Mark, how do we assess this move in the dollar over the last 5 days? Is this a sustainable move of dollar strength here?
It's probably not going to go too much further. If you think about where we came into this week, positioning across the board was very short US dollars. If you look at the CFTC data, which came out at the end of last week, it was some of the biggest short positions we've seen for many months, whether against the euro, against the yen, against the pound, Canadian dollar, a variety of currencies, and Australian dollar was in there as well. So people came in heavily positioned that way. We had the surprise from the Fed minutes. The minutes were much more hawkish than anybody had expected. They actually were discussing the possibility that they may need to raise interest rates. Now, some people are taking that with a pinch of salt, of course, because in reality, the idea that the Federal Reserve would hike rates this year seems a little bit stretched, but at least those minutes landed and it was a complete shock. On top of all of that, you have this move of US military hardware going into the Middle East, as we've been discussing, and that obviously is adding to the tension as well. Gives the dollar a little bit of a bid for the time being. It probably needs a lot more. For the dollar to sustain a bid beyond a few days, we need a lot more information. We need serious moves from the Federal Reserve to suggest they could actually increase interest rates. That is not really on the cards. So we'll probably see things calm down and the dollar start to lose its way again, unless we do get a surprise attack on Iran over the weekend. That's not the base case for many people, but let's see what happens in the next couple of days.
Yeah, Mark. And meanwhile, the Minneapolis Fed President Neil Kashkari has accused National Economic Council Director Kevin Hassett of trying to undermine Fed independence. That's also part of the conversation around the dollar. And that comes after Hassett criticized a New York Fed economist study, which found that U.S. companies bear the most of the burden from President Trump's tariff hikes. Kashkari defended the study, saying that research conducted by the Fed district banks reflect efforts to learn more about the economy. Have a listen.
I thought that Director Hassett's comments, though, he went on and he said that he disagreed with the results and the researchers should be punished or they should be disciplined for their conclusions. I think this is just another step to try to compromise the Fed's independence. Over the last year, we've seen multiple attempts to try to compromise the Fed's independence, including in December when the Department of Justice served a subpoena to the Board of Governors over some building expenses. It's really about monetary policy.
So the question The question around Fed independence sort of rearing its head once again in the context of tariffs. We may also get a ruling from the Supreme Court a little bit later today on the IEEPA, whether or not they are basically legal, the basis upon which Trump has imposed all of these tariffs. Well, how are the markets sort of viewing this event, and how much of a significant impact could that have, Mark?
I think on the whole, investors are hoping that they really don't have to respond to this at all, because they know that even if there's a decision from the court, that President Trump and the White House will probably respond with something else very quickly afterwards and just make it even more confusing than it already is. The bottom line is that the tariffs have helped to reduce the US trade deficit to some extent. US still runs a very big deficit with the rest of the world, but it's not quite as bad as it was a year ago. Now, if there's a decision that those tariffs have to be reversed, people have to be paid back money, and there are no more, that situation has to be stopped for the foreseeable future. Obviously, it could lead to a wider deficit in the next few months, and that will have a direct impact on the Treasury market. Part of the reason why Treasury yields have managed to stay relatively subdued is because people think that there's going to be some benefit from tariffs on an ongoing basis. You take that away, yields have to go up, especially at the long end of the curve. We will see curves steepening without the promise of tariffs down the road. But a lot of this is speculation, how the wording comes out, whether it can be enacted straight away, whether there's delays. There's too many imponderables. Traders will prefer not to deal with it. If they have to, they will probably sell long end of the Treasury curve.
Well, thank you very much, Mark Cranfield. Bloomberg's Mark Cranfield there. You can see the entirety of the Treasury curve. The yields higher this morning ahead of that decision, potential decision, we should say, from the Supreme Court. Still ahead, we'll talk to Andrew Puzder. He is the U.S. ambassador to the EU about the transatlantic relationship after it's been dealt a series of blows. More on the path forward after the so-called Greenland moment. That conversation coming up at 6:45 a.m. UK time. But first, Netflix promises more films in cinemas as it competes with Paramount to buy Warner Brothers. That's next, and this is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back to Bloomberg Daybreak Europe. Netflix co-CEO Ted Sarandos says that the company's planned acquisition of Warner Brothers Discovery will lead to more films in theaters, addressing a key complaint from Hollywood. Netflix has promised to keep Warner Brothers films exclusively in theaters for 45 days, but Sarandos says that it isn't interested in putting that commitment in writing. He spoke to our very own Ed Ludlow and Lucas Shaw.
This deal is not complicated at all. It is $27.75 at plus the value of Discovery Global. By the way, it's the deal that they want. It is the deal that they asked for. These are the assets that were for sale. So the more complex thing is buying the whole company. When you do that, then you're buying these European sports networks. As you know, sports rights in Europe are incredibly highly regulated, as is the television landscape, which they'd be stepping themselves into. So I would argue that our deal is quite simple: $27.75 per share plus the value of Discovery Global. And which I think is an incredible asset, and they do too. That's why that they set the offer up this way. That's why when we were bidding, we bid for the assets that were for sale.
If Discovery Global is a great asset, I'm just wondering, have you guys talked about just buying the whole company and doing the spin yourself?
No, as you know, the linear broadcast business is not something that we're interested in, but others are. And I think when I look at the business, particularly those European networks are not in decline the way that some of the way they are in the U.S. So it is not of our interest, but it's I'm sure of interest of many buyers.
Ted, you are competing in a politically sensitive media deal. There is reporting and we are in a time where the Ellisons and their relationship to the Trump administration has been discussed. It's also reported, of course, that you met with the president, I think, on November 24th. How are you weighing that and assessing that in this scenario, that relationship between Paramount's leadership and this administration?
Look, I have spoken to the president about the state of the entertainment industry. We've had multiple conversations about how do we protect American jobs? How do we keep the entertainment industry healthy? What are those headwinds? What are those things that we're working on to try to keep production up in the United States? We are investing $1 billion into a new state-of-the-art production facility at the old Fort Monmouth military base in New Jersey. Obviously, the president is very keenly interested in entertainment, and he's very interested in American industry and American jobs. So those are the conversations that we've had. I don't know why the Ellisons intimate that they have some direct line to the Department of Justice for faster path of clearance, but I doubt that they do. This is a process that is being run by the Department of Justice. The president has been very clear on that. We've been very clear on that. The Department of Justice published in 2023 the guidelines for mergers that they are following right now. So that's what's happening here. This is a business deal, not a political deal.
So the co-CEO of Netflix there, Ted Sarandos. Now to some corporate news we're watching this morning. Blue Owl shares plunged in New York after the alternative investment firm says it will restrict withdrawals from one of its retail-focused private credit funds. The company says the fund will instead return capital through periodic distributions funded by loan repayments, asset sales, and other transactions. The move highlights the risk confronting retail investors entering into the fast-growing private credit market. The Financial Times reports NVIDIA is close to finalizing a $30 billion deal investment that would replace the long-term $100 billion commitment agreed on last year. The investment is part of a funding round that will value OpenAI at $730 billion. Coming up, as Anglo American prepares to report, we'll discuss how copper is fueling deal-making across and growth in the mining sector. That's next, and this is Bloomberg.
up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
An Anglo American will be the latest mining giant to report later this morning in what's been a highly active time for the sector. Copper has been the star of the show this earnings season. Let's bring in Bloomberg's metals and mining reporter Paul Allen Hunt. Starting with Anglo American, what are we expecting after such a busy start to 2026? And we should say an intensely busy end to 2025.
Absolutely. Indeed. Anglo American is coming pretty shortly. We're expecting a consensus net loss of 350 million, revenue of about 20 billion, 19.82. An adjusted profit of 710 million. There are lots of things that we're watching out for with Anglo. Of course, it was only a couple of years ago that BHP really had a crack at acquiring Anglo American. Of course, that didn't come through, and instead Anglo American is now pursuing a merger with fellow copper heavyweight Teck Resources. Anglo has flagged that there may be another write-down to its illustrious diamond business De Beers. That has been struggling in the current diamond market. We're also expecting updates on the coal business, which is another asset, along with the De Beers business, that Anglo is trying to sell. It decided to sell those assets after BHP made its approach to try and simplify its business and find some returns for shareholders. So that effort to restructure, to simplify, that's what we're looking for today ahead of its merger with Teck Resources. We're also expecting Anglo to benefit quite highly from the increase in copper prices that we saw over that second half there. Quellaveco and Collahuasi are the big copper mines, so it's likely to see some benefit from high copper prices.
Yeah, and talk to us a little bit about how those copper prices have been building the conversation around M&A in the mining sector very quickly.
Yeah, so mining businesses have all been trying to increase their exposure to copper. We've seen a lot of talk of M&A. BHP had its crack at Anglo. Anglo's now merging with Teck. Just earlier this year, we saw Rio Tinto and Glencore undertaking these mammoth takeover discussions, but little has actually come to fruit so far. Copper prices went from about $8,200 a tonne at the start of last year. They crept up to 10 grand a tonne, and now they're 13 grand. The overall outlook for the metal that is key to electrification is soaring demand in the decades to come. Everybody's trying to get exposure.
Well, Bloomberg's metals and mining reporter Paul Allen Hunt, thank you very much for that. In a space we'll be watching very closely as we go further into 2026. And we'll be speaking to the CEO of Anglo American. That will be at 8:15 UK time on the Bloomberg opening trade. Coming up, we'll speak to Jane Foley, head of FX strategy at Rabobank, on where the U.S. dollar is heading. That's next. And this is Bloomberg.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. Deal deadline. President Trump warns Tehran they have 15 days to reach a deal. This as the U.S. military amasses even more forces in the Middle East. Asian stocks fall as oil hits a 6-month high, walking a tightrope between war and peace. Plus, investors brace for U.S. PCE inflation, U.S. GDP, and a potential Supreme Court ruling that could strike at the heart of Trump's tariff policy. With all of that in mind, let's take a look at the markets this morning as we shape up going into the session here in Europe. Eurostoxx 50 up almost 0.5% this morning, taking back, I should say, some of the losses that we got yesterday across the European equity space. U.S. dollar index getting a little bit of a bid this morning. 11.91 is what we're trading going into those tensions around the Middle East. And of course, Brent up almost a full percent this morning, breaking through that $72 a barrel, watching very closely as we appraise the situation in the Middle East and that military buildup with that deadline of 10 to 15 days set out by the President of the United States. Time now for your front page news, starting with the Wall Street Journal, which leads with Trump weighing an initial limited strike force to meet his demands for the Iran nuclear deal. We're also watching at The Guardian. King Charles says the law must take its course after the arrest of his brother Andrew on suspicion of misconduct in public office. And finally, in the Financial Times, its top headline, NVIDIA and OpenAI abandoning apparently that $100 billion deal in favor of a $30 billion investment as part of a massive new funding round for the AI startup. And you can get a roundup of all the stories you need to know to get your day started in today's edition of Daybreak. Terminal subscribers go to DAYB Go on the terminal. We are getting earnings now out of Danone. The fourth quarter like-for-like sales up 4.7% for an estimate of 4.4%. So that is a slight beat in terms of what we're seeing from Danone. This is a company that we've been watching very closely, in addition to Nestle, still dealing with some of the fallout from the baby formula issues that they have had. So that's something that is probably going to overshadow a number of, overshadow the earnings that we're getting in terms of the actual numbers, and waiting for commentary from Danone and as well as Nestle, which we got yesterday. Now, oil is trading next to near a 6-month high after President Trump issued Iran a 15-day deadline to reach a deal over its nuclear program. To increase pressure on Tehran, the U.S. military has amassed a vast array of forces in the Middle East, their biggest deployment since 2003 in the wake of 9/11. Let's bring in Paul Wallace, Bloomberg's managing editor for MENA. What kind of impact would a sustained campaign have on the region and oil prices? Obviously, we've been talking about this in the U.S. and Iranian lens, but there's a much broader conversation to have around the region.
Hi, Oliver. Yes, certainly. And I think it's fair to say that pretty much all governments in the region, or just about all of them, are nervous about what the U.S. might do. You could say Israel is a possible exception, that Israel seems to be the one that is most aligned with the idea of the U.S. going ahead with the strikes. But even in Israel's case, they're having to build up their defenses to protect against possible Iranian retaliation against the country. For the rest of the region, the likes of Saudi Arabia, the UAE, they do fear that U.S. bases on their territory could become targets, and maybe even their oil assets. A lot of it depends just what the Americans do. If Trump decides to go for strikes, but decides to sort of make it a very short campaign that isn't about regime change, and he signals that to the Iranians quickly, then their retaliation might not be super aggressive. But if the Americans make it clear that it's going to be a long campaign and essentially they want to overthrow the Iranian government and the supreme leader, then I think, in that situation, Iran could be very, very aggressive and hit out at, oil assets in the region, U.S. assets in the region, and Israel too.
Well, Paul Wallace, Bloomberg's managing editor for MENA Economy and Government, thank you so much this morning. And amid that geopolitical environment, the dollar is poised for its best week since October as traders pare back expectations for Fed rate cuts. Here to discuss, I'm joined by Rabobank's head of FX strategy, Jane Foley. Jane, where should we start here? Let's begin with the dollar, talking about basically what's in the driver's seat here. In the short term, is it just a conversation about the geopolitics in Iran?
You know what? There's a lot of different layers when you look through what's driving the dollar, but I do think we do have to look at the safe haven aspect here, because for the last year or so, the market's been questioning, has the dollar lost its safe haven appeal? And yet, when we have the market positioning itself for potentially some sort of conflict in the Middle East, potentially this weekend, where we do see the dollar performing better. Now, the market is, of course, short the dollars, and that will news of this type is likely to trigger some, sort of short covering. However, when we talk about what comprises a safe haven, has the dollar still got its safe haven bid? Although that's a complex question, for some investors, it's going to be really quite simple. And US Treasuries, US dollar have liquidity. They have lots of liquidity. You can't replace that. There's no other assets in the market that can really do that job. And then I think there is a little bit of safe haven play coming through into the dollar this week, probably helped by those Fed minutes earlier in the week, which suggested they weren't perhaps as dovish as many people had anticipated. And of course, that brings us to a little bit of nervousness ahead of this afternoon's data.
And so what are you looking for in terms of that data a little bit later? So there's obviously this sort of short-term, as you say, haven play for the dollar, but there's also this question about the sort of inflation narrative in the United States maybe not being as one-directional as we think it may be.
Well, that's right. And I think what's interesting about this right now is that we could be talking about a number of other G10 economies. In Australia, for instance, where they thought, or the market thought at the end of last year, they could be cutting further this year, and yet they've already hiked interest rates. Norway, more recently, of course, it's the same sort of pattern. And, we're beginning to wonder, well, where is this sticky inflation coming from? How long is it going to prevail? Is this a similar story in the US? Will the Fed, really be able to cut interest rates? And actually, should we be worried about this right now, because we're going to soon potentially get a different Fed chair, and does that sort of move the chairs around as well? So a lot going on, but certainly the market is and should be a little bit more cautious about the fact that there are members within the FOMC that do or are concerned about the fact that inflation is still above the Fed's target.
And I want to talk also about the geopolitics, not just in the immediate term for the question of Iran and what could be happening there, but more broadly speaking in terms of the sort of quiet rearrangement we're seeing in the FX market around broader geopolitics, and particularly when it concerns the dollar and the euro. We've heard a lot from European finance ministers saying that they want to try to fill some of the space that is potentially being vacated by the dollar. How realistic do you think that is? And does that invariably lead to a sort of stronger euro policy, even if by accident?
Well, I mean, we can see the reasons why, say, the Europeans want more autonomy, and that autonomy is not just in defence, but of course it's in supply chains, it's also in payment system. We've been seeing that news this week. And, we can look at China and think, well, they want more autonomy too. In fact, we can see this in a number of different regions around the world. And this is, of course, the theme of de-dollarization. But if we look back over the last 25 years, yes, that theme is there, but it's easier said than done. It's pretty difficult to move supply chains away from the dollar, away from US payment systems. Yes, there will be a push to do that, but it's tough. It's going to be slow. And at the same time, of course, we've got the theme of dollarization coming through, the US Treasury pushing back on that. And actually, in regions such as Africa, for instance, the use of dollar-based stablecoins really meaning that dollarization is also an issue going on. So I don't think we're going to see much reaction to either of these forces in the spot price for a while, but these are big picture themes which are very relevant to the FX market.
And I want to ask you also on some of the stories we've seen over the last couple of days of the potential of a sort of resignation by Lagarde a little bit earlier to get somebody else in the central bank. We should say that she gave an interview to the Wall Street Journal saying that she was hoping to actually finish her term. So we'll see how that develops. But on this question, we've been talking so much about the Fed's independence and this idea of politicizing the Fed. Is there a risk of the politicizing of the ECB as well if we were talking about a sort of head of the ECB stepping out in order to basically put somebody in that wouldn't be influenced by, say, a far-right government within a European country, say France?
Well, exactly. I think the French presidential election will bring some answers to that. We have had some indications from the French far right that we may have a different point of view, certainly in terms of what the ECB's function should be. We have had indications that they may want to enliven again quantitative easing, which would not necessarily go down pretty well. But, you know, from our ECB watchers' point of view, this isn't just about the French presidential election and who might be the next head of the ECB. This is about the other chairs, the other seats that will become available over the next year or so. And for instance, are they going to be replaced by more hawkish members or not? So actually, I think 2027 is going to be a pretty interesting year for the ECB.
Well, Rabobank FX strategy head Jane Foley, thank you very much for your time this morning. Coming up, we'll talk to the U.S. ambassador to the EU about the future of the transatlantic relationship and where we stand after the so-called Greenland moment. That is next, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Well, from Iran to China to the transatlantic relationship, it has been an intense year for U.S. foreign policy. Tensions between Europe and the United States reached their high point last month during the so-called Greenland moment, when the Trump administration indicated the U.S. might use military force to take Greenland before stepping back from that in that speech in Davos. The man who dealt with much of the fallout of that, no doubt, joins us now. He is Andrew Puzder. He is the U.S. ambassador to the EU. Ambassador, thank you so much for joining us from Brussels this morning. We had this sort of Greenland moment. Many in Europe felt that this was a fundamental loss of trust, that something had been broken fundamentally. How do you appraise the U.S.-EU relationship? And tell us about the kinds of conversations you've been having basically over those 6 weeks.
Well, I think it's improved a lot since Davos. You know, we're working together on a critical minerals deal, which both the Europeans and the Americans recognize is essential. If we're going to go forward with an AI economy, we need to work together on that. We've got the trade deal coming up in front of the Parliament the week of March 9th in Strasbourg, and we're very hopeful that that's going to get passed and we can move on with the trade deal, which is so important to transatlantic prosperity, both in the United States and in Europe. And the Denmark, Greenland, and the United States are now negotiating a solution to what happened in Greenland. I think everybody's happy about that. I think people are ready to move on and ready to focus more on things that are going to have a material economic benefit going forward.
And I know that's something that you've been very focused on, whether it's on the trade deals, also this conversation now accelerating around rare earths. How do you see that evolving in terms of a point of overlap between the EU and the United States and trying to get sort of secure lines for those rare earth metals, particularly in the context of China? Is that something that you see progress being made on, and can you sort of elaborate on that progress?
Yeah, I think they made very, very significant progress at the Secretary of State held a ministerial in Washington, D.C. about a week ago. The European Union Commissioner Séjourné attended and made very, very complimentary remarks. The Secretary of State likewise made very complimentary remarks. All of the countries that were there realized that the West is going to be at a severe disadvantage if it doesn't have access to the processing and mining of these critical minerals on its own, where it has to be dependent on China. That's a huge supply chain risk. Everybody agrees on that. Now we need to come up with the agreements that'll solve that problem. And I have every confidence that the Secretary of State and our U.S. Trade Rep, Ambassador Greer, will be able to do that in the short run.
And also thinking about the trading relationship, there has been a few clauses added to the sort of European side of that, including the sunset clause for March of 2028. Do you think that that is a sort of an appropriate measure for the Europeans to have within their trade agreement with the United States, or do you anticipate that causing some problems?
Well, there were 5 amendments that were appended to the trade agreement in the committee draft in the EU Parliament. And the EU Parliament as a whole will vote on that committee draft the week of the 9th, and then it will go to a trilogue proceeding, or what we would, in the United States, we have a different name for that process, but it basically is where the European Council and the European Parliament come together. We call it reconciliation, they call it trilogue. And before I comment, I'd like to see what comes out of the trilogue, because I'm not sure which of those amendments will survive and which will be removed. Could be that they all come through, could be that they're all eliminated. We'll have to wait and see.
And I suspect many of your conversations on trade have been centered around the idea of steel and aluminum tariffs, still about those 50% tariffs, and also on the derivatives, something the Europeans have made no secret about wanting to dissolve and to reduce. How are the conversations going on that? Is there progress being made? And how explicitly is a deal on steel and aluminum linked to less regulation in the tech sector for American companies?
Well, I think Europe and the United States both now have 50% tariffs on steel and aluminum to prevent the dumping of steel and aluminum below market prices by the Chinese. So there's a joint interest in protecting our mutual steel and aluminum manufacturing capacities. On the derivative products such as washing machines and motorcycles, other products that may have steel and aluminum in them. My understanding is that the U.S. Trade Representative, our Commerce Department, and the trade reps here in Europe are coming up with solutions to that. We also have to deal with the carbon border adjustment mechanism, which also, in effect, puts tariffs or taxes on those same products. So it's a negotiation that's ongoing, but everybody's optimistic. Everybody wants a trade deal done. Everybody says a deal is a deal, so we need to move forward with this. The United States has done what it committed to do under that deal. We understand the European Union has a process it has to go through. It's going through that process, and we are anxiously awaiting the conclusion of that process.
And another sort of question I have is also on the tech space, and this is a question potentially about free speech. We heard from Emmanuel Macron a little bit earlier in the week, using some pretty flowery language to describe the American position on that. But this is in specific around this idea of banning teenagers from social media. That is an initiative that is gaining a lot of traction around Europe. In your mind, is this separate from some of the other regulations that the Europeans impose? Is this something that is more about the welfare of children and adolescents in Europe rather than a free speech issue, or do you anticipate that this could generate some free speech conflict between the United States and Europe?
Yeah, I think people in the United States and people in Europe want to protect young adults or children from porn or other, grossly inappropriate content that may appear on various channels or various networks. The problem is determining whether or not that stated goal is actually something that's being used to suppress political speech, for example, or to suppress the speech of political parties that people might oppose or might not support, or to try and advance other interests under the guise of protecting children. But everybody wants to see children protected. The risk is that when you start imposing limits like this, that you go beyond the stated goal and try and achieve a political purpose, which we would not support.
And I also want to take you to some of the comments that we got from Secretary of State Marco Rubio around the Munich Security Conference. He sat down with Bloomberg and really sort of elaborated on how he sees the European and the American relationship. Have a listen.
The Vice President said last year very clearly was that Europe had made a series of decisions internally that were threatening to the alliance and ultimately to themselves, not because we hate Europe or we don't like Europeans, but because what is it that we fight for? What is it that binds us together? And ultimately, it's the fact that we are both heirs to the same civilization, and it's a great civilization, and it's one we should be proud of. It's one that's contributed extraordinarily to the world, and it's one, frankly, upon which America is built.
And Ambassador, I don't want to drag you too far into the sort of philosophical here, but I think there is a question that is arising between the United States and Europe about where those shared values are and where there is a limit to those shared values. Where, in your mind, do you think that the Americans and the Europeans still have those shared values, and where are they diverting in your mind?
Well, I think there's a number of issues that have come up over the past decade or so where we've got we've separated on how we approach issues. Now, immigration was one of them. The Europeans were handling it very differently than President Trump handled it when he took office. Now that's changing. The Europeans are making changes to their immigration system and coming more to the American model, closer to the American model. There's free speech issues in Europe. Europe views free speech differently than the United States does. We have our First Amendment. It's a very broad protection. We think that's important, but we particularly want to make sure that political speech is protected. You should be able to criticize politicians without any fear of repercussions, because that's the way people get ideas out. We think it's important to get ideas out. But I think for me, the primary divergence has been on economic issues, where the Europeans have pursued a decarbonization, more of a globalization type approach to these energy issues at a time when we're competing with China in an AI race, who's the first to get to artificial superintelligence. And we all need a maximum energy. We all need abundant energy, and that can include renewable energy. But we've got to put aside this almost religious tie to decarbonization, to destroying fossil fuel type energy production. We need to move forward from that so that we can meet the needs of an AI economy, while at the same time Europe reindustrializes. It's deindustrialized. We're at a point where Germany now has GDP per capita that's lower than the state of West Virginia in the United States, which is the 49th worst performing state, while Spain, France, Italy, and the EU generally are below, and the UK, I'll throw them in, are below the state of Mississippi, which is the 50th worst. Now there are a lot of different ways to measure GDP, but that just shouldn't be the case, and I think we need to see some fundamental changes.
Well, U.S. Ambassador to the EU, Andrew Puzder, thank you so much for your time today. An interesting conversation about the future of the transatlantic relationship. Now, elsewhere, President Trump said he is ordering the release of government documents relating to extraterrestrial life. He accused Barack Obama of giving away classified information during a recent podcast appearance. In an interview, the former president said that aliens are real, but added they're not being kept in Area 51. Plenty more coming up, and this is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Here's a look at what we're watching for the rest of the day. 7 a.m. UK retail sales, and looking a little bit later in the United States. So a ton of data out of the U.S. We're getting core PCE, we'll get GDP data, and of course watching very closely that potential ruling from the Supreme Court on tariffs that may govern the fate of some of the linchpin of the Trump economic policy on tariffs. We're also watching very closely the oil market. We've been watching Brent over the last couple of weeks as we see the United States sort of amassing more and more military hardware in the region. As you can see, we're at $72 a barrel on Brent. We're still some distance away from where we were back in June when those strikes in Iran happened last year, but something we're watching very, very closely. And talking about PCE and inflation more broadly, the inflation narrative at the Federal Reserve clouding a little bit over after those Fed minutes came out yesterday. As you can see, the estimate here for PCE in the month of December, we should say this data was fairly delayed, expected to go up very slightly. So be watched very closely by the market and, of course, by the Federal Reserve. And we're also getting U.S. GDP a little bit later today. We're expecting that GDP figure to come in at 2.8% quarter on quarter in a quarter in which we actually saw a net loss for non-farm payrolls, minus 51,000 in the fourth quarter. So what we have been seeing is growth expanding, but jobs cuts sort of cutting in, productivity boosting, i.e. what we've been calling the sort of jobless boom that's happening in the United States. We'll have much more throughout the morning. Of course, we still have a ton of earnings interview coming up. We'll be speaking to the CEO of Accor, the hotel chain out of France. The opening trade will be up next. We'll be speaking to a number of others, including the Anglo-American CEO at 8:15 UK time. The opening trade is next. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Good morning. It is Friday, February the 20th. Here's what's on the agenda. Oil at 6-month highs as Iran simmers. Private credit cracks, and it is a big day today in the US.
Absolutely, Tom. Let's take a look at these markets. Brent crude up by another 0.5%. We're trading at 72.02. What is interesting is that Brent is now moving away from WTI. Dubai is moving away from Brent. The story coming out of the oil market is of simmering concern about what is happening, what could happen this weekend with Iran. Euro Stoxx futures are actually higher this morning. We're up by around 0.5% going into a lot of data in the United States a little bit later. We've got plenty of earnings to factor in as well. But keep an eye on the dollar. Just getting a little bit of traction. 117.57. We are down on euro dollar. Pay attention to that. If the dollar starts to move a little higher, that's definitely a risk indicator as well. Plenty to discuss this morning. The countdown to the opening trade starts right now.
And we do have some work to do with Iran. They can't have a nuclear weapon. It's very simple. You can't have peace in the Middle East if they have a nuclear weapon.
President Trump also outlining a time frame when it comes to Iran. 10 to 15 days is what he has posited as a time frame to get a deal. There is not much evidence that Iran is moving to make a substantial deal within that time frame, but we'll see how that changes, Guy. This, as the military build-up continues, the reporting from the Wall Street Journal suggesting that President Trump and his team could be looking at a limited strike initially to put pressure on the regime in Iran. The pressure is certainly building.
I don't know anything about the geopolitics. Let's not go into the geopolitics. Let's talk about kind of what we are seeing in terms of how the market is positioning for this. The market clearly sees a risk. Oil prices are moving higher. That is a cause for concern. It is an inflationary story which the Fed is going to, and other central banks are going to have to pay attention to. Trump is putting enough kit into the Middle East that he could sustain a war for quite some time, and that maybe signals that this isn't going to be a kind of short one and done, similar story to what we saw with the last Iran strike. That is what the market is pricing in at the moment. If we were to see oil prices getting significantly more elevated from here, that has a really big impact on the inflationary story in the United States, which has been driven lower by gas prices of late. You take that out of the equation, you start to see a much stickier inflation story emerging in the States, one that potentially the Fed or it could change the Fed's outlook when it comes to the inflationary story. So I don't know. The geopolitics, Trump's timelines, I have no idea. Really hard to call. Last time they meant nothing. Will they mean something this time? All I know is there's a lot of kit there. You could see a big war. If you see a big war, you're going to see higher oil prices. Iran's got its back against the wall. It could hit oil infrastructure. That's the risk.
Iran produces about 3 million barrels per day. Most of that goes to China. So China's response to this, given the cut-off of oil from Venezuela, is going to be really interesting. It's the Strait of Hormuz. 25% of maritime oil travel goes through the Strait of Hormuz. Will it have to be redirected around the Cape of Good Hope? And what that mean for costs and for time frames?
Well, you have to get it. You can't. You have to get it out. Saudi can send some oil across and take it out through the Red Sea, but that generates a problem as well in terms of what's happening there with the Houthis. You've got to get oil through the choke points of the Straits of Hormuz. That's the risk. And that impacts Saudi crude, that impacts Qatar gas, that impacts Kuwaiti oil, that impacts UAE to a certain extent. That's where the risk lies. That's why the risk premium is being built up. Brent is now trading over TI. Dubai's trading over Brent. That tells you that the market is indicating that it is concerned about what is happening here.
There are other concerns in the markets when it comes to private credit, and this was a big focus in the US yesterday then, Guy. Blue Owl Capital in the midst, so under pressure.
Yep.
And a number of other competitors as well, the likes of Blackstone and Apollo, all seeing their stocks dropping on the back of this story about capping withdrawals from one of their funds, and importantly, a fund that retail investors can get exposed to.
So there's a number of different angles on this. Firstly, yes, you saw Blue Owl stock down at 1.10%. I think it closed down circa 6%. So there was pressure on the stock of these kinds of companies. These are the companies that have been marketing their BCDs, business development funds, basically, to retail investors, like reasonably sophisticated retail investors, but still retail investors. And they saw a big redemption call late last year. They've therefore sold some assets to 4 funds, one of which is their own, in order to provide liquidity for ongoing returns of money. About a third of the fund will go back to investors. And then the cadence will basically be, they're going to kind of wind this thing up effectively, that they are going to return money to shareholders. There was a story yesterday about kind of gating these funds. They've pushed back on that quite hard. But the bigger picture here is two things. One of which is you've got this illiquidity sort of duration mismatch between short-term retail desire for money to come back quickly and these funds effectively being semi-liquid. So you've got that kind of issue, which is one that we've been talking about for a while. The other one is that you're getting this increasingly strong relationship between private credit funds and insurance businesses. And that 2 areas of the market that regulators really struggle to get a line of sight on in terms of where risk lies. And that's going to cause a lot of headaches at places like the Bank of England and the Fed and other central banks around the world.
And really interestingly, the private credit space, one of the big sells was we don't have the problems around mismatching. And now with that retail component, it seems it's becoming a challenge.
I never understood that, to be honest.
Well, I also wonder how it ties into the data center funding story as well. We had original reporting originally that from Meta was tying up with Blue Owl Capital as one of its backers of a big infrastructure story in the US. So to what extent does this connect into the data center story and funding around CapEx and AI as well? Something to watch. Interestingly, at the time when Bank of America comes out and says it's going to be committing $25 billion to private credit deals, so joining the likes of JP Morgan on that front.
But it just has that deeper, it's just bigger, and therefore relative in terms of the size of the fund, it's a completely different kind of order of magnitude. Let's talk about the data we're going to get out of the United States. We're going to get DEC data, December data on PCE a little bit later on out of the United States. We're going to get GDP data as well. People are watching the inflation story very, very carefully. CPI came in okay. One of the reasons why CPI came in okay a few days back was because of the gasoline component, which is now changing quite dramatically. So you're going to get PCE data a little bit later on today. Sort of tips auction yesterday that actually went really well in the States. It was a 30-year, and basically that's signalling we'd like some inflation protection. That's what the market is signalling by basically accessing that auction as strongly as it did. So the market's clearly worried about this inflation narrative.
So this is delayed PCE data for December. Core is, to your point, is expected to come at 2.9%, so slightly higher than the previous month of 2.8%. To what extent are we getting inflation in the US anchored now closer to 3% than the 2% Fed target? Really interesting, I thought, and you kind of pushed back on this in the editorial meeting, but Stephen Myron, of course, who's taking that very dovish stance, saying that he is actually rethinking how far cuts can go in 2026, sounding moderately less dovish.
The guy's got to look at the data and just go, this is an economy that is very strong right now and clearly has an inflation issue, and the labour market looks like it's stable. Did you see claims yesterday? Claims were really strong yesterday. So he's obviously looking at the data. He's still calling for a lot of rate cuts. But the market's backing away from that rate cut idea. We've still got 2 price, but more and more people I'm listening to are telling me that it's going to be 0 to 1, maybe, in terms of the rate cut story this year. But rate hikes are now being discussed as well. And you just wonder whether the curve is going to flatten up like Australia has seen, as we start to see the central bank maybe turning potentially more hawkish. Are we heading back towards a 5% US 10-year? That's another conversation I'm beginning to hear a lot more about.
Briefly worth mentioning, the Supreme Court will be holding a decision today. That could be around tariffs. We do not have confirmation of that, but they are having that they will be gathering and having a decision, the Supreme Court today, and it's possible that tariffs are part of. And that debate around tariffs and the impact on inflation is continuing to be pretty heated in the US amongst officials. We go back to the earnings story.
We've got a lot of corporate earnings still coming
miners.
through. It's been a big week for it. We continue that today. Anglo's out with its numbers right now. Starting at the sort of the key numbers in terms of what we are seeing, the full year adjusted EBITDA coming through at 6.4, the estimates for 6.34. So pretty much in line with the estimates in terms of what we are seeing there. The key things, the two kind of key questions around what we are seeing with Anglo right now is what is happening with De Beers, which the business is trying to sell, which is the diamond business. The diamond business at the moment sucks. It's horrible. It's really difficult to sell diamonds, which I find amazing. Please don't tell my wife. Anglo American taking a pre-tax impairment charge of 2.3 on De Beers. It's trying to sell that business. The other thing is the coal business, which is really interesting right now. We'll come back to that a little bit later.
Yeah, it's the lab-grown diamond push in terms of the competitive squeeze and a lack of demand in China, it seems, not just in the Johnson household for diamonds.
No, I think there's strong demand.
Oh, there is strong
Johnson
demand in the Johnson household. Okay, so that's a counter to that. Now, the CEO, Duncan Wanblad, will be on this programme, the CEO of Anglo, of course, at 8:15 a.m. London time, so stay tuned for that conversation.
We've got plenty of earnings conversations still to come on this programme. Sébastien Bazin, the CEO of Accor, is going to be joining us. Yesterday, Ben Smith of Air France was on the show talking about strong demand at the front of the plane. Are we going to see a similar story from Sébastien? We'll find out in just a moment. We're going to talk markets with Chris Watling. Longview Economics is going to be joining us. Maria Weitmana is going to be joining us from State Street. Is she still long tech? We're going to find out. And Catherine Nice from PGIM, fixed income, will talk to us about the European PMI data and, I suspect, the future of Christine Lagarde.
OK, talking of data, 9 a.m. UK time. We're going to get Euro area, followed by UK PMIs. That's at 9:30. We do get US PCE then, that gauge of inflation, as we've been discussing. Also GDP data due at 1:30 p.m. UK time. Plus, we will be getting US PMIs at 2:45 p.m. At 3 p.m. UK, we're going to be watching the Supreme Court then as they mull the future of Trump's tariff campaign. And later, Fed speak from Laurie Logan as well.
OK. Busy day coming up. We're nearly at the weekend. And the curling, which is going to happen a little bit later on. What else do you need to know? This morning, President Trump says he is ordering the release of government documents that, get this, discuss extraterrestrial life. We're talking aliens here. This after he accused Barack Obama of giving away classified information on the matter during a recent podcast appearance. In the interview, the former president said aliens are, quote, real, but added they're not being kept at Area 51. Andrew Mountbatten-Windsor, former prince and brother of the UK's King Charles, has been released under investigation after being arrested on suspicion of misconduct in public office. The arrest came after further details emerged of his relationship with the convicted sex offender Jeffrey Epstein. Mountbatten-Windsor has consistently denied any wrongdoing. King Charles issued a statement outlining his, quote, deepest concern about the matter and promised Buckingham Palace's, quote, full and wholehearted support and cooperation with the investigating authorities. And we mentioned it just a moment ago. Christine Lagarde has told the Wall Street Journal she expects completing her mission as president of the European Central Bank will take her to the end of her current term. This after a recent report suggested Lagarde will resign early to allow the current French government, i.e. Emmanuel Macron, to pick her successor before next year's French presidential elections. So what do you want to chat? Do you want to chat aliens? Do you want to chat Andrew? Or should we chat Lagarde?
Let's steer clear of Andrew.
Yes.
Aliens is tempting. Our producer putting out, Dan Curtis, pointing out the polymarket alien odds. Betting odds are about the same that the Supreme Court upholds tariffs, 25%, as US confirming aliens at 22%. Christine Lagarde says she's going to be staying in the post. At least that's her baseline.
Yes. So that was the line that stood out. That's her baseline. There are other possible outcomes here. 27 is the presidential election in France. We've already seen the Bank of France governor stepping down early so that the current government can position somebody new in that seat that will be there for a long period of time, and therefore whoever is the next French president will not be able to mess with that. The French system, it feels like it's sort of rallying round. You do wonder kind of whether or not there is a danger that we see maybe a little bit of credibility being undermined at the ECB if she were to go early. And this is an institution that has spent a long time trying to build up that credibility. And if you see politics slightly imposing itself on that, French politics in particular, does that undermine the credibility?
Which would be
of
the
ECB?
irony, because shoring up credibility and institutional independence seems to be part of the rationale for maybe making these moves ahead of any potential right-wing government in France.
Yeah.
Coming up, Donald Trump says he's talking about aliens. He's also talking about affordability. He says he has won affordability, but what will the numbers say? We're going to look ahead to the PCE data due later. Plus, Nvidia said to scrap its $100 billion long-term investment plan in OpenAI. They are investing $30 billion, though. We'll get more on the details ahead. Up next, we discuss the recovery in luxury travel with the CEO of French hotel giant Accor. If you have any questions of your own for our guests, send them to us on IB plus BBTV Go. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Well, it's been pretty consistent for the last, I'd say, 3-4 years, and we have not seen, despite recent, recent press on, change in people's travel patterns. We have not witnessed that ourselves at France KLM. Point of sale US and point of sale Europe as well. In particular, premium, as I just mentioned, quite strong. We're not seeing anything in the near term that causes us any worry.
Ben Smith, the CEO of Air France KLM, joining us yesterday talking about what he's seeing, particularly on the transatlantic routes, where he is seeing very strong demand. In particular, though, Ben's talking about the demand that he's seeing at the premium end of the plane, the front of the plane, basically. And that is where the very strong demand currently lies right now. A little softer at the back of the plane. Look at what Air France did yesterday. Its stock was up by 12%. Let's call it circa 12% at the end of the session on that demand story. In some ways, it's a very similar story over at Accor, the hotel company, where the high-end stays basically boosting the bottom line quite nicely. Yesterday, the company reported revenue for the full year that certainly met analyst estimates. Very strong Q4 RevPAR. What is RevPAR? Revenue per available room, particularly boosted by the by the upper end of the hotel story. The company's CEO is Sébastien Bazin. He is joining us around the table. Good morning.
Good morning. How are you?
I'm very well. How are you? How's the company?
This company is doing super well.
Yeah?
Yep.
Ben's talking about the front of the plane being strong.
He's right.
Yeah. And you see that in the same...
Anything which is luxury or kind of actually upper premium actually grows 3 times faster than the eco mid-scale. And what's so extraordinary about it is, I guess, the luxury clientele called us and they ask for the best room. Give me the best suite. They never, ever ask about the price.
Right.
So and what we regret today, we don't have enough great suites.
Right. So it's like having enough first-class suites. These guys, they have enough first-class seats. Precisely. You don't have Okay.
And it's been the case for the last couple of years, by the way. It's not kind of actually the last 6 months.
So it's sustainable. This is not. You're not seeing any wobbles in this story. There's no change.
The price of a luxury hotel, if you compare to pre-COVID 2019, times 3.
Right.
So you have like $1,000 average room rate in Paris. People pay today $3,000.
So what does it mean? You don't have enough of these suites. What does it mean in terms of acquisitions? What does it mean in terms of what are you doing to try and meet that demand?
Just go fast to the luxury segment. Go fast to where the money is, which is the US travelers coming to Paris. Go where they spend the money. Go fast to Cannes, to Nice, to Greece, to Dubai, to Abu Dhabi. Reshift your thinking.
Yeah.
You have to cater for them.
What are you doing with the mid portion then?
Cash flow. That permits me to take risk. So the eco mid-scale is my cash cow. But if I want to grow faster, if I want to get a better margin, then you go to the upper luxury segment, which is what we've done 7 years ago. We reshifted Accor entirely from being kind of actually a big giant in eco mid-scale to be today a real player in luxury.
Is it just the Americans?
No, it's coming from South America, it's coming from Asia, it's coming from all over the world.
If we see a weaker dollar, does it...
Doesn't change anything.
Doesn't change anything?
Did not change anything last summer.
Do you think... At some point, do you think it will? Is there a lag? People make plans a year in advance. So you make a year in advance, then the dollar weakens, and you still go because you've already booked the holiday. Is there a lagged effect in that?
I think it does, depending your wealth. If you are kind of actually a $20 to $30 million man, I guess, in terms of wealth, yes, you're going to pay attention to this. If you're above $500 million, you don't give a damn.
Okay.
That's what it is.
What's happening with travel into the US from Europe? Are you seeing evidence that there's that reluctance?
Still as slow as it was last year. People wish, if they want to go to America, they wish it from the US, they go to Canada, they go to Mexico.
That hasn't changed?
It hasn't changed at all.
There's still a reluctance from European travellers?
Well, there's a reluctance and there's a fear of kind of actually being stopped at the custom officers, looking at your phone. So it's a bit... I've been going to America every 4 weeks. They never actually touch my phone. They never ask me anything. So I think there's example of people suffering, but those are super anecdotic.
Do you think that continues?
In terms of fear?
That concern, that fear, that reluctance?
No, I think that should be moving away because that's not actually real. Well, this year, I hope for the summer. I need people to go back to America.
How big? Because you're talking about the World Cup, right?
World Cup's going to be extraordinary. As it is, anytime you have a sport event, you have sport bashing before, as we've done with the French Olympics, the Italian Olympics. Yeah. And when it starts, it's gorgeous. So you're going to have a great summer.
So how are you gearing up for the World Cup, and what is it going to mean for pricing? What kind of demand are you looking at?
We're looking probably 50% up versus last year on a similar year. So it's going to be significant, except I cannot actually add more rooms. So it's going to be great on pricing. Okay. But I guess...
Is there a danger that high pricing puts people off at some point?
Not really.
No, okay.
For the Olympics, that's not.
America's one story. What's happening in Europe? What's happening in Asia? To start with Europe.
Europe is back. And in terms of back, we have to be super careful. Europe was actually negative 1% last year, but it was back 3% up in the fourth quarter of last year. So you see a shift in Germany, in France, and in England, which I did not expect. So you're going from -3 to +1.
Why is that happening?
I think people have a lot of savings, and people are saying they're going to enjoy a little bit of it, they're going to spend it, and you have a big shift between ownership and experiences. People spend less on buying things, spend more on enjoying themselves. Entertainment, art, music, travel. So there's a bit of this.
Is that shorter-term trips?
I don't know. I hope it's not.
Okay.
But I guess what we've seen in January is continuing what we've seen in November, December. And that's a blessing. And it continues in half of February. So it looks like being promising for the next 3 or 4 months ahead.
So Europe is back.
Well, Europe is back again, from -3 to +1.
Yes.
We are +7 in the Middle East and +8 in Asia Pacific. So it's gradually back.
You talk about Asia Pacific. Is China back? And
China's back.
China's back.
China is back. So we're back in positive territories.
And that continues. What does positive look like? What does the picture in China look like
go
by the
from
end of this year?
-12 first semester last year,
-12,
-5 second semester. It was almost 0 in December. Now +2, +3. Plus we have Chinese New Year now, which is actually packing. But it should be probably between 2 and 3% this year. What's so noticeable, China is back in terms of emitting market. 160 million Chinese left China last year, which is better than 2019. So they're back in Korea, Japan, Australia, Southeast Asia, which is great for me because we have the best hotel network outside of China.
Is India going to be bigger than China?
Yes. India will be bigger than China in probably 15 years.
Right.
They need to build up the infrastructure. Infrastructure doesn't exist in terms of hotel. The 5 largest group in India have 5,000 hotels together. The same 5 in China, they have 35,000 hotels together.
Right.
So, but it's...
so who's going to drive the demand in India?
The local.
Right, so that's a domestic market.
It's a 6.5% GDP economy for the last 6 years, probably going to be 6 to 7% the next 2 years. It's booming. We need to play. And we're playing with Indigo Airline, which is the largest airline in India, and we teamed up with them. So we have 78 hotels being done in 25 years. We should have 3,000 hotels in 20 years.
The number, Peter Elbers at Indigo shifts. The numbers of people and the expansion that's happening there is extraordinary.
There's the AI Impact Summit happening right now in New Delhi. Is your business, physical assets, experiences, is it immune from AI disruption?
Not at all. It's going to be very much impacted on before and after the stay. So all that customer relationship is going to be probably shifting hands. From me, maybe to an AI tool. I need to be playing with ChatGPT, which we are. We've announced a couple of weeks ago the biggest ever partnership being done by a hotel company with ChatGPT was Accor. We're testing the advertising that AI agent on travel concierge.
And you reduce hiring as a result of that?
Well, not yet. That's going to have a major impact.
That comes, does it?
That will come. But at the same time...
By how much?
Well, we don't know. Probably by 15 to 20%. Anything which is repetitive, automation, HR, legal, tax, revenue management is going to be replaced by AI. So I need to basically, not being in denial, but train my people to do something else within the hotel.
But there's a 15 to 20% reduction in headcount, potentially.
Likely in the next 18 months to 2 years. It's going to come very fast. But that's going to be lesser cost for the owner and lesser cost for me. But I need to take care of those people.
Just very quickly, what does it mean for the OTCs, the online travel agents?
They need to worry, but they're playing the game as well. So don't you worry. Whether it's Booking, Expedia, and us, we're all adapting to AI. The only thing we have to do is just think that, I guess, be there early. Because if you wait, you're going to be damn late. It's going to cost you a fortune.
So you've got to invest. You've got to take the risk.
You're going to invest, but you need to talk to each of them. Because you don't know who's going to be the winner between Gemini and OpenAI. You don't know. Okay. So play them all.
Fascinating conversation. Sebastian, thank you very much indeed. Sebastian Bazat, CEO of Accor. Coming up, Chris Watling from Longview Economics on why the dollar is heading for its best week in months. That is next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back. Friday morning, 30 minutes to go until the opening trade. US futures are positive, European futures are positive. US futures, S&P up by around 0.3%, Euro Stoxx 50 up by 0.4%. So we'll take that as a win.
Let's check in on the bond markets. Not a huge amount of activity right now across the sovereign debt of the Eurozone. Treasuries largely unchanged as well. German 10 years currently yielding 273, OATs 330. And BTPs over in Italy, 334, as we continue to monitor the developments around Christine Lagarde commenting to the Wall Street Journal that she continues to see the base case as fulfilling her 8-year term.
Yes. I'm not going anywhere, despite what's happening in French politics. We'll see whether that turns out to be the case. Oil moving higher this morning once again. President Trump saying Iran has 10 to 15 days at most to reach a deal over its nuclear program. And the US is assembling an array of forces in the Middle East that could certainly do some damage. Let's bring in Anthony Japala, our Middle East energy markets reporter. How much risk is now priced in? Like we're at, 72 Brent? Is that enough to price in the risk, or do you think there's more to come?
Yeah, good morning, Guy. We started this in the low 60s, and a lot of the analysts that we were talking to in the market were saying that there's anywhere from $3 to $10 of potential risk premium due to the threat of a conflict against Iran. So we are kind of at the top of that range now of that risk assessment. And speaking to some of the traders in the market today, they're saying, this is priced in. The risk of an assault is priced in. Of course, if there is an actual attack and we do see missiles flying and bombs falling, then traders will reassess what is the risk to actual exports and supply infrastructure. And if there is any real hit on supply or any interruption to exports, then we could stand to see oil spiking even more. So people will be looking at that, positioning themselves in the market to be prepared for that. But really, it looks like we are at the top of that kind of, 3 at the low, 10 at the high end of the range for that risk premium there, with the potential to go even further should a hot war start.
So 10 at the high end, but could go further, Anthony. What are you hearing from traders about what would happen in the worst case scenario, at least for the oil markets, the worst case scenario, which is the closure of the Strait of Hormuz? What kind of pricing action can we see on that scenario?
Yeah, a lot of the discussion that we've been hearing over the last few weeks as we followed this is that oil would be easily towards 100, if not higher than that. We've heard of some people talking about the price doubling into the 120 range. We were in the 140s last time in 2008. when there were some supply interruptions. So that was when we hit the all-time high of oil at that time, and we saw oil in the 120s during the Russia's full-scale invasion of Ukraine just a few years ago. So we have seen oil moving around a lot, lots of volatility. When we're not kind of locked in that range where oil doesn't move between, say, $60 and $70, $75, we've got a lot of this volatility. We were expecting this year would be a lower price environment because we've seen that lots of oil coming to the market after OPEC opened the taps, pulling back some of its restrictions last year. Saudi Arabia is up to 10 million barrels a day right now, so that's just 1 million barrels by itself from Saudi Arabia that's added to the market. So we've seen more oil, but that glut has not really impacted the market because we're being elevated by this geopolitical risk, Tom.
Anthony, we're going to wrap it up there. Thanks very much indeed for kind of setting it all up for us. Bloomberg's Anthony Zapala joining us on what is happening with the crude market. We're at kind of 72 now on Brent. We could go to 100. What would 100 do to the global economy right now? What would it do to risk assets?
What would it do to equities? To your point, let's bring in Chris Watling then. Global economist and chief market strategist at Longview Economics. Chris, $100 a barrel oil. If that's where we get to on a conflict with Iran, what does that do to the equity space?
Well, I mean, the initial impact is negative for equities. The question is whether you stay at $100. Well, I mean, these stories go... I mean, every year we've had the story about closing the Straits of Hormuz. I mean, since I've been doing this job, every year Iran's going to be invaded. Every year the Straits of Hormuz are going to close.
So it actually happens, though?
And it never happens. And it hasn't happened. It might happen. It could, of course, happen. And if it does happen, there will be implications. But I think we should also remember, you know, every geopolitical event in the last few years where you've had a spike in oil, basically it peaks on the event and then sells off oil. So actually oil's been in a downtrend since the Ukrainian war because there's a lot of oil around. There is a lot of oil. Now, of course, if you take out the whole Iranian supply, that's an issue. But if if it's quick, it really will pass, and it's an opportunity to sell oil and sell energy assets.
You would sell on that?
You'd sell on the news. If it's a good invasion and it's quick and it works well.
Okay, that's what Trump's looking for, but he's positioning for a longer term picture. So let's park the geopolitics one now for the time being. Oil has been a big contributing factor, though, to what we've seen in terms of the disinflationary story in the United States. Even if oil just goes sideways, the base effect comes out, and maybe you see, therefore, a tick higher in terms of the inflation narrative. Talk me through the implications of that.
Well, that is true. Oil has been part of the disinflationary force, so yes. But I mean, for oil to stay up here, it seems unlikely to me. It's either spiking or it's going back to where it came from. Okay. Because of the fundamentals. So either geopolitical events are taking over, or it's receding. But look, I mean, the U.S. economy is basically disinflationary in general. Oil's part of the equation, but there are other parts. You know, there's spare labour, rent is running at its 10-year.
So the Fed should be cutting rates?
The Fed should be cutting rates, and I think it's, you know, as absent the oil price risk, it should happen, and the market's priced it in already. So,
do you think the market's backing away a little bit from that?
Well, I mean, not as of yesterday morning. I don't know what they're doing overnight, but
a strong tips auction markets. I'm hearing more and more people saying the Fed shouldn't be cutting rates this year.
Well, it's a
fine.
You know, it depends which part of the K-shaped economy you look at. Right? Yeah. You look at the top half, you'd say, well, why would you bother? You look at the bottom half, and arguably we're in a bit of Goldilocks. So why not cut? I mean, Kevin Walsh turns up, tries to do a bit of Greenspan's productivity story from the late 90s. Growth is strong, and it's disinflationary. So if you're entering a deflationary productivity boom, there's every reason why you should cut.
What would that mean, that outcome? What would it mean for the rotation that we're seeing? Is the rotation in US stocks into cyclicals and defensives and out of tech starting to look a little stretched?
I think it looks a little stretched in terms of chapter one. And the question is there'll probably be lots of chapters. We haven't had a proper broad cyclical recovery in the West for several years now, probably since 2021. So it's not going to be a short-lived affair. But the market's priced in chapter one. Yes, the market's very stretched on lots of sort of cyclical overbought type measures. But the real question is, are we rotating in this sideways market, or are we preparing to roll over? with a bit of bout of volatility. I think that's the real question.
But do you have an answer to that question?
Well, I have a sense of what. I mean, I don't think anyone has a definitive answer.
Because so what's your sense?
My sense is, the macro environment for the US and global stock market is really good, and therefore you want to take advantage of any softness. We shouldn't have too big bouts of volatility because actually the corporate sector looks pretty good in the US. It's quite strong. Net debt's at record lows and cash flow is good. So volatility should trend at low levels. Therefore, we shouldn't have big pullbacks. So
why am I seeing single stock vol as high as it is, and why am I seeing index vol as low as it is?
Well, that is one of the key risks at the moment. There's a lot of damage under the surface in single stocks.
Yep.
Software, anything disrupted by AI, as we've seen in the last few weeks, getting taken out. So that is a concern, and that has created a bit of a risk, and that's one of our models that's signalling a bit of a warning signal. So that needs to be watched closely. I think really what you're talking about is people taking single stock damage and being told to take down their gross, basically de-risking. Yep. That's clearly a risk. But as I said, the macro's so good that I think any sort of wobble is an opportunity to put money to work.
Including in tech?
Great question. I actually think I think software is definitely due a bounce. It's so oversold. I wouldn't be surprised if it was up 10% in a few weeks. But whether or not that 10% continues, I really don't know. And you've got to ask someone who's a tech software AI specialist, and that's not my ballgame.
Are you worried about what's happening in the private credit space right now?
Well, yes and no. I mean, I think it's a long-term problem. I think there are things brewing. I worry about things when money's tightening up, not when money's loosening. When money's loosening, you can cover up all manner of problems.
Why is the Fed talking about hikes then?
Is the Fed
talking about money? The last minutes, people, the minutes highlighting the fact that there is a discussion. There are some on the FOMC that are talking about it.
Yes. Well, they're probably looking at Australia and wondering about the top half of the economy and so on. There's a big debate out there. There always is. And the whole global economy has been very weird post-COVID, and it remains abnormal.
If bond yields
that's
trend
confusing
higher,
people.
If the 10-year starts to move higher from here, how big a risk signal would that be for you?
I think that's a great signal. That's telling us the market believes more in growth, and I think it will start doing that because the curve's steepening.
Yeah.
Well, then Wall Street's worried about getting to 450 on 10 years or 475. I think in 2 years' time, 10-year yields will be at 6%, and then it'll be a problem. I don't think it's a problem along the way. I think it's simply telling you that growth's getting better.
So 6% in 2 years on a US 10-year?
Yeah.
Okay. I'm just marking that down.
What does that do to the 10-year gilt in 2 years' time?
Well, it's 30 bits higher than that probably.
What does it do to the S&P in 10 years' time?
Yes.
Well, the point is it's going up because of growth. It's not going up because of inflation. This is a very different world from 21 and 22.
If you have this much growth, are you sure you're not going to have inflation?
Well, I think you'll get it eventually, and by the time we get to 6%, it will be a problem.
Okay. So inflation is coming.
I don't know whether
inflation
it's 5.5 or 6 1/4 or whatever, but my point is it's not 4.5, 4 3/4 or 5.
So the 10 years mispriced right now?
No, it's not mispriced right now. Okay. Its price will change. That's the point. We're entering a global cyclical upswing, and we'll start getting momentum. Watch ISM manufacturing. That should rally to 55, 60 over the next 18 months.
Yep. We're going to watch this one very... I'm going to write this down.
Don't write anything down, I say.
Chris, great to see you. Thanks for talking about it. That's Chris Watling, global economist and chief market strategist at Longview Economics. Coming up, talking of the Fed, Minneapolis Fed President Neil Kashkari pushing back against National Economic Council Director Kevin Hassett's criticism of a new New York Fed paper on tariffs.
I thought that Director Hassett's comments, though, he went on and he said that he disagreed with the results and the researchers should be punished or they should be disciplined for their conclusions. I think this is just another step to try to compromise the Fed's independence. Over the last year, we've seen multiple attempts to try to compromise the Fed's independence, including in December when the Department of Justice served a subpoena to the Board of Governors over some building expenses. It's really about monetary policy.
Stick to the knitting. More on Fed policy next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
February 24th, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
We are, 12, 13 minutes into away from the start of trading this morning. Futures look pretty positive. They look pretty positive on the other side of the Atlantic. We've got a lot to get through, though, in terms of what we are watching out of the United States, in particularly the United States, with the data that we're going to get. PCE, I think, is going to be really interesting. Yes, it's delayed, but inflation seems to be the story everybody's talking about right now. Let's talk about what we are watching and where we are going to go next. We've also got the geopolitical risk that we need to fold into all of this, too. Paul Dobson, Bloomberg Executive Editor for Asia Markets, joining us to discuss how markets are feeling this morning. Paul, I don't know what's going to happen this weekend. I don't think anybody does. Maybe President Trump does. Geopolitics is dominating. The oil price is climbing. How big a risk to risk assets is this?
Good morning, Guy. Well, I was joking with my manager a while back, telling him, we've got the risk of a collapse of the British monarchy. We've got the brink of a war. We've got private markets under extreme pressure, possible threat of an alien invasion. Asian index gives back 0.3, 0.4%, and US futures rally. So far, as far as today's session is concerned, risk markets are taking it relatively in their stride. Where we are seeing the pressure play out is in the crude oil market. Of course, we've got Brent crude pushing up out of the range to the highest levels this year. And so that does tell you that there are some nerves out there. But the communication from Trump seems to be around this idea that there's another couple of weeks worth of negotiation time before we would get to any kind of action. And the market seems to be relatively comfortable with that. Yes, we did have a little bit of a risk off in the US session yesterday, but the gains in the futures today sort of have erased pretty much all of that already. So at least as far as Asia is concerned, the risk sentiment is still looking pretty resilient and strong.
Paul, the list of risk factors then for these markets. I love the way you illustrated it. So aliens and an alien invasion. So let's go there, Paul.
How do you price in that?
How do you price in an alien invasion, Paul? Oh, OK, private credit, Paul. Blue Owl is in focus. The whole space was under pressure. Stock selling off yesterday. How much of a risk is this, do you think?
Yeah, nobody really knows. And that's the biggest problem, isn't it? There's so much opacity within that market. And so some people are crying wolf, saying that, oh, my goodness, they've shuttered some funds. This is exactly like the start of the financial crisis. Others are much more relaxed, including the private credit companies themselves, which are saying defaults are extremely low, and the track record so far would seem to prove that. But we don't know exactly what that exposure looks like. And the fact that there's a lack of obvious data out there by the very fact that it is private markets is one of the things that has markets worried. So that's why we're seeing those stocks of asset managers rattled and worried a little bit about what the contagion might look in the rest of the market universe.
In terms of kind of where we go next, what are you watching, Paul? We've got Asian markets beginning to come back. How big a factor is that in terms of broadly what people are thinking about? You've got US data we're going to be watching a little bit later on. What's caught your eye this morning in terms of the market moves you're watching?
Yeah, so I think that the China return is going to be interesting. We've seen a couple of the AI startups really rallying hard today, Minimax and Zhipu, but we've seen those platform companies still under pressure. They've been trying to drum up business, but nonetheless, Alibaba, Tencent still fading. And I think that that speaks to the weakness within the Chinese economy. So it'll be very interesting when they start trading again on Monday to see just how strong the markets can hold up there.
Paul Dobson, Bloomberg's executive editor for Asia Markets. Remember, you can get up-to-date analysis and insight from the Markets Live team. Just go to MLIV, MLive Go on your terminal. Paul, thank you. Let's bring in Chloe Melly right now with stocks to watch this Friday. Chloe, what are you focused on?
Good morning, Tom. I'm focused on Danone to begin with. So the sales came in higher than expected, and that is thanks to two things in particular. So really strong demand for medical nutrition products and also very strong demand for high-protein products like yogurt. And so these strong results could really help lift the shares for Danone this morning. We can see they have been trailing peers a little bit. Some of that weakness had to do with those infant formula recalls that have really weighed on the stock price. But Danone said today that those recalls would have no material financial impact on the company. So that could be seen as reassuring, and combined with those strong results, we could see the shares moving higher this morning. Moving on to Anglo American, which took yet another write down in its struggling diamond unit. So the profits are steady for Anglo American, but it looks like the restructuring plan, the transformation plan, is taking quite a while and is being quite difficult to deliver. The plan is to exit coal, platinum and diamonds, and so far it's only managed to exit platinum and is still stuck with coal and diamonds. But beyond this restructuring plan, what investors have really focused on lately is the deal with Teck Resources, which will create one of the world's biggest copper miners. So that explains this massive rally that we've seen in the shares. But we'll see if investors today decide to focus on this impairment charge and results. And finally, Aston Martin issued another profit warning. And so this really highlights how difficult the turnaround is going to be for that car maker. This is really going to be about tariffs. That's what the company has said today. And we can see that the shares are already struggling quite a bit, and so this could be yet another issue for the company, and highlights how difficult 2025 has been for that car making industry really across Europe.
Okay, Chloe, thank you very much indeed. Chloe Melly with some of the stocks that we are watching this morning. It's going to be interesting to see how the oil stocks trade today.
Yeah.
Is there an expectation that we do see some stickiness around the oil price? If we are going to see a more prolonged conflict, would oil stay up? Or would it do, as we've been hearing on the programme, just sort of come up and come down? How much can you price into some of the oil names in Europe if we get the shorter kind of spike trade spikier trade. If it gets something longer, do you see it? Do you see a more sort of consistent pickup in some of these oil names?
Yeah, Chris Watling was talking about the fact that in recent history, of course, you have seen that move lower after these kind of spikes. But Anthony DePaola over in Dubai from our Bloomberg team talking about levels maybe $100 if they close the Straits of Hormuz. That remains, of course, theoretical. There's some lines and data out of the UK, which is broadly positive, Guy. So, consumers are spending, so retail sales beginning the year with the fastest growth in 20 months. That's good news for the Chancellor. The other piece of good news for the UK Chancellor is what's happening in terms of tax revenues. And part of this is down to capital gains taxes coming through, but also lower debt costs as well.
Yes, but we've just been also hearing that the fact that maybe you start to see globally bonds moving higher, what gravitational effect would that move have? You're already starting to see that. The Bank of England is still expected. And the data is pointing, and Cathy Mann was out talking about the data yesterday. The expectation is that the Bank of England will be cutting. Just how far does the Bank of England, can the Bank of England go, I think does remain an open question. Inflation is coming down, but it's still elevated. We're still kind of at 3%. How much room for manoeuvre does the Bank of England really have? How far can rates go down if we are going to see maybe the global central bank cycle bottoming out at this point? So there's some room for manoeuvre, but not maybe that much room for manoeuvre in terms of what we're going to be seeing. We're also going to get data in the next hour in terms of the PMI data. That's going to be really interesting to tell us what's happening over at the ECB and what we're seeing in terms of the European story.
Yes.
So that data, we're going to get France, we're going to get Germany, get Eurozone data a little bit later on. It's going to be really interesting.
There's a budget that's been passed now in France, so some of that risk has been taken out. And are we starting to see green shoots for that German economy on the fiscal impulse? That data will be broken. We'll give you the context as well. Coming up, it's the opening trade, of course. Futures in Europe after a challenge day yesterday, pointing higher by 0.3%. Stay with us. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Morning, how you doing? A couple of minutes to go until we see the opening trade here in Europe. This was yesterday's session over in the United States, yellow line where Europe goes out. The US finished negative yesterday, but only just a little bit down in terms of the overall session, which was actually quite choppy. Europe went out here kind of similar levels to where we saw maybe the closing price on Wall Street, so maybe not a lot of a read-through here. But the choppiness is interesting. This market continues to churn, and that is the story at the moment. It's not an index story, it's a below the index story, and that's what we're watching once again. Eurostoxx 50 futures are up by 0.4%. The FTSE up a similar amount. The DAX is up a similar amount. We're about to get a fair amount of PMI data in the next hour. That could be something that moves these markets. You're going to see some single stock stories that I think are worth paying attention to. Keep an eye on Anglo in particular. I think that's going to be interesting. But at the moment, these indexes are not necessarily telling the whole story. It's the churn below the indexes at a sector, at a single stock level, that I think are the really interesting tell on where sentiment lies right now, Tom.
On some of those individual names, you mentioned Anglo then, Guy, coming through with that impairment then, pre-tax impairment of $2.3 billion on the diamonds unit. De Beers, of course. Top line in terms of the profits, staying steady, essentially, underlying earnings of $6.4 billion. But the focus, you would have thought, from many investors will be on that impairment and how they work through the diamond challenge. Of course, they do have that additional exposure to copper. Danone, in terms of the earnings, looking pretty solid. Sales rising. They're getting a boost from high protein and medical nutrition demand, and not seeing a material impact as a result of recalls in the US. Aston Martin, and you're seeing just another profit warning. Again, they are citing the impact of tariffs, Guy.
Bad day for Bond. OK, let's move on and talk a little bit about what is happening with this market open. We're expecting it to be positive. We're expecting some really interesting single stock stories. But let's take a look at the index level to start with and talk you through what is happening there. We're expecting the FTSE 100 to be up a little bit, but not by much. We're expecting 2.3%, maybe from some of these indexes in Europe. That's what we're basically getting out of the FTSE 100 already. Let's see how the miners do this morning. Let's see how the oil stocks in particular do as well, as we watch what is happening in the Gulf and this build-up of US military kit in that space. Stock 600 is up by 0.2%. The DAX clearly has no news this morning. It is up and it's out early. Clearly nothing is happening in Germany. The CAC is up, though, more than most. It's up by 0.5%. The IBEX is up by 0.3%. Clearly a very quiet morning for the German market. You don't normally see the DAX open by this point. Tom, what do you got?
On the sector-by-sector breakdown, Guy, consumer products at the top of the list, gaining a little over 1%. Construction up 0.9%, and chemicals up 0.7%. On the downside, utilities a little softer. That is the biggest loser across your sector so far. Alongside autos and Aston Martin, part of the mix there. Autos down 0.3%. That's the sector-by-sector breakdown. Interesting look at the FTSE 100. We keep an eye, of course, on what's happening in the energy space, given higher oil prices. But energy as a sector is actually down 0.2%. Some of the gainers on the FTSE 100 include some of the financial services firms like St James's Place, which is up 3.6%. Also the luxury stocks, Burberry getting a bit of a lift, gaining as well. What are you seeing, Guy?
Yeah, LVMH is the biggest points gainer, the upside. That's what we're seeing in space. I wonder whether there's a sort of certain read across. Maybe this is China. I don't know. I'm curious to find out exactly what's going on there. Maybe Air France, Accor telling a positive story about what is happening with the kind of the ultra-luxury story. Maybe that gives us a boost. But it's LVMH, it's Richemont in that space that are doing well. As you say, you are seeing a fairly mixed bag elsewhere. Some of the pharma stocks are coming through. Nestle is down. Which I think is interesting. I think Infineon's XD today, so that's probably just worth noting too. But the churn continues, and I think that really is the narrative that we're watching once again. Single stock volatility remains a big theme. Churn within sectors remains a big theme. Equities at an index level just going sideways. But tech has been a big theme, and this big sellout we've seen, particularly in software stocks over recent days, has been this growing narrative. Maria Feimana, head of equity research at State Street Global Markets, joining us now to discuss. Maria, fantastic as ever to see you. How are you feeling about tech?
Yeah, good morning, Guy. Good morning, everyone. I mean, what we're seeing about in tech is kind of rotation from tech to tech. That's kind of the tagline we're going with. So we see quite a big rotation from software into hardware. So that trade is very prominent. We also see rotation from U.S. tech to Asian tech. So the kind of investors kind of moving money to places like Korea, like Taiwan. So so it's not kind of people getting out of tech. It's just choosing where you see more clear monetization, where you're seeing kind of winners and losers from this kind of AI arms race.
What do you think about what is happening with the Magnificent Seven, though? There is serious concern, serious kind of the narrative. You see Microsoft coming down. That's the kind of the software side of things, but maybe a little bit of AI spend stories as well. Elsewhere, you're getting a divergence between Microsoft and say, Alphabet. What is happening within that key group, which is so determines what happens at an index level, particularly in the States?
So, I think there are a couple of points to make. I mean, the first point to make is that so Q4 earnings, that's kind of been market seen it as a little bit of a catalyst for sell-off, but as kind of CapEx, huge continuation of expansion in CapEx. But other than that, we saw very significant earnings, and on CapEx, particularly for Magnificent Seven, what we think is that CapEx is enormous, but the cash from kind of operating cash flows are still twice as much. So ability to finance that CapEx is still there. So we're not kind of getting any more negative on that. But it's very clear the rotation within the sector. So I think the kind of good analogy is kind of if you're thinking about waterfall, you don't want to be on top of the waterfall with kind of LLMs of this world. You want to be towards the bottom waterfalls where this CapEx is trickling down and who is kind of benefiting from this huge spending. And that's kind of your hardware side, your semi side, but also, I don't know, materials, industrials. So companies who feed into this CapEx, AI capex are benefiting from that. So kind of AI enablers, that's potentially kind of the new trade.
Is it new though, Maria? I mean, how wide is that window? How much further does that trade have to go?
Yeah, no, that's a good point. So that has been happening maybe for the last kind of 3 months, but if we compare investor holdings, say in, I don't know, capital goods or materials, they probably 3 or 4 times lower than what we see in tech sector. So that definitely can continue. Out of emerging markets, so we saw money going out of, like, say, US into Korea. Again, holdings in Korean stocks. I mean, Korean stocks done fantastically well, but the holdings, investor holdings are about 4 times lower than in US. I mean, I'm not suggesting that they're going to go to exactly the same levels, but that kind of gives you the degree of magnitude. So, yeah, so those trades are reasonably kind of recent. So we still see continuation of that demand.
We know notoriously it's difficult. I want to shift from the tech story to what's happening geopolitically, and notoriously difficult to price geopolitics. But would you want to be placing any hedges on? Would you want to be looking at other asset classes or other parts of the equity market in light of the tensions around Iran?
Yeah, that's a really interesting point. And I think what we saw for a good part of, like, towards the end of last year and kind of start of this year is that I think those geopolitical stories are really notoriously difficult to price in a sense that normally what we'll do as kind of as analysts is that you look at, okay, so something happening in geopolitics, and then you do your case studies. If this happens, this assets will do well. If that happens, this assets will do well. And then you assign some probabilities, and you kind of build your portfolios this way. I think right now it's almost impossible to assign probabilities to any outcome, given how quickly those narratives change. And I think what investors are doing, or have been doing throughout most of last year, they maintain their core risk bets within tech, emerging markets. That trade continue. But what they did, they bought a lot of kind of precious metals, so that seemed to be kind of the favorite hedge, and kind of within equities it's been kind of mining stocks. So that was kind of, so you had this like really strange situation where the kind of gold as a kind of proxy for risk, done really, really well, like your safe assets. And at the same time, risk assets done very well. So investors did not change the core of their allocations. They just hedged it with kind of precious metals and kind of carried on with risk positions.
Maria, what do you make of what is happening at a single stock level and a sort of a sector level and an index level? Indexes are going nowhere, but below the surface, I'm getting a lot of single stock volatility. And I'm wondering what you make of this. Some people saying it's nothing, this is normal churn within a market, but it's very aggressive churn. And I'm wondering whether or not this is a signal that we should take note of and should be concerned about. What do you make of this divergence?
Yeah, I think the first point to make is absolutely we're seeing this churn. We actually have an index that measures this kind of weirdness of the market, so unusualness of the market. We call it correlation surprise, and it's absolutely been kind of quite elevated. Last year came off a little bit towards Christmas and then started to go up again very, very strongly now. So that's definitely there. It's not at the highest level we've seen, so that potentially can continue. I mean, historically, that tends to kind of predict spikes in overall volatility, so that's something to take note of. And I think the way investors take note of is through those hedges in the kind of precious metals. So they do this kind of unusual things that makes the whole system potentially less stable. And we see this kind of very elevated positions, A, in risk trade, but B, in safe trade, but not much in the middle. So that I think the way investors playing it. And I struggle to see that going away, given that geopolitical risks are probably kind of a feature, not a bug these days.
Maria, on the regional question, in terms of regional exposure, we get a lot of guests on who like the European story for all number of reasons. Rates at 2%, fiscal stimulus from Germany, green shoots. You push back on that. I mean, particularly around the small caps. This is not a space you want to have exposure to.
Yeah, I mean, the problem we have with Europe is it's really just green shoots, and as opposed to kind of strong growth. I think, in Europe, last couple of years, we flirted with recession. I mean, this year it's slightly more positive, but I don't know what GDP growth forecast is. I mean, still less than 1%, 0.5, 0.6. If we were talking about these numbers in US, we will be pulling our hairs out and talking about recession. So it's still not the level of earnings growth. And also, the important point about Europe to make is that last year, European stocks performed really, really well on hope of earnings recovery. So multiples re-rated, earnings recovery has not happened, has not materialized, earnings still contracted. So we're still kind of, we priced like this kind of earnings already, and they're not happening. So to me, that's not a region to be very excited about.
Maria, I hope you're enjoying the Olympics. Thank you very much indeed for joining us. Maria Veimana, the head of equity research at State Street Global Markets, joining us from Milan. Let's talk about what we're seeing in the core six right now. This is the picture. A game of two halves. Nova, LVMH and Rheinmetall all trading higher. I think there's a note out this morning on European semis, which is worth paying attention to. I think it's from Bank of America. ASML is soft. Schneider's down. Nestle seeing some softness as well. Let's go from LVMH, which is up quite nicely, to a stock that's really driving this space this morning, which is Moncler. Chloe Melly's got more.
Good morning, Guy. Indeed, Moncler is having a great day today. We're up more than 12%. This is a maker of high-end puffer jackets, and it reported full-year and fourth-quarter revenue that was ahead of estimates. And especially, there was a lot of strength in the Chinese market. And so that has been driving the rest of that luxury sector higher. And as you just mentioned, LVMH also higher on the back of that. Another name that is definitely in the green is Kingspan. This is an Irish construction company and generated record revenue in 2025. And that was thanks to very strong demand in data centers, and that helped to offset some of the weakness in the residential end of the market. This is something that we've seen with other names in that infrastructure construction sector in Europe, like Avanci or Skanska as well, where they had those really strong data center customers that were offsetting some of the weakness elsewhere. And therefore, for Kingspan, we're up almost 9%. SJP St James's Place is also up this morning, about 2%. That is after UBS upgraded the company to a buy rating. So St. James's Place was one of those companies that was really hit by that sell-off in companies that are exposed to AI disruption. But UBS analysts are saying that the valuation is very cheap, and so that makes it very attractive despite those AI risks. And finally, let's end with Danone, which is a little bit weaker. It was a little bit weaker this morning, despite those strong sales, despite the fact that that they are saying that the infant formula recalls will not have a material impact, but management has just said that that impact will be as much as 1% on net sales in the first quarter. And so that might be what the market is reacting to this morning. And we are down a little bit, about 1.2% for Danone.
Chloe Milling, thank you very much indeed on some of the stocks on the move, earnings in focus. And coming up, we'll get another earnings story. Anglo-American taking a big hit on its diamond unit.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back. We have some breaking data out of France. PMI, Manufacturing Purchases Index, coming in slightly higher than the forecasts, 49.9. The forecasts have been for 49.6. That's for the month of February. That's the composite number. Worth zeroing in on the manufacturing component. That's coming in slightly softer, modestly softer than, well, a fair bit softer than the survey. 49.9. The survey had been for 50.9. Services coming in stronger, though, so 49.6. So services seeing a bit of a lift. There's a bit of divergence between manufacturing and services, not extreme, but services coming in slightly stronger than the survey, but manufacturing softer, certainly than the survey. The composite number coming in rounding out 49.9, Guy. The euro is currently at 117, not a huge move.
Okay, so this is the line that we're getting in terms of the press release that we get with the market PMI data. France's private sector economy continued to lack any impetus for growth. February's flash PMI survey data showed with business activity levels basically unchanged at the beginning of the year. Stagnation was also seen in employment after back-to-back months of expansion either side of the new year. Basically, the French economy is going sideways at this point. There's some upside in the idea that maybe actually we're getting some political stability, but it's not yet maybe being reflected in terms of the economic data that we're getting. We're basically at flat. We're kind of flat 50. Let's call it 50. The French economy is going nowhere in a hurry.
Yeah,
and
it's hard to see what the next catalyst is for the French economy. You can look at catalysts for the German economy, for example. It's hard to see where it comes from. They have pulled out some of that, or at least washed out some of that political risk, at least for now. To your point, the budget has passed. So maybe things start to turn around. Maybe there's a benefit and some uplift that comes through from the German fiscal spend.
So where do you get the momentum from? What is it that could cause momentum here? You're also potentially facing a stronger euro, which is going to be a factor as well. I know we're off the recent highs. People were talking about 120, but that we're fading off the back of that. So we've got 117 right now. But it's really hard to see where the catalyst comes from in terms of the French economy right now and what happens next. Clearly, we're also coming into a period where we're going to start thinking this year about the 27 elections. And that's going to be a factor that is also going to weigh as well. Who will be Macron's successor, I think, is a question the French economy is increasingly going to have to deal with as we work our way through 2026.
And that's certainly a question that seems to be percolating through the halls of the ECB as well.
As we think about who could... Does Christine Lagarde go early or does she not go early? So that's what we're seeing in terms of the macro data. We'll bring you more PMI data as we work our way through this hour. Let's return now to what we're seeing in terms of the corporate news. Anglo American has taken a $2.3 billion impairment charge on its struggling De Beers diamond unit, which, remember, it's trying to exit at the moment. Across the group, Anglo reported a 2% rise in underlying earnings from continuing operations. Joining us now, Duncan Wambler, the CEO of Anglo American. Duncan, thank you very much indeed for your time this morning. Where should we focus in terms of the business? Should we focus on the kind of the rejigging you're doing in terms of the portfolio? Should we focus on the concerns around what we're seeing in the diamond business, what's happening in coal? What bit part of the business takes the greatest amount of your time right now? And where do you see these results in a year if we do see the ongoing restructuring continuing? Where are we in the journey, I guess, is the question I'm really asking.
Good. Well, it's a great question. Thanks for that. And I guess the answer to it is I'm focused on all of those areas. I mean, we started out with a very significant turnaround in the business, focused on making sure that we operated the assets that we had under our management to the best of our abilities. And I think that that's absolutely starting to show through, particularly in the retained businesses. And at the same time, there were a number of reasons that we needed to reset the portfolio, and that's a process that has really progressed very well with the demerger of our platinum group, which is now Valterra Platinum. And of course, we've got our nickel business that is just waiting for EU approvals before it can close. We're now well progressed again with the sale of the coal business. And then, as you mentioned, diamonds is the business that is taking a little bit longer, as we had expected to do, just given the nature and the shape of the diamond markets today. So that is going on, and that's going very well. At the same time, having now announced the deal with Teck and the merger with Teck in September of last year, having now received the shareholder approvals on both sides for the deal to continue. We've gone a long way down the line of regulatory approvals. We've only got 2 left to go. And all the focus is on how we integrate these businesses when completion does come.
OK, let's just unpack that a little bit. Let's start with the Teck side of things. What indications do you have from Chinese regulators in particular about how they're going to treat this deal?
So we said at the time of the announcement in September of last year that our expectation was that the time to completion would be somewhere between 12 and 18 months. So that would put us somewhere between September of this year and March of next year. And I believe we are absolutely on track as far as that's concerned. So we have had no indications from China, either positively or negatively. We are in a process with China, and this is moving at the speed and the pace that we expected it to do.
On the diamonds business, on De Beers, Duncan, you talked about the complexity given the market. What is your sense as to where we are in the market journey, where we are in terms of that competitive threat, the softness in the Chinese market? When do the conditions become good to get this across the line?
Yeah, look, a number of things are sort of impacting. I think this time last year I said, well, we were slightly hopeful that we were starting to see some green shoots insofar as we were starting to see a net positive inflow of diamonds back into China. We were seeing very, very robust activity for polished goods in India, and the US was stable to improving. So these are three key big markets for diamonds. But at the same time, of course, we saw massive production increases, particularly coming out of Angola during the course of the year, which put quite a lot of pressure on pricing. And at the same time, the lack of a trade deal between the US and India resulted in a 50% tariff on all Indian goods, and the vast majority of rough diamonds go to India for cutting and polishing. So those were sort of the impacts during the course of the year. But the fundamentals in terms of what changes diamonds, I think, is just the time it takes for hopefully this trade deal to be done. But secondly, the time it takes for consumers to fundamentally realize the difference between lab-grown diamonds and natural diamonds from a value perspective. And certainly we are seeing that today. So the production of lab-grown diamonds, the costs are very, very low. The consequence of which is, you can't defy gravity in terms of an unreasonable margin against the cost of that production forever. And we are certainly starting to see that change shape, but it will have to fully change shape. And then we'll have two markets. We'll have a natural diamonds market, and we'll have a lab-grown diamonds market. And our expectation is that in a few years, that's where we should be.
In a few years, does that inform our view in terms of the time frame then, as to when you can successfully demerge De Beers? That's not a 2026 story? Is that more 2027, 2028? What is your current best?
No, so certainly that does not inform a view of when De Beers could be divested, because of course the process of divestment is pretty broad in terms of the nature and the number of buyers, potential buyers that we've looked at. All of the buyers that we have in the process today are deeply strategic. So these are people that know and understand diamond industries, know and understand the mechanisms of the market, and will see through where we are in the cycle at this particular point in time, given the very high quality nature of this business and its underlying assets.
Duncan, do you think it'll happen this year?
I'm optimistic that it will happen this year, yes.
Okay. What's happening with the coal business? You're restarting a number of mines in the Grosvenor mine. Just walk us through what you think the timeline looks like when it comes to the coal business too. A, in terms of kind of restarts and the progress there, and B, in terms of the kind of positioning this business as well.
So we restarted Moranbah North in November of last year, and in February, just the beginning of this month, we had all the remaining restrictions removed by the authorities. So Moranbah North will now ramp up to its full production capacity, and we are back underground at Grosvenor, with now looking at a possible restart of that mine in 2027 or 2028. As far as the divestment process is concerned, so we restarted the process just after Moranbah North restarted. So this was in December of last year. I'm hoping to get to final bids in Q2 of this year, and still optimistic that we will be able to complete the transaction before the end of this year.
Duncan, great to catch up. Always appreciate your updates. Thank you very much indeed for your time this morning. Duncan Wanblad, the CEO of Anglo American. The stock up by 1.12%, just beginning to climb a little bit more now.
OK, we're going to get more on the economic data coming out of the Eurozone. French PMIs Bit of mixed in terms of what's happening. Manufacturing a little softer, services picking up a bit. We're going to get the views of Catherine Nace telling us what this means for the broader euro area. We're going to have that interview for you next. Stay with us.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combine to Japanese style and another country food, then make novel style.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance. Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back. This is the opening trade. We are 30 minutes into today's session. Across the benchmark, we're seeing gains of 0.3% after the losses of yesterday. A bit of a turnaround then. The DAX currently up just 0.1%. It's stronger over in France, lifted by the luxury space. Some big gains there for some of those names. LVMH in the mix, of course, up 0.5% then on the CAC 40 over in France. The FTSE 100 up 0.4%. Some of the financial services and asset managers doing quite well as well today. St James's Place is one name in focus here on the FTSE 100. Guy, what are you looking at?
In terms of the breadth, what we're looking at is a 2-to-1 ratio, gainers versus losers. Let's call it 400 up, 200 down. That is the ratio you're looking at in terms of the market's internals. What you are seeing, though, is light volume today, which is interesting. We're going into a weekend when I think there's probably significant risk out there on the geopolitical front to watch out for. So pay attention to that. Single stocks, Montclair is out with very strong numbers this morning, particularly driven by China, which definitely appears not past peak puffer. That stock is up by 10%, nearly 11%. So doing very well this morning. Kingspan Group, the Irish construction company, this is where you see maybe the AI construction story benefiting some of these names in Europe. Its stock is up very nicely as well. Casilium's up by 8.54. So there's some interesting single stock names that we are watching out for. In terms of the downside, let's take a look at what we're seeing here. So Nestle is a little bit softer this morning, but actually where I really want to focus is some of these oil names. BP, Total, Shell also down today. It's really interesting actually. If you look at the FTSE 100 and the internals within the FTSE 100, some of the oil stocks are the biggest drags. Some of the defence names are some of the biggest drags as well, which is interesting going into a weekend when you see potentially big geopolitical risk coming out of the Middle East, Tom.
Here's what else you need to know then, and on that topic, a growing contingent of US military forces in the Middle East is escalating tensions in the region once again as the US president ramps up pressure on Iran to strike a nuclear deal. Trump saying that Iran has 10 to 15 days at most to strike a deal over its nuclear program. Blue Owl shares plunged in New York after the alternative investment firm said it will restrict withdrawals from one of its retail-focused private credit funds. The company says the fund will instead return capital through periodic distributions funded by loan repayments, asset sales and other transactions. The move highlights the risks confronting retail investors entering the fast-growing private credit markets. And the Financial Times reports Nvidia is close to finalising a $30 billion investment that will replace the long-term $100 billion commitment agreed on last year. The investment is part of a funding round that will value OpenAI at $730 billion US dollars, not including the additional funding. Guy.
Okay, let's talk about some of the data we're getting out of Germany right now, which is coming through actually fairly strong. But it's interesting that the manufacturing sector is not now necessarily where the strength is. Germany's services PMI comes through at 53.4. That is up from 52.4 last time round and is well ahead of expectations. German services are doing well right now. The composite number, therefore, is lifted up to 53.1, which again is above expectations. So this is a services story coming out of Germany. What you're not necessarily seeing is as big a pickup when it comes to the manufacturing data. So Germany's manufacturing data comes through at 50.7, which is a good number and is up from the 49.1 and is above the 49.5 that we were anticipating. But it does seem as if where we're seeing the real strength this morning is in the German services story. But the German economy certainly producing a kind of much more positive surprise than one we're seeing out of the French economy, which is really struggling for momentum. Joining us now to discuss all of this, Catherine Nice, Chief European Economist over at PGIM Fixed Income. Good morning, Catherine. Nice to see you. What do you make out of the contrasting stories we're seeing on the PMI front from France and Germany?
Well, it's not surprising that France is not doing as well as Germany. But let's start with the good news. I mean, I think this is a really good sign that growth in Europe is broadening out. We saw in the last couple of years, it was really the peripheral countries, you know, your Spain, your Italy, your Greece's, really driving growth in the region. And now we're seeing more of a broadening out to the core, including Germany. This is very much what people were expecting. And I think although maybe the numbers are a little bit disappointing on the French side, I think they could have been a lot worse, all things considered. And now with some of the uncertainty around the French fiscal picture really kind of put to bed, at least for the next couple of months, I wouldn't be surprised to see those numbers start to improve as well. So I think this is very good news for the euro area.
How much momentum does Germany have right now? Let's just focus there for a moment. It's taken a lot longer, I think, than some people anticipated to get the economy moving. It appears now to be moving. What's the upside here? How much better could these PMI data get?
So I think, firstly, fiscal, generally speaking, does have an impact with a lag. This is why when economies experience, cyclical weakness, it's really the monetary authority that tends to be the first mover because their tools can just impact economic activity much more quickly than fiscal can. So it's quite normal that fiscal support does take a long time to feed through, especially if it's targeted at things like public infrastructure projects, which require a lot of planning and organization, etc. So I think the timeline that we're seeing in Germany is not at all surprising. Now, in terms of your question about what's the impact, I think we've got to remember the amount of money that the German authorities are throwing at this problem in Germany is vast. And even if It's spent on things that people could argue about. It could be spent better. We could see more reforms, etc. The bottom line is that it's a lot of spending, and it is going to have a big impact. You're talking about a delta on German growth that's going from something like 0.1 to 1. So it's pretty big. And I think we are seeing some really good signs of momentum that collectively should give us pretty high conviction that this is going to deliver.
Catherine, good morning. It's Tom. Is that enough momentum to pull the ECB off the sidelines?
What exactly do you mean? I mean, from their perspective, they're in a good place. Growth looks decent.
Do we have to think about rate hikes from the ECB? If not this year, then next?
Honestly, they've got a little bit of a Goldilocks situation going on over there because inflation looks incredibly benign. If anything, I think the risks are probably to the downside. We're seeing the impact of products in China on the euro area. Then, of course, we've had a bit of euro appreciation, and the momentum within the euro area in terms of domestically generated inflation looks incredibly benign. So I think for now, the risks are, if anything, to the downside. But if this momentum continues, I think that, what we could see is that the ECB makes an adjustment to what it thinks is neutral. So it's not necessarily a hiking cycle in the traditional sense, but it could be that long-term neutral is just a shade higher from where they are now. But I don't think they're quite there yet.
On the ECB, if Christine Lagarde steps down before the end of her term, does that undermine or shore up credibility?
Oh, tough one. So, my sense is that it will shore up credibility because it gives, the other authorities within the EU time to really think about the appropriate sort of set of people that need to be in these leadership positions. I can see the attraction for Lagarde, to step down after all the, peaks and troughs that she's been through at the ECB at a time when growth is pretty much close to potential and inflation is a target. The ECB is much more insulated, more generally, from interference than, say, the Fed. So I don't think that there's going to be as much risk, should we say, around, maybe the rules of the game changing around monetary policy in the euro area as we might worry about elsewhere.
Okay. Catherine, the reason for this potentially is that people are worried about what happens after 2027 in France, and that we could have a right-wing government that would destabilise the economic outlook. If there are signs of concern, I'm not going to go as far as panic, but there are the signs of concern that has already led to the stepping down early of the French central bank and the potential stepping down of the ECB's chief. Shouldn't the rest of us be worried about what the impact on European growth could be?
I think that this is a risk. We're going to have to see how this plays out. But a lot of the risk is already priced in. We've been having a difficult situation in France really for well over a year. As we get closer to the French election, markets, are going to have a better idea about how to price this risk near term. But, this is not sort of popping up out of the blue. It's something that people have been thinking about for some time. And, there is a bit of time between now and 2027. I think it's quite natural for people to, in leadership positions, to look ahead, to think about, putting in people in positions, in leadership positions when they have the authority and the discretion to do so. This is not particularly unusual. And the sort of set of candidates that people are talking about all strike me as very credible, competent candidates. Turning to France and the risk there, things have gone a little bit quiet. We do have some regional elections coming up that could give us something to think about in terms of going forward. But when I think even about some of the mood music coming out of, for example, when Bardella has spoken previously,
Yeah.
I have heard sort of reading between the lines, that there is going to be a respect for EU fiscal rules, etc. And so maybe this will be less impactful for markets than maybe what people fear.
Just briefly, want to get your take on the UK, Catherine, before we let you go. So the UK, we're seeing gilts gaining again today. Gilts have had a good couple of weeks. So yields down again. The benchmark is at 4.33. The 10-year, the 2-year at 3.56. The UK posting its biggest ever budget surplus. Is there further room to run, do you think, for the gilt rally that we're seeing? Further downside for yields?
So I'm going to confess I've been quite dovish on the Bank of England. I do see scope for them to play catch up and to bring rates down decisively over the next couple of months in the run up to the summer. I think people are discounting the potential for sort of a virtuous circle to take hold, that with inflation falling back, it really gives a lot more fiscal breathing space, which in turn just boosts, credibility of the existing fiscal plans. And by April, we could see both the impact of the fiscal measures that Reeves has announced, plus the lower interest rates, really start to inject a bit of a feel-good factor for UK households and firms. So I think people have discounted that possibility. I don't want to look like I've only got rose-tinted glasses on, but I think we are seeing shades of that. I mean, retail sales today were pretty good. And as you say, the revenues are a bit stronger in part, because of these lower interest rates. So I think it's really not all doom and gloom. And actually, the UK economy is doing, reasonably well considering the challenges.
Well, look, we like ending on a positive note on a Friday, so thank you for that. Catherine Nice, Chief European Economist at PGIM Fixed Income. Now, switching focus, shares of the biggest private investment managers on Wall Street tumbling after Blue Owl said it would no longer allow for redemptions from one of its retail-focused private credit funds. It's a complicated story, but we have now Bloomberg senior reporter Silas Brown to walk through what exactly is going. What is happening then in the credit market?
Yeah, so you're right. The shares of the largest private capital managers, that includes Ares, Apollo, Blackstone, and Blue Owl, have tumbled yesterday off the news of this kind of slightly chaotic unwinding of one of Blue Owl's historic BDCs. And I think there's a tainted sort of cocktail of concerns going on in private credit. One of them's around loan valuations and the kind of ability to mark loans effectively. The other is a concern about a kind of broader concentration risk around software and the threat of AI. And I think Blue Owl has kind of seen itself, and is seen by many as the kind of poster child of the success of private credit, and it now is kind of carrying the burden of that responsibility.
I just want to get a little bit more specific in terms of what is happening here. Blue Owl, what is it saying in terms of redemptions?
Yeah, so this is you're right. I mean, it's a very nuanced picture. This was a fund that, unlike most BDCs, was not a kind of perpetual vehicle. Yep. So there was a natural unwinding that was going to occur. They tried to do this through a merger of a public entity. Yep. That was then scrapped, and it was a sort of boisterous response from investors. And so they then have decided to do this kind of alternative thing, which was to sell slivers of the direct lending investments and basically repay investors through those sales. Yep. And they've sold it to 4 institutional investors, one of which, interestingly, is Blue Owl-owned insurance vehicle. And so I think they see this as a quite positive outcome. And by all accounts, some analysts agree. I mean, the loans were sold at close to par. I think that does show a degree of resilience.
Okay, guys, crude oil में यहाँ पर half profit book कर लेना, ठीक है? Book the half profit in crude oil at this point. And देखते हैं ये directly गिरता है या फिर वापस pull back जाता है, because ठीक ठाक sell off तो आ गया है, कह सकते हो, resistance जो उनके approximately level से. Already market fall 80 point. Final target देखोगे तो that is around, ज़्यादा ही हो जाएगा, 250 point. तो यहाँ से लगभग same और fall होना consecutively थोड़ा सा मुश्किल लग रहा है. हो सकता है आ जाए second half में. Second half already started, 130 already is there. But yeah, book the half profit around this level, the black color की जो zone है. ठीक है, इवन तो यहाँ पे कोई सपोर्ट नहीं है बट पुल बैक आ सकता है थोड़ा बहुत। प्रॉफिट बुक करके ट्रेल कर लो या फिर एसएल कॉस्ट पे रख के ट्रेल करे रहो, वापस ऊपर आएगा तो वापस सेल करेंगे। एक्सपेक्टेड है वही 5840 850 तक अगर आता है तो बीच में, और कोई फ्रेश सपोर्ट क्रिएट होने के चांसेस भी कमी है अब इस पर्टिकुलर जोन पे। ठीक है, बाकी अगर एक कैंडल और क्लोज होती है प्रीवियस कैंडल के लो के नीचे तो फिर मजा ही आ जाएगा, प्राइस फिर तो डाउन ही आना चाहिए, कंफर्मेशन मिल जाएगी। विक नहीं बननी चाहिए, दैट इज द ओनली कंसर्न। ठीक है, 12 मिनट है, देखते हैं ये कैंडल क्लोज होती है नहीं होती, नहीं भी हुई तो कोई नहीं, इनसाइडर कैंडल चलेगी बट विक नहीं बनाना चाहिए, या तो ब्रेक करेगा तो डायरेक्टली क्लोजिंग। नेचुरल गैस स्टिल रेंज के अंदर है, एक्सपायरी है ऑप्शन की, इसलिए लग रहा है मोमेंटम ही नहीं हो रहा आज। कोई ना सपोर्ट बन रहा है ना रेजिस्टेंस इस लेवल पे, इसमें भी एग्जैक्ट सपोर्ट लो लेवल पर है काफी। नीचे आ जाए नेचुरल गैस तो बेटर है ये भी, या फिर कोई सपोर्ट बनाए फ्रेश। Indian bonds decline as rise in crude stocks inflation concern. China snap up distress Russian oil cargoes soon by India.
Da una parte noi sono anche i miei timori, chiaramente da una parte noi dobbiamo assicurarci che l'Iran non si doti dell'arma nucleare, sappiamo quali sono i rischi connessi, dall'altra parte io penso che sarebbe importante in questa fase riuscire a trovare un accordo.
गोल्ड देखोगे थोड़ा सा बुलिश साइड पे जाता हुआ, MCX भी फॉरेक्स भी 1% के अराउंड पॉजिटिव होने वाला है गोल्ड। सिल्वर ऑलरेडी मोर देन 1% पॉजिटिव, कंटिन्यूसली बुलिश मोमेंटम हो रहा है फॉरेक्स में। सिल्वर MCX ऑलरेडी 2.50% पॉजिटिव इंट्राडे में। टाइम फ्रेम पे भी देखोगे गोल्ड को तो पॉसिबिलिटी है थोड़ा ऊपर और आ सकता है। 1 आवर टाइम 4 आवर टाइम फ्रेम का रेजिस्टेंस तो काफी दूर है, इवन 1 आवर टाइम फ्रेम का रेजिस्टेंस भी दूर ही लग रहा है फिलहाल। ठीक है, पॉसिबिलिटी है अगर इसी तरह से मूव करता रहा तो हो सकता है 5200 भी देखने के लिए मिल जाए। क्रूड ऑयल आ गया अपने ऑलमोस्ट 50% के टारगेट जोन पे। यहाँ पर बुक जरूर करना, हाफ प्रॉफिट टिकर, रिमेनिंग क्वांटिटी ट्रेल। इसने प्रीवियस कैंडल के नीचे ब्रेक तो किया है, क्लोजिंग आनी चाहिए, वैसे क्लोजिंग नहीं आई, विक बना के ऊपर क्लोज हो गया तो फिर मज़ा नहीं आएगा। करंट कैंडल 30 सेकेंड्स लेफ्ट, प्रीवियस कैंडल के नीचे, ऐसा मैंने कहा, या तो इनसाइडर कैंडल बनाए या फिर ब्रेक करे तो पूरा क्लोजिंग दे। ये क्लोज नहीं हो रहा है। बाकी इंडियन मार्केट रिकवर कर गया ऑलमोस्ट कल के लेवल से। देखोगे बैंक निफ्टी थोड़ा ज़्यादा अच्छा रिकवर किया है, कल जितना फॉल किया था आज उतना ही रिकवर वापस आ गया है। बढ़िया, ऊपर से वापस रिजेक्शन मिलता हुआ। ओपन इक्वल टू हाई थी बैंक निफ्टी फ्यूचर की कैंडल, आज ओपन इक्वल टू लो है। मुश्किल लग रहा है बैंक निफ्टी का भी फिलहाल के लिए 61,400 के ऊपर सस्टेन करना फ्यूचर में। ठीक है, ये ऊपर रेजिस्टेंस बन गया, इसमें अब डे हाई आज का 61,350 टू 61,400 15 मिनट टाइम फ्रेम पे इन बैंक निफ्टी फ्यूचर। निफ्टी बैंक देखना पड़ेगा डे हाई के ऊपर सस्टेन करता है नहीं करता, बिकॉज इट इज़ अ रेजिस्टेंस 61,350 टू 61,400। इसके ऊपर अगर प्रॉपर ब्रेकआउट होता है 15 मिनट में, आज तो मुश्किल लग रहा है, वैसे अभी 1 घंटा है, अगर इसके ऊपर प्रॉपर ब्रेकआउट होता है तो फिर ये अगेन ऑल टाइम हाई के ऊपर ही जाएगा। अगर यहाँ से रिजेक्शन मिला तो वापस रिकवरी सेलिंग साइड पे अच्छी आनी चाहिए। कल मार्केट जितना फॉल किया था ओपनिंग के बाद, को ऑलमोस्ट हिट किया कल, और वहां से कंटिन्यूसली मार्केट ने सेलिंग दी थी 900 पॉइंट 950 पॉइंट ऑलमोस्ट, तो उसका ऑलमोस्ट 75% रिकवरी है। लोअर एंड से अगर चेकआउट करोगे, आज ओपनिंग का जो लो है या कल का लो है 800 पॉइंट अप्रोक्सीमेटली रिकवर्ड इन फ्यूचर, तो यही रेजिस्टेंस है 61,400। इसके ऊपर नहीं जाना चाहिए, इसके ऊपर अगर गया प्रॉपर्ली ब्रेकआउट तो फिर अगेन नया ऑल टाइम हाई देखने के लिए मिल सकता है। निफ्टी थोड़ा सा अलग है, निफ्टी कल जितना सेल ऑफ आया था उतना रिकवर नहीं किया, ऑलमोस्ट 50% पर ही रुक गया। 25,870 टू 25,890 मेजर एक रेजिस्टेंस, वहां से कल फॉल किया, ये भी लगभग 490 पॉइंट, लगभग 2%। एंड अभी रिकवर देखोगे तो मार्केट लगभग उसका हाफ 300 पॉइंट लगभग रिकवर कर चुका है। अभी कोई रेजिस्टेंस तो नहीं है, वही प्रीवियस रेजिस्टेंस ही था 25,870 890 वाला, उसके अलावा कोई नया रेजिस्टेंस नहीं बना है। गिरेगा यहाँ से 25,800 की ओर, या फिर कल के हाई की ओर रेजिस्टेंस पे आता है, लोअर लो फॉर्मेशन पे जाना है तो बेस्ट लेवल है। गोल्डन रेशियो से रिजेक्शन है बिकॉज निफ्टी ने भी देखोगे, निफ्टी ने भी काफ़ी अच्छा रिजेक्शन लिया है 26,000 से लेकर 26,200 400 की रेंज से। क्रूड में कोई बाइंग नहीं है, ठीक है। यहाँ पर देयर इज नो सपोर्ट एरिया। नीचे अगर आता है एग्जैक्ट सपोर्ट पे तो बेटर है बाइंग के लिए। बैंक निफ्टी काइंड ऑफ रिजेक्शन लेता हुआ 3 PM की कैंडल है आफ्टर 4 मिनट वही 61,400 380 के अप्रॉक्सीमेटली से एक रिजेक्शन लेता हुआ अगेन क्रूड ऑयल में एटलीस्ट हाफ प्रॉफिट बुक करके ट्रेल करना गाइस टारगेट काफी बड़ा हो जाएगा नहीं तो ठीक है, बैंक निफ्टी या रिजेक्शन लेते हुए 3 PM की कैंडल पे निफ्टी फ्यूचर 6380 to 6400 मेजर रेजिस्टेंस, आज का हाई मेजर रेजिस्टेंस। ठीक है, इंडियन मार्केट क्लोज होने वाला है गाइस, 15 मिनट से भी कम रह गए। निफ्टी बैंक 15 मिनट फ्यूचर में रेजिस्टेंस के नीचे ही क्लोज हो रहा है आज, और निफ्टी 50 रिकवर जरूर किया था बट ऑलरेडी 3 PM की कैंडल ने वापस थोड़ा बहुत गेन इरोड कर दिया है। तो कल का रेजिस्टेंस अभी भी इंटैक्ट ही है, कल ही रेजिस्टेंस पे आया था काफ़ी टाइम के बाद 25,870 टू 890, वहाँ से सेलिंग आई, आज पुल बैक, मुझे लग रहा है सेलिंग शायद में भी कंटिन्यू रहे। नियर बाई कोई सपोर्ट अभी है नहीं, रेजिस्टेंस वही कल का हाई, नीचे 25,110 120 एंड देन 24,830 एक सपोर्ट मिल सकता है निफ्टी फ्यूचर को। 2 दिन मार्केट क्लोज है, मंडे को मिलेंगे इसके बाद, तो थोड़ा ध्यान रखना अगर ओवरनाइट पोजीशन लेके जा रहे हो, कॉल साइड की तो पोजीशन मत ही लेके जाना। यूएस ईरान कॉन्फ्लिक्ट का भी डोंट नो क्या होगा।
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Stephen Carroll.
The United States is continuing its military build-up in the Middle East as President Trump says that Iran has 10 to 15 days to agree a deal over its nuclear program. Speaking to reporters on Air Force One, President Trump was asked what happens if no agreement is reached.
I'm not going to talk to you about that, but we're either going to get a deal or it's going to be unfortunate for them.
The president was speaking as the US now has more forces in the Middle East than at any point since the Iraq War. Donald Trump's use of the military in his second term has been characterised by short engagements, including previously bombing Iran. But US former Deputy National Security Advisor Megan O'Sullivan says these troop movements don't follow that pattern.
This is the largest military buildup of American force and firepower that the world has seen since 2003. And I think it really raises questions about what kind of action could the Trump administration be preparing.
O'Sullivan adds that the lack of clarity is driving insecurity. The risk of a wider conflict has sent stocks lower and extended a surge in oil. Brent crude rising above $72 a barrel at one point, now trading at $71.55.
The US President's latest warnings come as Bloomberg has learned the UK has not granted permission for its bases to be used as part of any strike on Iran. The Times newspaper first reported that Britain had not given approval for the Diego Garcia base in the Chagos Islands or RAF Fairford in Gloucestershire to be used in any potential military action. The newspaper said the UK position was due to concerns over a breach of international law. The US President publicly withdrew support for Prime Minister Keir Starmer's Chagos Islands deal following a phone call between the two leaders on Tuesday.
Donald Trump's envoy to the European Union says that an EU plan to give preference to products made in Europe could harm Europe's economy and defence capabilities. Ambassador Andrew Puzder told Bloomberg Radio this morning that adopting such rules would be a serious mistake.
Well, the Made in Europe rules would be a direct contravention of the not only the terms but the spirit of the framework trade agreement that was agreed to in Scotland, because we've agreed not to have those kinds of preferences between our two countries, and I think adopting them would be a serious mistake. I would say particularly in the area of defense.
The US ambassador to the EU is speaking as the European Commission is preparing to unveil its Industrial Accelerator Act, part of its plan to boost the European economy. The package contains local content requirements affecting everything from cars to manufacturing. However, the precise details have yet to be agreed, with EU member states divided about how far to embrace a Buy European doctrine.
The UK government has recorded its biggest budget surplus on record. Revenue exceeded spending by £30.4 billion in January, more than double the figure for the same month last year, according to official statistics. Our senior economy reporter Philip Aldrich says it's a positive surprise for the Chancellor Rachel Reeves.
It's been sort of successive instances of difficult news for the Chancellor over the last year and a half, and this is one of those little moments where she might have a little smile on her face. It's a bit more positive. The overall deficit is lower than the OBR was forecasting.
Aldrich adds that January is the biggest tax month of the year as taxpayers settle liabilities from the previous fiscal year. The good news for the government comes as UK retail sales started the year with the fastest growth in 20 months.
Former Prince Andrew Mountbatten Windsor has been released under investigation. That's after the brother of King Charles III was arrested yesterday on suspicion of misconduct in public office. The arrest came after further details emerged of Andrew Mountbatten Windsor's relationship with convicted sex offender Jeffrey Epstein. The former prince has consistently denied any wrongdoing. Legal commentator Joshua Rosenberg says that any decision to charge Mountbatten Windsor could take time.
The police work really starts now. They have to look at all the documents, see what they can find out from the authorities, from the government, then take advice from the Crown Prosecution Service, and finally decide whether they have enough evidence to bring charges. That could take months.
Legal commentator Joshua Rosenberg. King Charles III issued a statement outlining his deepest concern about the matter and promised Buckingham Palace's full and wholehearted support and cooperation with the investigating authorities.
The mining company Anglo American is taking another major write-down over its struggling De Beers diamond unit. The company announced a $2.3 billion impairment in its latest results, the third such charge in 2 years. Anglo American's in the process of a complete transformation of its business. It reported a 2% rise in underlying earnings from its continuing operations and full-year profits of $6.4 billion.
And lastly, Christine Lagarde says that she expects that completing her mission as president of the European Central Bank will take until the end of her term. This amid speculation that she could resign early. In an interview with the Wall Street Journal, she said that her baseline is that it will take until the end of her term to get to her goals of financial stability and protecting the euro. She also told the newspaper the World Economic Forum is one of the many options she's considering after she leaves the central bank. She declined, though, to comment on reports in the Financial Times just earlier this week suggesting that she could step down before her term expires in October 2027. It had been reported that her early departure would then give the French President Emmanuel Macron time to have a say in picking her successor at the ECB before the French presidential election in April 2027.
And those are your top stories on the markets. The Stock 600 up by 0.5%. Wall Street futures pointing higher as well, up 0.3 for S&P E-minis, 0.4 higher for Nasdaq futures. After those UK public finances figures, we're looking at UK gilts rallying. The 10-year yield down 2 basis points this morning, 4.34%, and that's a bigger rally than what we're seeing elsewhere in Europe. The 10-year French and German yields holding pretty steady today. The euro is 0.1% weaker against the dollar at 117.61. The pound also a touch weaker at 134.56 this morning.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Stephen Carroll, and this is Bloomberg.
As a place to do business, the UK stands apart. Not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading financial centres, the UK puts over £10 trillion to work every day, fueling innovation across every sector. Home to 4 of the world's top universities, it provides exceptional talent and breakthrough research. This sits alongside a clear 10-year industrial strategy, unlocking smarter regulation and making it faster and easier to operate. Stability with dynamism. Global connectivity with local depth. It all adds up to greater growth. Visit business.gov.uk/growth.
The news doesn't stop on the weekends.
Context changes constantly. And now Bloomberg is the place to stay on top of it all.
Hi, I'm David Gura. Join us every Saturday and Sunday for the new Bloomberg This Weekend.
I'm Christina Ruffini. We'll bring you the latest headlines, in-depth analysis, and big interviews. All the stories that hit home on your days off.
And I'm Lisa Mateo. Watch and listen to Bloomberg This Weekend for thoughtful, enlightening conversations about business, lifestyle, people, and culture.
On Saturday mornings, we put the past week's events into context, examining what happened in the markets and the world.
Then on Sundays, we speak with journalists, columnists, and key political figures to prepare you for the week ahead.
Join us as soon as you wake up and bring us with you wherever your weekend plans take you.
Watch us on Bloomberg Television. Listen on Bloomberg Radio. Stream the show.
I guess I have a few questions based strictly off what President Trump said. First, to have a meaningful deal, is 10 days enough time?
Well, I think it depends on how you define meaningful. If you look at the deal that the Trump administration fashioned around Gaza, that was a meaningful deal, but it was short on details. And so that could be what President Trump has in mind. If he's thinking of a meaningful deal like the deal that the Obama administration, the JCPOA, did with Iran many years ago, that was a document over 1,000 pages long, many months, years in the making. That kind of thing is not obviously possible. The Iranians are used to negotiating, haggling over very really every detail, and the pace and the pressure with which the Trump administration and the president in particular want to see actions and deals made. These two things are very much at odds with one another, and certainly a 10-day time frame could allow for a deal in principle, but certainly won't allow for a detailed scope.
Megan, it's good to see you, and I'm glad you're back with us on this day of days. I'm seeing 2003 mentioned in stories all over the terminal and all over the internet today. The biggest military buildup since the invasion that you helped to prepare, the invasion of Iraq in 2003. Have we ever seen this much hardware assembled in one place without it being used?
Sure, and I should say that I was there. I went to Kuwait before the invasion of Kuwait, but at the time I was reasonably junior, but certainly I was there for it and part of it. This, as you pointed out, this is the largest military buildup of American force and firepower that the world has seen since 2003. And I think it really raises questions about what kind of action could the Trump administration be preparing. Certainly, this wouldn't be the first time that the Trump administration, or President Trump, I should say, would be using force in Iran. But the nature of this buildup and the lack of clarity around exactly what the objective would be in this particular use of force, I think is adding to some of the insecurity around the moment, is adding to the global jitters. Also, the questions around Iran's retaliation. I think in the past, what we've seen, whether it was the assassination of Qasem Soleimani in the first Trump administration or the strikes on Iran's nuclear facilities last summer, those were very specific and targeted military actions, and Iranian response was quite contained. I think the possibility is real that we'd be looking at something that was larger, more uncertain, and less contained. Of course, as President Trump made clear today, there's still the possibility of a deal on the table, and it could continue to be the case that this show of military force is to increase the pressure on the Iranians, because no doubt there's still a large gap between the U.S. and Iran on what each side would like to see in a deal.
Well, and so certainly there is some flexing happening, Megan, of America's military might. But to your point on potential retaliation from Iran, what military might does Iran have right now, knowing that we did do damage back in June with the first strike? What is their capability to respond? Where do you think Iran could target?
Sure, Kayleigh, thanks for that question. First of all, your viewers should have no doubt that the U.S. is militarily superior in every dimension that is meaningful in a long-term sense here. Where Iran still does have capabilities, it still has missile capabilities, and that is one of the issues that the Trump administration would like to see, and the Israelis and others would like to see be part of a deal, which hasn't been the case in the past deal that has been solely related to nuclear issues. So it still has some missile capabilities, and that would likely be the focus of any initial American strike. What is causing concern is that Iran's remaining capabilities could still have an impact on America's Gulf friends and partners. So the region, I think, feels on edge and very vulnerable. There's also Iran, as your viewers will know, staged a military exercise in the Straits of Hormuz. That is, of course, also making people quite nervous, because that's, of course, where 20% of the world's daily oil consumption passes through that strait. Now, when we've seen the military action that I referred to earlier unfold in the Gulf over the last months and even years, but particularly in the last year, all that military operation didn't really raise the price of oil because it didn't disrupt supplies. Something that brought conflict into the Gulf, and particularly into the Straits of Hormuz, would certainly disrupt supplies. And the markets are telling us that they really do distinguish between military force and military force that disrupts oil supplies.
Megan, we talked about your experience in 2003. 4 years later, you are credited with being one of the original advocates of the surge strategy. And I'm wondering what your advice would be to the administration when it comes to the day after conversation. What are they mapping out for scenarios, and what should they be prepared for?
Well, I think this gets to the point I made earlier about what is the objective that the Trump administration would be seeking. There's several objectives that they may embrace, and it's not entirely clear to someone who's not involved in the internal discussions. Certainly one objective could feasibly be regime change, and that makes it akin to the American action in 2003 that got rid of Saddam Hussein from Iraq. Now, in the last year, President Trump has demonstrated the kind of an allergy to that kind of intervention because of the really open-endedness of that. And certainly that is one of the scenarios that I think deserves very significant attention, is what would happen if one of two things happened. What would happen if U.S. military force was targeting the regime, the supreme leader, elements of the IRGC that brought about a regime collapse? Now, certainly my experience in Iraq and that of many, many other Americans and our coalition allies was that collapse takes a very, very long time to rebuild, to reconstitute, and opens up a security vacuum that can have a lot of unanticipated consequences. So I find it hard to manage that a collapse of the regime wouldn't require a much more robust American engagement in Iran for potentially a much longer period, something way beyond, I think, the American people are interested in right now. Whether the Trump administration has had a relationship with some members of the IRGC that could take over and something that would be more seamless and less disruptive is only probably known to the president and his closest advisors.
Well, so Megan, it sounds like you're saying in our final minute here that there is a risk that we accidentally tumble into another, if not forever war, forever presence.
I think there is a risk. I wouldn't say it is the central risk right now. My guess is if we look at President Trump's his propensity to use military force, it has always been quite targeted for a specific objective without the intention to get involved over the longer term. And so my near-term expectation would be, first, a real push for a deal. I don't take the 10-day window to be definitive. Certainly there's been flexibility on timing on a lot of these conflicts. So look at Ukraine, which was going to be solved, in the hours running up to the inauguration. So I think the desire for a deal is going to be real. It depends if the Iranians can show more flexibility. Secondly, if there is military force, I think it'll go after the ballistic missiles. I think the idea that the Trump administration would want to topple the regime without any real prospect for stabilizing the country is something that I think is a risk, but not the largest risk that we are exposed to right now.
Build out data center capacity and build its AI business is voracious, and they need as much money as they can get their hands on, so having more money up front makes sense. I think the second, perhaps from an NVIDIA perspective, is that with OpenAI thinking about going public, maybe the kind of valuation of this company could continue to go up quite substantially over time. And so under the original deal, because the equity transfer was staged with each $10 billion of investment, maybe they kind of decided that sticking to that original deal would have left them with less of an equity investment over time than putting $30 billion up front. I guess the short answer, we don't really know yet what the kind of full thinking is, but I think, to me at least, the fact they're going with $30 billion sooner is perhaps a little bit surprising, and perhaps a kind of confirmation of their confidence in the OpenAI partnership.
Well, can you shed a little bit of light on the intrigue part of this and how the companies are talking about each other, particularly the heads of those companies, Jensen Huang and Sam Altman?
Yeah, I think they're both talking about each other kind of very positively. I think certainly Sam Altman in India has sought to downplay the sense of any rift between the companies, and that they still anticipate NVIDIA being a very important partner, and they'll continue to be a very big customer of NVIDIA. Obviously, one of the issues there has been that OpenAI has been rumoured to be looking at developing its own AI accelerators, and they're looking to diversify their purchases away from NVIDIA to companies such as AMD and Broadcom. So I think there's a balance there, and I think certainly again from the NVIDIA side, they're also looking to kind of hedge their bets. Obviously, OpenAI is an incredibly strong player in the AI market, but we have also Anthropic and Gemini and other platforms out there, and so NVIDIA is also looking to kind of make sure that it balances its exposure across all of the players, because they don't really know for sure which one's going to turn out to be the long-term winner.
All right, Matt Bloxham of Bloomberg Intelligence, thanks so much for joining us this morning. And coming up, we'll push ahead to PCE with Kayla Cedar of State Street. That's up next here on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's 5:30 a.m. in New York City. Good morning. I'm Tyler Kendall in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day ahead. Oil down after rallying to a 6-month high as President Trump gives Iran 15 days to reach a deal. Blue Owl sells a $1.4 billion portfolio of loans to help pay out investors amid concerns around private credit risks. And markets await the latest PCE data and a possible Supreme Court ruling on President Trump's tariffs. All right, happy Friday. Let's take a look at the markets. Futures pointed higher after heightened geopolitical tensions pushed stocks down yesterday. S&P futures up 0.2%. NASDAQ 100 futures up 0.3%. And small caps pushing higher as well. Let's also check in on the bond market as we await this flurry of economic data here in the U.S. The GDP number, also that December PCE inflation report, delayed because of the U.S. government shutdown, meaning the last government shutdown, not the partial one that we're currently in. On the long end, the 30-year yield trading at 4.70. On the short end, the 2-year yield trading at 3.47, and that 10-year yield just above 407, not up even a basis point. For some stocks to watch this morning, we're going to head over to London and Abir Abu Omar for those details. Hey, Abir.
Good morning, Tyler. Let's start with the world's top mining company. Newmont is down a little bit this morning. Not a little bit. It's trimmed some of those losses from earlier, but it's down quite a bit this morning, 3% almost, and that's on the back of two things. So the quarterly results showed profit that was actually good yesterday, but one thing that the company pointed out was the fact that it's going to be churning out less gold this year on the back of a closure in one of its mines. So investors not looking favorably at that news, despite the solid outlook on profit. That's Newmont down 3% almost this morning. Moving on to Open Door, this digital real estate company is benefiting quite a bit from earnings that it announced yesterday, up 18.6%, adding to those gains earlier in the pre-trade session this morning. This is one of those companies that has benefited from this AI hype that we've seen in the market. We have the winners and losers of the AI disruption. Open Door has really repositioned itself to win from the AI hype. And then finally, Moncler already trading in Europe this morning, the biggest, or was the biggest percentage gainer in the stock 600 this morning, up 12.1%, trimming some of those gains, but it's on the back of solid earnings and strong Chinese demand. Tyler, back to you.
All right, Abir, thanks so much. We're now less than 3 hours away from the December PCE inflation report, and to go through it all, we're joined now by Stuart Paul of Bloomberg Economics for a preview. So, Stuart, let's get into this and what we're expecting, because we already got part of the picture right from the U.S. retail sales in December, which were on a whole pretty flat. So when we get this report, tell me, what are you looking for when it comes to services spending? And we keep in mind whether or not consumers are rotating away from, say, tariff-impacted goods.
That's exactly the entire question in this report. We have all the inflation inputs from CPI and PPI. As you said, we got a lot of the spending picture from retail sales, where spending on goods was just absolutely dismal. When we look at services spending, it looks as though it was a bit more robust, particularly in food services and accommodations. And we're also seeing some of that bid show up in prices. So when we think about the rotation, not only are we seeing some additional substitution away from goods and towards services, we're even seeing some of that spending show up in additional inflation pressure for things like discretionary services, dining out, and even things like video streaming. People are willing to spend more on Disney Plus, given the fact that they're not going to buy a new DVD player. No one's buying a DVD player, but given the fact that they're not going to buy a new imported TV, for example.
I also have to get your thoughts on GDP, because you and the team at Bloomberg Economics are estimating 3% growth for the fourth quarter. But this was, of course, the quarter that was most strongly impacted by the longest government shutdown in U.S. history. What would growth have been like if there wasn't that shutdown? And what are you predicting for the first quarter as we see that reopening effect?
I think that the fourth quarter would have looked a lot like the third quarter, closer to 4.5% growth had we not had the government shutdown. By our estimates, the government shutdown reduced economic activity by about $100 billion during the quarter. On an annualized basis, that shaves off about 1.3 percentage points from the growth pace that we're going to see in the fourth quarter. So again, a little bit of an unforced error, slowing down economic activity. Looking ahead to the first quarter, though, we expect to see basically all of that come back online. And a lot of it is showing up not just in government spending in the first quarter, tax refunds and other sort of stimulus programs, but we're also seeing a lot of investment enthusiasm, and that's going to help to buoy growth really throughout 2026.
Well, I'm glad that you brought up tax refunds because it seems like this White House is really banking on the larger than normal refunds under the One Big Beautiful Bill for a GDP boost. But do we know, are consumers going to spend that money, or are they going to pay off their bills or save it?
It's a great question. Right now, the personal savings rate is super low at about 3.5%. That's about 3 percentage points below the pre-COVID norm. Folks not only accumulated and then completely ran down their savings, they drew down their savings, and they've been under saving for well over a year at this point. I would not be surprised to see consumers sock away some additional cash when they get their tax refunds. But given how stretched thin people are right now, just to keep up their spending habit, they might need to put some of that cash to work once they get those checks.
All right. Stuart Paul of Bloomberg Economics. Stuart, thanks so much, as always. Joining us now for more is Kayla Cedar, macro multi-asset strategist at State Street. Kayla, thanks so much for being here. Let's just follow on the heels of what we were just discussing with Stuart. We're getting this flurry of economic data today. Can you just lay out to start what your base case is for Fed rate cuts this year as we're gleaning a little bit more about the economic picture?
Absolutely, and thanks so much for having me today. I think the most important thing when it comes to the future path of Fed cuts is what's happening on the inflation front. Part of that is because we've seen a bit more stabilization on the labor market side of things. So focus then switches to, is inflation still sticky or not? And one thing that really stood out to me in the most recent CPI print was that we still see stickiness within that super core component of CPI. And so that's really saying that even though there's been less focus on goods, which makes sense, especially if we expect tariff prices to be passed through over time, but that shifts the focus to the service side. And the service spending is still pretty strong. And so I think what that means is that we're going to be on pause for a while moving forward in terms of Fed cuts.
Well, Kayla, I wanted to ask you about your most recent research note where you're writing that, quote, although institutional investors are already overweight risky assets, it's clear they're content to add more exposure. To really change the narrative, we would need to see a rise in systemic risk that would catalyze a liquidity and eventually credit event. You're talking about how we would need to see this rise in systemic risk to change that narrative. But when we get news like Blue Owl yesterday halting redemptions, are there potential ripple effects here that could increase that systemic risk?
Absolutely. This is something that's really important to keep an eye on. I think when it comes to some of this risk, we have to think, A, is it just concentrated to the AI story? And if it is, where in that is it just software and concerns around disruption to that AI will have on certain parts of the market? Or is there a bigger story here? So there's a couple of things we've been looking at. One is when we think about or where we see measurements in rising credit risk, it's really been concentrated in that software space. And so what that tells us is that it's not really rising in places like semis, tech hardware, and that means that the AI story really isn't over just yet. We see this in our institutional data as well, because although institutional investors have really cut their positioning in software and are now underweight, they've been adding exposure to semis and tech hardware that were already overweight at the beginning of this year. So we still see comfort in the overall AI story. Now, what about overall, market risk? We still see signals that systemic risk is actually quite low. What is high is turbulence and volatility, and that's where some of the risk is coming from. On the systemic risk side, the next question, though, is, okay, is that going to change, and what would catalyze that to change? One thing we really keep an eye on that front is liquidity, and we still see solid liquidity environment. We still see signs that liquidity is getting to where it needs to go, and capital and credit are still flowing through the overall economy. So that's a good sign. I would say, there are concerns out there on the credit front, but overall, the overall environment is still quite robust.
Well, if we stick with AI and we know that the tech sector has been a cornerstone of U.S. exceptionalism, I'm wondering, do you see this evolution and the spread of AI impacting this, and more broadly, the relative attractiveness of U.S. assets to the rest of the world?
There has been this sell U.S. narrative over the past year. We haven't seen that too much. And I guess I caveat that with, we have seen increases in exposure to other equity markets. However, the U.S. is still the biggest overweight by far. And so I think that context is really important to keep in mind. What drives that is fundamentals and profitability and earnings. And we still see the strongest earnings growth coming out of the U.S. relative to the rest of the world. And that has a lot to do with this AI story and this tech story. Even though tech has really been hit this year, especially that software space, when we look at large cap tech fundamentals, we still see rising earnings expectation, we still see solid margins, and we still see really strong revenues. So on that front, I think this will still support this overall U.S. equity market moving forward.
Well, if we keep with the theme of our eyes abroad, we are watching very closely those escalating tensions between the U.S. and Iran. I'm wondering, Kayla, how do you hedge geopolitical risk right now?
Absolutely. That's something that is front and center. I think that's something that's a little bit more challenging to do at the moment because there's just so much uncertainty around what that would look like and a lot of volatility on the geopolitical front. I think what makes most sense is, stick with those solid quality, high quality parts of the market. Additionally, when we look at some of the rotation or broadening out that we've seen within equity markets this year, we have seen a little bit of an increase in energy. Now, I would caveat that that's not a huge overweight. And also when we look at earnings expectations in that part of the market, that's not super solid. So if you are looking for more of a cyclical rotation, I really like more parts like industrials where we've seen fundamentals start to improve as well. So, although there's a lot of geopolitical uncertainty out there, I think when it comes to asset allocation, sticking with high quality and sticking with parts of the market that have stronger fundamentals makes sense here because there's a lot of volatility on the geopolitical side of things.
All right, Kayla Cedar of State Street, thank you for joining this morning. And now to some other top stories trending on the terminal. HSBC cuts 10% of its U.S.-based debt capital markets team. Sources say at least 6 people in New York were let go on Thursday. That includes 1 managing director and 2 directors. The bank unveiled a cost-cutting program last year. It reports earnings Wednesday of next week. And shares of Ray-Ban maker EssilorLuxottica are on track for their worst week in almost 4 years. The slump is fueled by potential competition from Apple on smart glasses. Apple is planning to launch its own AI-powered eyewear in 2027. And President Trump is directing the release of documents related to aliens and UFOs. He accused former President Obama of giving away classified information when he discussed the idea of extraterrestrial life in a recent podcast appearance. The U.S. intelligence community released a report in 2021 detailing what it knew about unidentified flying objects that have been spotted by military pilots. The unclassified report contained few conclusive answers. And coming up, President Trump ramping up pressure on Iran with U.S. military stationing in the Middle East. Stick with us. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What word have you not heard over the last 2 weeks? Affordability. Because I've won affordability.
President Trump declaring victory on the cost concerns that have become a focal point of the upcoming midterm elections after polls showed voters have soured on his economic policies. Joining us now for more from Washington is Jonathan Tamari of Bloomberg Government. So, John, just first off, is that true when it comes to cost concerns? And also, is this a shift for the White House that in the past few months has really been playing defense when it comes to the issue of affordability?
So, there's data that suggests that, yes, inflation is cooling down a bit, but it's certainly not the kind of feeling that you're hearing from voters or that we're seeing from voters in polls, the sense that all of a sudden things are fixed and that they feel good about their own economic situation. Most polls suggest people are still pretty anxious, still pretty upset with the way things are going. And so I do think this is different than what you might expect, where the White House has said, listen, we inherited a mess, we're making progress, but there's still work to do. He's basically telling voters, look, the problem is over, don't worry about it. We saw in the last administration that approach did not work for them. It's a tough thing to tell voters not to feel anxious when they do feel concerned about their own economic situation.
Well, John, we're waiting today on a potential Supreme Court decision, and I'm wondering what you're hearing, not how the court will decide, because there's no way of knowing that, but how the Trump administration would ultimately react if their broad-based IEEPA tariffs are struck down. Because when I'm in Washington, there seems to be this divide emerging. On one hand, some feel that this could be a viable off-ramp for an administration playing defense on these affordability issues, and tariffs are such a core of their economic agenda. But on the other hand, we've heard time and time again from U.S. officials that they have all these other federal authorities, those other tools in the toolkit to use to impose tariffs if they can't use IEEPA.
Yeah, I would be surprised if we saw President Trump just easily back down if they lose at the Supreme Court. This has been core to his political identity pretty much since he first started running, and certainly core to his second-term agenda. He does have some options. They're not necessarily as powerful or as immediate, but he could impose trade licensing fees. There are provisions within different existing laws, the Trade Act, the Trade Expansion Act, where he could reimpose tariffs or attempt to under those provisions, but they're a little more limited. There might be a time delay into how quickly he can impose those tariffs. There might be limits on how far he could go if the Supreme Court does strike down his power on this. But I don't think he'll just back away very easily, even if he does lose at the court.
John, from domestic to foreign policy, you cover Capitol Hill very closely. And as we have our eye towards the Middle East and whether or not the White House is going to take military action against Iran, I'm wondering how Congress has been approaching the possibility of that when we have seen in recent months, for example, some lawmakers push back about the president's foreign policy initiatives when they're not conferred with ahead of time.
Yeah, I mean, We have seen that, as you mentioned, in Venezuela and some other instances where some lawmakers did raise concerns, but we're not seeing that right now on the Iran issue in the same way. Democrats are certainly saying that Congress should be involved here, that any major military action should require approval by Congress. There's maybe one Republican, Thomas Massie, who's raised objections, also Senator Rand Paul, so more than one, but there's not been a big outcry from Capitol Hill. Some of the Republicans who raised concerns about past actions are saying they're okay right now on Iran. So as has happened throughout this presidency, Congress looks likely to just kind of sit back and allow him to do what he wants, at least initially, and then maybe react depending on kind of what things look like going forward.
All right. Jonathan Tamari covers all things politics for Bloomberg Government in Washington. John, thank you. And Blue Owl is said to have sold its $1.4 billion portfolio of loans as the asset manager attempts to pay out investors in a fund that was hit with a wave of redemptions last year. For more, we're going to welcome back Bloomberg's Silas Brown in London. So, Silas, we were talking about this earlier in the hour, but as Blue Owl finds this liquidity, can you talk about what the mixed picture might be here for investors?
Yeah, it's interesting because I think, if you look in a very narrow way, I think this is a reasonably good result for investors. I mean, they're getting payouts at close to par on a kind of legacy fund that had experienced a lot of challenges before, and a whole series of plans to kind of get investor capital back that have since fallen by the wayside. So I think in the kind of narrowest interpretation, I think this is a good result, and certainly many analysts think the same thing. I think where the challenge emerges is, firstly, it was a slightly chaotic conclusion to this episode, and then secondly, I think, and quite importantly, what it's exposing is a kind of vulnerability for private credit, a market that has touted itself as immune to risks like duration mismatches and liquidity mismatches. And I think this is a kind of warning shot in a way for the broader market about the trials and tribulations of having to distribute cash back to investors in a more febrile environment.
All right, Bloomberg Silas Brown, thank you so much. And coming up, a host of economic data and Fed Speak on deck. Your day ahead is next. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
This is Bloomberg Brief. I'm Tyler Kendall in New York. Now look at what's ahead for today. First up, PCE, GDP, and personal income and spending all at 8:30 a.m. Eastern. That's followed by UMich sentiment survey at 10 a.m. Eastern and FedSpeak from Bostic and Logan throughout the day. Now let's take a check on some micro movers. Opendoor extending post-earning gains after its revenue beat the street's estimate. We also have Grail plunging as the healthcare company's cancer screener failed to meet a key goal in a test done by the UK's National Health Service. And also Newmont Mining down as the miner sees a decline in gold output for the year. Shares down 2.83%. Let's also check in on the broader markets today. S&P futures pointed higher, up about 0.2%. The dollar right now looking pretty flat, and the 10-year trading at 4.06. That's it for Bloomberg Brief this morning. Surveillance is up ahead. I'm Tyler Kendall in for Vonnie Quinn, and this is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Every decade, there's more evolution out of the S&P 500.
The three largest sectors representing the S&P are down on the year.
This is the most transformative trend that I believe we will see in our lifetime.
I wouldn't be surprised if we start to see a little bit of move back into tech.
Trying to predict when these things are going to pop is a fool's game.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, shaken by geopolitics.
What is the goal if there is a U.S. military strike?
Well, we're going to make a deal, or we're going to get a deal one way or the other. I would think that would be enough time, 10, 15 days, pretty much maximum.
The high-pressure campaign on Iran keeping investors very much on edge. As some private credit firms are struggling to regain confidence, economists are looking for the latest read on the U.S. economy, the latest GDP data, just around the corner.
So today's, Jonathan, is really filled with data and deadlines. And deadlines when it comes to this administration. The president yesterday putting a time frame on when a deal needs to be done with Tehran or potentially a strike. He said 10 to 15 days, and he talked about either make a deal or, quote, really bad things will happen. What we need to remember, though, last summer when the president gave a deadline of about 2 weeks, what happened within days? B-2 bombers flew over Iran and struck their nuclear facilities. So potentially this is also a tactic that he is using to try to distract the Iranian regime.
So crude responded to this. It's lower this morning by about 0.5% on Brent and WTI, but the rally we've seen over the previous 2 days, 6% plus. Clearly the equipment in the region, it's all about the optics. You want to signal maximum pressure and a bunch of different options. But this is outside of the president's traditional playbook. And you and I have talked about that repeatedly. The president's playbook is targeted fast, a clear objective that ultimately leads to a period of de-escalation. It's not about getting bogged down in a regional war.
And it's really hard to do that with Iran because we know what immediately their tactics are going to be in terms of response and also what the U.S. wants them to do in terms of a deal. These three red lines. Iran has never had that sort of engagement and have never had that appetite to come to the table. Wall Street Journal yesterday said what the president is weighing right now is an initial limited military strike to force his demands on this deal as a first step designed to pressure Iran. That would be the first initial strike. But then what happens after? That's the question.
So we've got to stay on top of this story and this one too. Check out Blue Owl in the pre-market. Struggling to recover following yesterday's slide. We're down by 2%, down 6 yesterday. This is what we've learned through the week so far. Blue Owl said it's restricting withdrawals from one of its retail-focused private credit funds, so this is about redemptions. In addition to that, they've found 4 buyers for a portfolio of loans to help pay out investors, 3 of North America's biggest pension funds, and the headline, and a big headline here, its own insurance firm, which will come across to many as somewhat controversial. This is what the company's got to say. Contrary to what has been reported, we are not halting investor liquidity, we're accelerating the return of capital. There is going to be plenty of questions about this, and we can talk about Blue Owl as a firm. We can talk about private credit markets. But the number one question I think a lot of people will have for the bull case for the U.S. economy, private markets have driven this economy for quite a while. What happens if that credit availability starts to dry up? And that's a conversation we'll have in just a moment.
That's a huge conversation, and it's very concerning to a lot of individuals looking at this. The Blue Owl CEO also said we're simply changing the method by which we provide redemptions. This is why a lot of people have concern about what is actually going on. And you know what, Jonathan? It's always peculiar when J.P. Morgan's Jamie Dimon, October of last year, talked about cockroaches in the private credit market. And then what did we hear yesterday from Senator Elizabeth Warren on the same side of Jamie Dimon, talking about how this is a concern and concern that she has as a senator for retail investors that are involved in this space.
We've got a lot to talk about this morning. Coming up, we'll catch up with George Concalves of MUFG, with investors very much on edge. Stephen Cook of the Council on Foreign Relations as the U.S. moves closer to striking Iran. And John Hill of Barclays ahead of the latest read on inflation. We begin this hour with stocks struggling to bounce, with a fresh slate of data very much on deck. George Concalves of MUFG writing, there is high conviction it's going to be about a year. The jury is still out, and we believe markets will resolve this inconsistency. George joins us now for more. George, good morning.
Good morning.
You do not seem to buy the high conviction outlook that this economy is going to rally and rally hard.
Yeah, no, look, I think it's all about the whole starting points, which has been a big theme of ours. And, we, like your intro about the private credit, we have a lot of moving parts. We have this idea that we're going to rotate out of the really highly valued sectors like technology into the industries that need it. Those industries have been kind of kept afloat by low rates over the last 10, 15 years and by a lot of private credit as well. And so, like, if you start to kind of have wrinkles and some sort of constraint on credit in those areas, middle market type lending and small businesses will suffer from that. So, like, how can you rotate?
So
at least in the
through
U.S.
this piece by piece, because this is an important story. And whenever we see issues like this emerge, and we've seen issues like this emerge repeatedly over the last decade or so, you'll see the comparisons, you'll hear the comparisons to 2007, right. 2008. Are the canaries beginning to fall in the private market coal mine? What's your response to that kind of language, that kind of coverage over the past few days?
Look, I think it's worth monitoring. But this really starts, to Anne-Marie's point, like really last year in October, right, with just the focus around the actual individual credits into the actual providers of the credit. At the same time, we have this big focus around potentially bank deregulation. And maybe this is kind of like part and parcel, fait accompli from 15, 18 years of banks being overcapitalized, not really lending to the real economy, and that forced private credit to take the place. And maybe we're coming full circle on that.
We've heard repeatedly coming out of the pandemic that corporate balance sheets are a whole lot stronger. The consumer balance sheets are a whole lot stronger. Are you seeing stress on the consumer side starting to emerge as well? Or have you got the all clear on that front?
I mean, you cannot look at data in aggregate. That's the whole problem. It's been something we've all been talking about, the K-shaped economy. The 80, 90% are stressed. We can't not deny that. And so that's why it comes down to collateral, market valuations, and can we really truly have that perfect rotation into the industries that need capital?
Based on the conversation we've had and that you've had with your clients, would you have guessed that we're only 2% below all-time highs on the S&P 500?
Yeah, listen, but at the same time, though, we've been coiling for quite some time. Really since October, November, we haven't gone anywhere, right? So with all this sort of optimism on growth...
There's a vicious rotation, though, beneath the surface. And to your point, the question we've got at the moment is whether that can be sustained into the more cyclical parts of the equity story. And maybe in conflict with that is what's developing in the bond market. The fact that yields have come down to 4% on 10s. Now, repeatedly, we've heard on this programme, there's not much oxygen down here, that we can't stay at these levels, that yields have to climb, have to bounce. Do you agree?
I don't agree.
Why?
Look, a number of reasons. We could take an even bigger zoom out. Look at what's happening in Japan. Japan's inflation's turned the corner. Japan's rates are starting to head lower. We're still a fungible global bond market, and people are looking for the highest yields. And so, you kind of couch that with what we still think the Fed's going to cut 3 times this year. And you kind of think about the concerns around fiscal. And look, today's announcement from the Supreme Court, whatever we get there, might have an impact on the bond market. But even then, there's at least a turn on the fiscal outlook. It looks a little bit better, more stable at a minimum. So you take away the fiscal sort of concerns on the bond market. Now you're back to pure fundamentals. And if you think about the rotation that's happening in the equity markets and you kind of compare and contrast to the bond market, it feels defensive. Why are bonds rallying at the same time as everyone's rotating?
George, why would we get a reaction, though, in the bond market if this administration has been clear for months that regardless of IEEPA, they will find other ways to enact their tariff policy?
That's true. It all depends on timing, rebuttal, and I just feel like you'll have a market reaction if it's sort of struck down, and we do think there was probably a plan B and plan C to your point, but I still think the market would react to it.
Why do you still see 3 rate cuts, even though we have individuals like Fed Governor Myron coming out and saying he is seeing, a more robust labor market than he was expecting, as well as goods inflation firming? Look,
goods inflation is a small part of the inflation basket. The disinflation that's happening in the housing market is still stalled. If we do ever get the housing market to open up, I still think prices head lower first before they head higher. That's still disinflationary. The Fed has been scared by inflation for the last couple of years. In many ways, they've done a disservice. They should have cut rates and been done. They should have been done by now. Ultimately, they should have been done. Those 3 cuts that I've been kind of having in the back of my mind for quite some time, they should have been done, and then they would have a much more level playing field to figure out where to go to next. The minute saying that they're thinking about hiking, that was too premature.
Well, let's get to the commitment to 2%. This is what they've got to say about things, that several participants cautioned that easing policy further in the context of elevated inflation could be misinterpreted as implying diminished policymaker commitment to the 2% inflation objective. Is that a misinterpretation or just reality? that they've been above target for 5 years, and ultimately
60 months, yes, 5 years.
The commitment to 2% has diminished. Isn't that the ultimate conclusion for most people?
It is, but also it's all about the outlook of where you think you're going to end up landing, right? They cut when inflation was even higher, right? They started cutting when inflation was even higher. So this idea that now they're kind of getting skittish around what the landing looks like, I think it's too premature.
You've heard what we've heard, and this is how it plays out in this program. People come on and we'll say to them, are the Federal Reserve officials, as they stand, going to cut interest rates? And they'll turn around and say no. But I expect an interest rate cut later this year, or I expect 2 or 3 interest rate cuts later this year. There is a belief that we've established a prolonged pause now on the FOMC until there's a change of leadership, and that once we get a change of leadership, the rate cuts begin again. Do you agree with that?
That's very convenient. That's the problem. Everyone puts all their views in the second half of the year because it gives you time to kind of think about it. Like, our view is more nuanced in the sense that this Fed, any Fed, will do the right thing if the data turns. And look, the jobs data that we've had up until now, it's not that great. And just to kind of bank on one number doesn't make any sense, especially if there's a high chance of it being revised in the subsequent months. So if we get a series of weaker jobs data and inflation still heading in the right direction, I wouldn't put past Chair Powell cutting at his last meeting.
George, you also had 4, though, originally priced in. And
right.
then a few weeks ago, you took it down to 3. Why?
Yep. I mean, look, the Fed obviously is, not showing a sense of urgency to cut rates, and the window does kind of compress as you move forward in time. And I still think that there's going to be a reluctance to cut right ahead of the midterms. So you get into this kind of late Q2. Not about being political. It's just more about when is it going to matter most. Like, you have to start easing sooner, and then you kind of see the net benefits of it.
Hey, George, it's good to see you. Thanks for dropping by.
Thanks
Lots to get through. George Goncalves there of MUFG. This morning at the front end of the curve, yields up by a single basis point, 347. Equities were positive on the S&P, then rolled over in the last 20 minutes or so. We're now just about unchanged on the session. With an update on stories worldwide, let's get your Bloomberg brief. Here it is with Yahara Anand. Hey, Yahara.
Hi, John. The United Kingdom recording its biggest budget surplus on record, revenue exceeding spending by over $40 billion in January, well above economic forecasts. The figures were boosted by a surge in inflows of capital gains tax and lower debt payments. Meanwhile, NVIDIA is close to finalizing a $30 billion investment in OpenAI. The Financial Times reporting this will replace the long-term $100 billion commitment the companies agreed to last year. Negotiations are in the final stages and could be finalized as early as this weekend. And a check on shares of Blue Owl. They are now falling 3% in the pre-market. The alternative investment firm saying it will restrict withdrawals from one of its retail-focused private credit funds. The company says the fund will instead return capital over time through loan repayments and asset sales, renewing questions about liquidity in private credit. That's Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. More from Yahara later this hour. Up next on the program, a final warning to Iran.
What is the goal if there is a U.S. military
Well, we're going to make a deal, or we're going to get a deal one way or the other. 10, 15 days, pretty much maximum.
Up next, we'll catch up with Stephen Cook of the Council on Foreign Relations. Live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
This is how we're set up going into the weekend. Data at 8:30 Eastern Time. PCE, GDP, and a whole lot more. Look out for that. After that, UMich consumer confidence going into the weekend. Consumer confidence has been rock bottom on some readings. We're looking for a rebound. I think we're all hoping for a rebound for the year ahead. Let's turn to the equity market. That bounce in the equity market, can it hold? Unchanged this morning on the S&P. Going nowhere on the Nasdaq. Slightly lower on the Russell. Investors on edge for a bunch of reasons. Private markets will talk about that, but also concerns about the Middle East. Check out crude. Following a 6% plus move for the previous 2 days, we're at 66 on WTI. Brent just north of 71.
Well, there's heightened geopolitical worries right now when it comes to the Middle East and the buildup of military hardware in that region. It looks like the president could be poised to make a decision to strike Iran or use it as a negotiating tactic to bring them to the table. Either way, the president gave a deadline, 10 to 15 days. He said in some way, a deal will be done.
Let's stay on that story. Under surveillance this morning, a final warning to Iran.
What is the goal if there is a U.S. military
Well, we're
strike?
either make a deal or we're going to get a deal one way or the other. We're either going to get a deal or it's going to be unfortunate for them. I would think that would be enough time, 10, 15 days, pretty much maximum.
So here's the latest this morning. The U.S. amassing its largest military buildup in decades around Iran, with current and former officials saying the Trump administration appears ready for strikes on military and strategic targets. Jonathan Tamari of Bloomberg Government joins us now from Washington for more. Jonathan, we often throw this around and ask people to define success, but I'm struggling to define success on this front. What would success actually look like if the administration goes forward with military action?
I think that's one of the really big questions that a lot of people are asking, because they have not been making a public case to the country about what their goals are here, what they would see as success, why they've chosen now to have this large buildup. We know that the president wants to end or decimate the nuclear program. He's been trying that ever since he got back into office. But what exactly that looks like? Does he want regime change? Is there a certain measurements of where their nuclear program stands? That's all unclear. It could be part of his negotiating tactic to keep people off balance, but it also leaves the public and much of Congress in the dark about what exactly the goal is here.
So, Jonathan, this is really important. The president, I think, articulated a pretty clear objective when they went into Caracas. It was very clear. It was about removing Maduro. Whether you believe that should have happened or not, that's a different conversation. The objective was very clear. On this front, destabilizing the regime, taking out the regime, eliminating military capabilities, there's a whole range of things. I'm struggling to understand why they're almost refusing to articulate clearly what they want to achieve in Iran.
This has been the president's tactic, I think, on many of these foreign affairs issues in his second term. He believes he's enacting and basically facing the consequences later. He believes he's got the power to do it. And I think there's a certain appeal in the fact that he has had a number of strikes, military actions, Venezuela being probably the most prominent one, where he has gotten very quick results, has not had to go through, the process and the delays and the bureaucratic situation that you get when you go through Congress. I think he likes the fact that he's able to get very quick results, very positive results so far. But again, as we've pointed out here, this is we're talking about a different thing with the level of buildup that's happening here, with an involvement so far overseas and an uncertain outcome and an uncertain path of what happens if a conflict does begin.
Jonathan, appreciate your time. As always, down in Washington, Jonathan Tamari there. Joining us to discuss is Stephen Cook, the Senior Middle East Fellow at CFR. Stephen, welcome back to the programme. I asked Jonathan, our colleague, what does success look like? Struggled to answer. I think most people do. But there's an additional question we've all got to ask as well. What is success And are the risks of pursuing it worth it? What's the answer to that, Stephen?
Well, first, on the question of success, the success is anything that President Trump defines it as. And I think that that's the issue here, and that's what I think people are struggling with. He operates in a totally different foreign policy level than most of us who've grown up around the U.S. foreign policy establishment, which is he could very well order the strikes, and however they come out, he'll declare it a success, whether it's regime change or attacking the Iran nuclear program. Now, you asked a very important question about the risks. The risks are, of course, one, that it does not work and that the regime remains in place, retaliates against American partners in the region, fires on American forces in the region, and we're often running into a broader regional war. That is, I think, the worst case scenario for the United States. The Iranians are greatly weakened, but the Iranians still have the ability to cause a lot of trouble around the region. So if the United States goes, it's going to have to be sure that it's going to be able to affect the kinds of changes it's seeking. The question is, what are those changes? Is it removing the nuclear program, which, by the way, last June, the president said was totally obliterated? Is it regime change? Is it going after the ballistic missile program, as the Israelis have been advising? We won't know if and when he orders those strikes.
Stephen, if there is a strike, what do you expect the Iranians to do immediately in terms of retaliation?
Yeah, they have been full of bravado in the last week. They conducted an exercise for several hours in the Strait of Hormuz, a very strategic waterway that connects the Persian Gulf and the Indian Ocean. They have threatened to rain missiles down on Tel Aviv. I think that is probably the most likely response from the Iranians, which is why the president has ordered the USS Gerald R. Ford and its carrier battle group into the region. That group of ships, along with the USS Lincoln, provide and augment air defense systems for Israel's already robust air defense systems and provides air cover for America's partners in the Gulf. But the Iranians are limited in terms of their ability to take on the United States. So that's why it seems likely they'll use what remains of their ballistic missile force to try to do a lot of damage to Israel and perhaps other partners in the region.
When the USS Gerald R. Ford arrives this weekend, it's going to be a massive military buildup. Do you think that buildup is enough for the Iranians to come to the table in earnest on the three top issues this administration has outlined: ballistic missiles, nuclear, as well as money to proxies?
Well, that would probably be the best possible outcome for the Iranians. But so far, at least publicly, they are digging in. They are saying that they will retain their right to enrich. They're willing to negotiate enrichment around the margins. They've come up with some ideas about a pause, which really doesn't matter, shipping enriched uranium out of the country. But I think the theory is amass a lot of force. If the Iranians don't capitulate, then you really do have to use that force, because otherwise your credibility is blown unless you use it. And the president has been clear. They either come to terms within the next 10 or 15 days, or he's going to use that force.
What do you think the outreach has been between the administration and allies in the region, Saudi Arabia, UAE, and Israel as well? On the oil front, do you think the OPEC members, if Iran starts to strike some tankers or close the Strait of Hormuz, are they willing to get some more exports on the market to keep prices down?
Certainly think that the Saudis and the Emiratis, who have said that they will not participate in American strikes on Iran, will definitely play ball on the oil front. First, I think there's a lot of American force in the region, so whatever disruptions there might be to the oil market, it'll be temporary. But of course, the Iranians have been putting oil on the market despite being under heavy sanction. But I do think we are at a moment where the Saudis and the Emiratis, despite Saudi financial and fiscal troubles, would play ball if it does mean a positive change to Iran.
How close is coordination right now between Israel and the United States? Because as you said, if there's going to be a retaliation, it's going to be across the Israeli skies.
Yeah, there is a very significant amount of coordination. There has always been a significant amount of coordination. And at these moments, the United States and Israel are working hand in hand. The Israelis have said that, though, this is going to be an American operation and they are going to be the wingman for the operation. There's also close coordination with other members of CENTCOM. If you look at where the United States is moving assets, it is throughout the region. So countries, although they are somewhat reluctant to publicly say that they support or will participate in this operation should it come to pass, are nevertheless keeping up with their responsibilities to CENTCOM and opening access to their bases and allowing the United States to operate from those bases.
Hey, Stephen, always good to see you. Thanks for your insight.
Great to see you.
And sharing some of your experience as well. Stephen Cook there at the Council on Foreign Relations. This was the week where things got real for financial markets and crude started to respond, particularly over the past few days. One off the back of the Axios story a few days ago on Iran, which read as following. The Trump administration is closer to a major war in the Middle East than most Americans realize. It could begin very soon. And then this from the Journal in the last 24 hours, which gives you a better idea of what the first move could look like. The president is weighing an additional initial limited military strike on Iran to force it to meet his demands for a nuclear deal.
So he might have that initial strike to try to force the Iranians to the table. And they say, the Wall Street Journal's reporting is that this target would be a few military or government sites. The question is, if Trump was to take that action, is it enough to force the Iranians to the table on 3 issues? It's not just nuclear. It's intercontinental ballistic missiles, as well as the support for the proxies in the region. And that is a big question mark. But to that Axios point, just look on Twitter. You could see all the hardware in the region. This looks like 2003 before the United States entered Iraq. So Americans should be prepared.
This is a high-pressure campaign to negotiate, and we'll see what comes next. 71.33 right now, Brent 66 on WTI. Up next, we'll catch up with George Pollack of Signum Global as the president declares victory on affordability, plus Yahira drops by with your morning movers. Shares of Blue Owl continuing to fall on new fears for private credit. That stock is down again this morning by 3%.
Crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We snapped a three-day streak without losses on the S&P in yesterday's session. This morning, just about unchanged, no bounce on the S&P 500. On the Nasdaq, up by 0.1%. In the bond market on the week, yields drifting higher at the front end of the curve, together with the move in crude. We're up another basis point this morning, 347 on twos. And with that, encouraged by the hawkish Fed speaker the last week, this move on the US dollar, DXY, and the US dollar looking at its best week of the year so far, potentially. Up on the week, softer on the session, but up on the week by 1%.
And there's really two narratives going into this when it comes to the dollar. Obviously, what you said in terms of traders paring back their expectations for the Federal Reserve to cut interest rates. Even someone like George, who thinks that there's going to be 3 cuts, he did have it at 4 at one point. And then on top of that, if you really are concerned about huge geopolitical risks and a flare-up in the Middle East, and not just a strike on Iran, but potentially if that was going to be a wider regional war, you want to go into the dollar.
Yeah, I can't read the geopolitics. I don't think anybody can right now. This could go either way. When you look at the move in crude, with Brent back in the 70s, you start to ask questions about whether it would contain their ability to cut interest rates later this year, or whether this tips the economy over because this economy isn't as strong as the last time we had a big energy spike off the back of the pandemic.
It's a great point. A lot of people have been putting into their forecast, putting into their how they view this economy with much lower crude prices. If you have a strike on Iran or a much regional war, you are going to see prices spike. How sustained is that going to be? That's a key question. And also, as I asked Stephen Cook there, are there going to be other countries that can quickly tap their production and get more barrels onto the market?
Brent right now 71.39, WTI 66.13. As we count you down to the opening bell, about 3 hours away, let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Blue Owl heading for another day of losses. Shares are down 3.3% in the pre-market after the alternative investment firm restricted withdrawals on one of its retail-focused private credit funds. Now, investors in that vehicle won't be able to redeem shares as usual. So this is becoming a bigger issue for a sector that was already caught up in the software sell-off due to exposure to that in their books. Plus, also we had the cockroach moment last year in October with Tricolor Holdings. So this just adding fresh questions about liquidity in private markets. Meanwhile, we have Alphabet leading the Mag 7 this morning, up 1.5% after it got a meaningful price target raise from analysts over at Tigris. Hear this, raising the price target from $280 to $415 and keeping their strong buy. The analysts there making the case that Alphabet has multiple powerful growth drivers, including AI-driven ads, plus momentum in its cloud business. And we end on Akamai Technologies. This is a cloud technology company that gave a weaker profit outlook than expected. It became the latest company to warn that rising memory costs are going to eat into margins, and they're just going to have to raise prices. So shares are falling nearly 11%. John?
Yahara, thank you. More from Yahara later this hour. On our radar this morning, the Supreme Court could announce the fate of President Donald Trump's tariffs as early as this morning. Justices may rule over the president's use of emergency powers to justify his signature economic policy. Elsewhere, shares of Blue Owl falling. The company selling a $1.4 billion portfolio of loans to help return cash to investors. Blue Owl finding 4 buyers, including 3 of North America's biggest pension funds and its own insurance firm. And finally, the Fed Governor Stephen Myron changing his tune on interest rate cuts for the year. Myron saying a strong labour market and firming goods inflation would, quote, make me undo what I did in December.
So he's coming back, backtracking slightly, but he says if I had no more data in hand right now and had to put a dot at the March meeting, I would respond to the data again and probably end up moving my dot back to where it was in September. So what we see from Stephen Myron is very open in terms of how he is immediately looking at the data and what that would mean in terms of his view on interest rates. He's not doubling down. He's saying, I'm going to move where the data tells me to move.
Some good news on the affordability front, and this has been a target, a big effort of this White House under President Trump. Mortgage rates, they've fallen to the lowest level in more than 3 years. And I imagine that's going to be part of the pitch at the State of the Union next week.
Well, remember, we were supposed to have a huge housing policy directive from this administration at Davos. The president was preoccupied with other things like Greenland. So now I imagine we are going to get a lot more details when it comes to housing and making it more affordable for Americans to climb on the housing ladder at the State of the Union. But we have seen already this president do a lot when it comes to housing in terms of mortgage-backed securities, having the FHFA buy more of those. But in terms of trying to loosen up the housing affordability crisis, there's a lot that potentially could be done, but people are saying, will it actually be enough?
Let's stay on that story. The president taking his economic agenda on tour, declaring victory over affordability.
We inherited a mess with high prices and high inflation, and we've turned it around and we've made it great. They caused the affordability problem, and we've solved it. What word have you not heard over the last 2 weeks? Affordability. Because I've won. I've won affordability.
This as cost of living concerns are set to take centre stage at the State of the Union address next week. Joining us now to discuss is George Pollack of Signum. George, welcome to the programme. You heard the president's own words. I'll repeat them. They caused the affordability problem and we've solved it. Does the public agree?
No, unfortunately, while the president is you got to respect the president for trying to frame his message and frame his idea as we enter the midterms. The public does not agree with him, especially if you look at the voting approval rating with young voters, Hispanics, Black and African and Asian American voters. They're all on a serious decline and they're not recovering, and they feel that their economy is leaving them behind.
George, as you know, the president is right to point out this is a problem that he inherited, a problem, though, that he now has to own. And they have made an effort on things like housing, and we discussed that mortgage rates have fallen to their lowest level in more than 3 years. There is some runway here into the midterms. How much more do they need to do? And what options, what tools, what levers can they pull?
Well, look, I think Congress on housing is going to probably pass housing reform legislation this year, and they're probably going to include some kind of provision to ban institutional investors from buying single-family homes. It will not be at the bar of 100 that the administration is currently proposing, but on the optics, at least, it could be seen that the administration is taking on Wall Street and taking on those who are supposedly making housing unaffordable for those looking for single-family homes. On energy, the issue is the administration has to lean into its ideas, how they're rebuilding America's energy infrastructure and just doing what they say, drill, baby, drill, and how that in the long run will pay off for American voters.
George, when it comes to the institutional buyers, though, that's less than 2% of the market. Could it actually move things?
No, that's the reality. It's not going to move things. And I think everyone who follows housing understands that where the issue is more on supply side than it is addressing institutional investors. But if you look at the polling on institutional investors, I think close to 50% of Americans blame institutional investors for higher costs. And it creates a good picture for the president of taking on some elements of Wall Street, which going into a populist midterm is probably a beneficial political position to take.
What else could the White House do without relying on Congress when it comes to housing? We have seen them direct the FHFA to buy more of mortgage-backed securities. What other levers do they have to pull?
I'm sure they could try to do something in terms of cutting off certain tax credit loopholes for institutional investors. They could propose trying to force Congress, again, I know you're asking what they can do on their own, but to do something with the capital exclusion tax. So right now, I think that's at $500,000. Put that up to 1 million, 2 million to try to convince older homeowners to sell out and capture those tax benefits. But really, from the White House's perspective, they need to work with Congress to get something, because I think they're kind of limited on their levers within the White House itself.
George, when it comes to focus on affordability ahead of the midterm elections, we also, of course, had the president for months talking about a tariff dividend check. That conversation has pretty much evaporated. Do you have an update? And I'm thinking about it today, especially as we may get Supreme Court releasing the opinions on IEEPA.
Look, I would not be surprised if the president continues to push for it. But the issue is he's also killed off the idea of a second reconciliation bill because he seems to implicitly understand that the GOP does not have the votes. So when we go to the State of the Union next week, I imagine he's going to call for Congress to pass some kind of tariff rebate check. But he's either going to have to say, Congress, if you do, you have to do this, or if you don't, I'm going to try to find a way for the administration to do it on our own.
George, drill, baby, drill. You mentioned that phrase. We're drilling here in America. We're producing almost 14 million barrels of crude every single day. Crude, though, is rallying. Crude's back up into the 70s on Brent, WTI approaching those levels off the back of a bigger presence in the Middle East and the threat of military action on Iran. George, does the president want to address the nation next week in the State of the Union with crude rallying off the back of military action in Iran?
If you listen to those in the MAGA universe like Steve Bannon or Kurt Mills, they can't believe the president is choosing to focus on foreign policy going into the midterms. Their whole thing is, if you want to focus on foreign policy, do it after the midterms. Right now, you need to be focused on domestic concerns like affordability, and they can't understand it. And they think this president is so focused on issues that he thinks make him look good legacy-wise that he's forgetting that he still has to deal with the political consequences in November.
So, George, are you basically saying he's losing the base at the moment?
He is absolutely losing elements of the base based off, one, the affordability concerns, and two, in 2016, it was the New York Times that the Clinton, the hawk, tunneled the dove. And for a lot of people within the wider MAGA universe, they believe that. And they think these foreign policy entanglements, as much as they may build an opportunity for long-term peace, are not in the U.S.'s long-term interests, and the focus needs to be on domestic issues.
George, appreciate your time. As always, thanks for jumping on. George Pollock there of Signum weighing in on the situation in the Middle East, what it could mean for the State of the Union address next week.
It could potentially mean the president is going to be addressing the nation, as you say, with gas prices going up because oil prices are going higher, because he decided this weekend to potentially take a strike on Iran. The USS Gerald R. Ford will be in position by Saturday, so that's the earliest we could potentially see this president take that strike. That is going to be very challenging, especially since for a lot of Americans, they're going to start to remember 2003 and the invasion of Iraq, and that does not have a very good reputation on the minds of a lot of Americans.
What's the objective? Do we know what the objective is?
Well, I think the objective, according to the Wall Street Journal, of initial strike is to get the Iranians actually to the table and negotiate on. But there's three top issues. And to think that Iran and this regime, that they view this as existential, is going to negotiate on all three, I think is very naive. It's not just nuclear. It's also their intercontinental ballistic missiles, as well as the money to proxies. Does anyone actually think Tehran is not going to be giving money to these proxies in the region when this regime views this as existential? I don't think so. And the other big question is, what does the next day happen? Even if the regime was to actually be obliterated, what is day two? There's no defections right now, and there's no real opposition on the ground.
Crude oil, big move this week, up by more than 6% in just 2 sessions this morning, pulling back just a little bit. We're down by 1/10 of 1% to 71.56. With an update on stories worldwide this morning with your Bloomberg Brief, let's cross over to Yahara for more. Hey, Yahara.
Hi, John. President Donald Trump says his Board of Peace has received roughly $17 billion in pledges toward humanitarian and reconstruction efforts in Gaza. The president also says more than half a dozen countries have promised personnel for a stabilization force in the war-torn territory. Former Prince Andrew has been released under investigation after being arrested on suspicion of misconduct in public office. The arrest coming after new details emerged about his relationship with convicted sex offender, the late Jeffrey Epstein. The brother of King Charles has consistently denied any wrongdoing. And Minneapolis Fed President Neel Kashkari taking aim at NEC Director Kevin Hassett, accusing him of trying to undermine Fed independence. It follows Hassett criticizing a New York Fed economist study which found U.S. companies bear most of the burden from President Trump's tariff hikes. Kashkari defending the study. That's your Bloomberg Brief. John?
Yahara, thank you. This was a mistake for more reasons than one, but I think the ultimate reason for me is this is a blog that hardly anyone read. And now everyone's reading it.
Well, now everyone's reading it. You got to make the blog great again. You come out and, throw some swings at it, put some darts on it.
And the headline now is that economists who believe that the Americans have to bear the brunt of tariffs should be disciplined.
Yeah. That is what the
so
White House.
That's what everyone's reading now.
Yes, that's everyone reading. Yeah, and also now people are actually reading the report, and that report said that Americans are 90% of those tariffs they're bearing the cost of that, and potentially those tariffs might be named illegal at 10 a.m. today. Wait and see.
A communication misstep, perhaps, from the White House. Up next on the program, dialing back the dovish tilt.
If we don't adjust policy down, then I think that we do run risks of rising recessions. The need for me to dissent for 50 becomes a little bit less as we come down.
Up next on the program, we'll catch up with John Hill of Barclays. He joins us next, live from New York City. You're watching Bloomberg TV.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape the more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment. 3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at.
ओके गाइस क्रूड ऑयल को देखोगे हाफ फेयर लेवल पे रुक गया है ठीक है थोड़ा टारगेट बड़ा ही रखा हुआ था मॉर्निंग से हाफ लेवल तक तो पहुंच गया इवन तो यहाँ पर कोई सपोर्ट नहीं है फिर भी प्राइस होल्ड कर रहा है इस लेवल को मैं एक्सपेक्ट कर रहा था थोड़ा सा कंटिन्यूएशन में जाता है इस तरह से फटाफट से नीचे आके और फिर यहाँ से बाइंग करते एक तो लास्ट ट्रेडिंग सेशन है ऊपर से अगर इसी लेवल पे रुक गया और फॉरेक्स में बदला सेलिंग आ गई वापस मंडे को हमें ट्रेड करने का फिर ऑप्शन ही नहीं मिलेगा सपोर्ट एरिया से पहले ही बाइंग आ चुकी होगी नेचुरल गैस स्टिल फॉलिंग पिछले 2 दिनों से कोई ट्रेड नहीं बना है इसमें परसों ही एक सेलिंग बनी थी उसके बाद से मार्केट बस वॉलेटिलिटी में है ना कोई सपोर्ट बन रहा है ना कोई रेजिस्टेंस एक्सपेक्ट करेंगे यही लेवल बने हुए हैं वहाँ तक आए प्राइस अब 250 के आसपास आ जाए तो बढ़िया 250 455 India signs spec silica declaration join US initiative on AI critical minerals. बाकी ईरान यूएस का कुछ क्लियर नहीं है, 10 to 15 days एटलीस्ट वी कैन वेट, उसके बाद हो सकता है कुछ क्लियरिटी मिले। तो मोस्टली आप कह सकते हो मंथ लास्ट, फरवरी लास्ट के बाद शायद कुछ काइनेटिक एक्शन हो सकता है 10 days। ठीक है, तो नेक्स्ट वीक काफ़ी इंपॉर्टेंट रहेगा। नेक्स्ट वीकेंड आप कह सकते हो, नेक्स्ट फ्राइडे सैटरडे संडे मंडे इज़ वेरी इंपॉर्टेंट। कुछ होना होगा तो देयर इज़ अ वेरी हाई चांसेस उस कोर्स में हो जाएगा।
我が国は戦後最も厳しく複雑な安全保障環境に直面しています。中国は東シナ
this gentleman who, Belgium, let's say. So I know this gentleman who actually wrote a book about Iran, who is doing some research as well as some teaching, and he was telling me that my apartment is 1 mile away from the Royal Palace in Brussels. Yet in my own district, there are some Islamists that are pushing legislation to conduct not only the Sharia law, but to segregate buses so women and men ride in separate buses in Brussels. Now I ask you as a European, have we come to a point where this country says not only you can come to a country as a guest, and instead of assimilating and respecting our values and our culture, you're dictating to us that we should now practice the Sharia law in Europe and incorporate it into the system? If that's the way Europe wants to end up like, then honestly, I'm lost for words. If that's where we have to get to that point. What I'm telling you is that Iranians, and I know many other countries in the region, are desperate to liberate themselves from this extremism, from this radicalism. That nothing good came out of this so-called Sharia law. Because in the name of Sharia law, the first thing that Khomeini did was to undo what the previous regime had brought in terms of equality, women and their rights with the family law plan. That was the first thing that they abolished. And then everything took a downturn. This is the consequence of a regime that was advocating Sharia law. We know how disastrous it's been. Just look at Iran and the state of affairs there. And now you think that's just a good example to follow for Europeans? Because they'll end up like Iran pretty soon. The writing is on the wall. And all you need to do is to ask the people who have actually endured it to tell you what it actually means. I don't want the Europeans to end up being where Iranians are today only to discover what it actually means. I'm just trying to save you time. But if you insist on that, so be it. But then you have only yourselves to blame.
प्रसाद गौरव जी, ट्रम्प काका को अगर सीरियसली कुछ करना हो तो कब का कर लेता, बस ईरान से डर रहा है, फियर ऑफ अननोन। देखो मुझे तो ऐसा नहीं लग रहा, मुझे लगता है इतना बड़ा मिलिट्री बिल्डअप, कल उनके एक सेनेटर ने भी कहा है कि हम सिर्फ अच्छे वेदर के लिए तो नहीं जा रहे हैं वहाँ पे। सो मोस्ट प्रोबेबली ईरान अगर कॉन्क्रीट कुछ यू नो बातों को मान लेता है यूएस की, तो मुझे लगता है कुछ काइनेटिक एक्शन नहीं होगा। नहीं तो सेम सिचुएशन वेनेजुएला में भी हमने देखी। पहले यूएस ने अपने मिलिट्री भेजी, नेवल शिप्स भेजी, प्रैक्टिस करी, एंड देन एक दिन न्यूज आती है कि उनका प्राइम मिनिस्टर, प्रेसिडेंट जो भी था, मर्डरो, उसको उठा लिया। अभी ऑलरेडी इतना ज़्यादा मिलिट्री बिल्डअप वो कर चुका है यूएस, उनकी आर्मी, एयर फोर्स, रिफ्यूलिंग जेट्स, उनकी नेवी, दो एयरक्राफ्ट करियर कौन भेजता है भाई? लोगों के पास, कंट्रीज के पास होते ही दो एयरक्राफ्ट हैं। उनके 2 एयरक्राफ्ट करियर पहुंच चुके हैं। एक तो ऑलरेडी है मेडिटेरियन सी में, दूसरा जो उनका फोर्ड वाला था वो आई थिंक वो भी पहुंचने वाला है। कल मोरक्को पहुंच गया था, पता नहीं अब कहाँ पर है। तो इतनी ज़्यादा शिप्स कंटिन्यूसली भेज रहे हैं, तो या अगर वॉर नहीं करनी है तो दिखाने के लिए तो भेज नहीं रहे होंगे। सो देयर विल बी समथिंग। आई थिंक अगर ईरान नहीं मानता है बात, तो कुछ तो कुछ काइनेटिक एक्शन होगा, डेफिनेटली होगा। और आई डोंट थिंक सो कि छोटा मोटा एक्शन करने के लिए इतनी बड़ी आर्मी लेके जा रहे हैं, क्योंकि अगर उनको कुछ डिस्ट्रॉय वगैरह ही करना है, उनकी कुछ न्यूक्लियर फैसिलिटीज़ को या फिर मिलिट्री कॉम्प्लेक्स को, तो वो अपने B-2 बॉम्बर से भी कर सकते हैं। उसके लिए उनको इतना झमेला लेके जाने की ज़रूरत नहीं है। इतना सब कुछ लेके जा रहे हैं तो मतलब बड़ी वॉर, लॉन्ग टर्म वॉर के लिए रेडी हो रहे हैं। एंड जिस तरह से यूएस की पॉलिसी अब चल रही है, तो इन 3 कंट्रीज का नंबर आना ही था, वेनेजुएला, क्यूबा और अब ईरान। वेनेजुएला को उन्होंने निपटा ही दिया, क्यूबा पर भी मुझे लग रहा है शायद ये तख्ता पलट कर ही देंगे आने वाले टाइम में। ईरान का ही नंबर लग रहा है। तो मुझे ऐसा लगता है कि इनके सिर्फ सुप्रीम लीडर को उठाने से तो कुछ होगा नहीं, कि इनके सुप्रीम लीडर को उठा लिया वेनेजुएला की तरह, उससे कुछ नहीं होने वाला। ठीक है, इनको अगर ईरान में तख्ता पलट करना है तो वहां पर उनकी आर्मी को हराना ही पड़ेगा, देयर इज नो अदर वे। तो उसका एक ही ऑप्शन है कि इतनी बम्बार्डमेंट कर दो जैसा इन्होंने इराक में किया था इन्वेजन से पहले, और उसके बाद किसी अंदर के आदमी को बैठा दो तो मौका ही ना मिले। क्योंकि अगर इन्होंने बस थोड़ा बहुत अटैक किया साइड से, मौका मिल गया ईरान को, ईरान तो जितने भी यूएस के बेसेस हैं मिडिल ईस्ट में और इजराइल, इतनी बम्बार्डमेंट कर देगा वहां पे, फिर तो वो एक तरह से आउट ऑफ लीग हो जाएगा। क्योंकि यूएस के बेसेस जिन कंट्रीज में है फिर वो कंट्रीज भी इन्वॉल्व हो जाएंगी, स्प्रेड ऑफ वॉर कह सकते हैं। सो बेस्ट स्ट्रेटजी फॉर यूएस मुझे यही लगता है कि एक साथ इतनी बम्बार्डमेंट कर दो कि मौका ही ना मिले सामने वाली कंट्री को। और जितनी यूएस के पास एयरफोर्स है, जितनी उसकी पावर है एयरफोर्स की, वो भी टेस्टेड बैटलफील्ड में, एंड उनकी नेवी जिस तरह से काम करती है, एंड ऑब्वियसली उनके कुछ ना कुछ इनसाइडर अंदर तो होंगे ही होंगे, इंक्लूडिंग इजराइल। सो देयर इज अ चांसेस। क्योंकि अभी एक थोड़ी देर पहले रिपोर्ट आई थी कि यूएस ने उनके प्लान्स क्या हैं रिगार्डिंग ईरान, इसके रिगार्डिंग कोई भी इंफॉर्मेशन नहीं दी है, ना इजराइल को दी है और ना ही इवन नेटो को भी नहीं दी है। तो सोचो वो कितना सीक्रेटली काम कर रहे हैं। इवन वेनेजुएला वाला जो अटैक हुआ था, उनके प्रेसिडेंट को उठाया था, वो भी इंफॉर्मेशन उन्होंने अपने नेटो कंट्रीज के साथ शेयर नहीं करी थी। तो दे आर वर्किंग अलोन राइट नाउ। मुझे लगता तो नहीं यूएस ब्लफ कर रहा है, क्योंकि मिलिट्री बिल्डअप कहीं पर भी हो जाए ना तो फिर उसको वापस खींचना किसी ऐसी कंट्रीज के लिए जो अपने आप को सुपर पावर कहती हैं, बहुत ही ज़्यादा एम्बेरसमेंट कहा जाएगा। ऐसा ही मान लो कि रसिया ने अपना जब मिलिट्री बिल्डअप किया था यूक्रेन के आसपास अटैक करने से पहले, लास्ट टाइम पे अगर वो पूरा बिल्डअप पीछे कर देते तो दुनिया यही सोचती कितना वीक कंट्री है, तो अटैक करना ही था। सेम वेनेजुएला में हुआ, सेम इन लोग जिस तरह से भेज रहे हैं सेम यहाँ भी होने वाला है। तो वेरी हाई चांस है, सेम लाइक इंडिया। जब इंडिया पाकिस्तान कॉन्फ्लिक्ट हुआ था, इंडिया ने अपने एसेट्स को भेजे थे आगे, अटैक कब होगा वो तो नहीं कहा जा सकता। क्योंकि एक बार ये ईरान को डिफीट कर देता है, इन द सेंस ऑफ ईरान में तख्ता पलट हो जाता है, वहाँ कोई और आ जाता है लीडर, प्रो यूएस लीडर। तो उस केस में फिर और कोई मेजर एनिमी यूएस का बचता नहीं है मिडिल ईस्ट में। अपने अपने जो उनका एरिया है वहाँ तो वो सब निपटा चुके हैं। उनका हेमिस्फीयर तो ऑलरेडी उनके कंट्रोल में है। यूरोप में उनको ऐसा कोई लाइक उनका कोई ऐसा एनिमी कंट्री है नहीं जिससे उनको दूर करना हो। सो नॉर्थ अमेरिका हो साउथ अमेरिका हो, दोनों ही ऑलरेडी उनके कंट्रोल में है। कनाडा, यूनाइटेड स्टेट, मैक्सिको, क्यूबा बचा हुआ है, उसका भी निपटाई देंगे मुझे लग रहा। नॉर्थ अमेरिका में भी देख लो, सारे उनके अच्छे खासे दोस्ती हैं, ऐसा कोई एनिमी कंट्री है नहीं। यूरोप उनके कंट्रोल में ही है। अफ्रीका में उनका इतना कोई इंटरेस्ट है नहीं, बाकी उनकी सेंट्रल कमांड जो है वहाँ पर ऑलरेडी कंट्रोल में ही रखती है। लीबिया उन्होंने चेंज कर ही दिया है। सीरिया में उन्होंने तख्ता पलट करवा ही दिया है। इजिप्ट उनके साथ ही है। जॉर्डन उनके साथ ही है। सऊदी अरेबिया उनके साथ ही है। कुवैत, इराक में वो तख्ता पलट कर ही चुके हैं। यूएई, ओमान, यमन, आधा हिस्सा उन्होंने वैसे ले रखा है यमन का। तो एक ईरान ही मेजर कंट्री बचता है जहां पर उनका कोई कंट्रोल नहीं है। पाकिस्तान उनके कंट्रोल में ही है। तो ऑलमोस्ट आप कह सकते हो अगर ऐसा हो जाता है ईरान की वहां पर गवर्नमेंट गिर जाती है, जो कि मुझे लग रहा है उनका मेन मोटिव वही है, कोई प्रो यूएस लीडर आ जाए, तो ऑलरेडी उनका हेमिस्फीयर सिक्योर है ही। यूरोप सिक्योर उन्होंने कर ही लिया। मिडिल ईस्ट उनके कंट्रोल में ही है। मिडिल ईस्ट भी उनके कंट्रोल में आ ही जाएगा। फिर उनका टोटल जो फोकस रहेगा दैट इज इंडो पैसिफिक रीजन, क्योंकि यहीं पर ये तीन मेजर कंट्री आती हैं, रसिया, चाइना और इंडिया, जिनको वो कंट्रोल करना चाहेगा, बिकॉज ऑलमोस्ट बाकी दुनिया तो वो कंट्रोल कर ही रहा है। ठीक है, और डायरेक्टली कहो इनडायरेक्टली कहो, उसका इन्फ्लुएंस इतना है कि वो ऑलरेडी सारी कंट्रीज को, रिमेनिंग इंडिया, चाइना और रसिया जो बड़ी कंट्रीज हैं, उनके अलावा सभी कंट्रीज को कंट्रोल करता है डायरेक्टली और इनडायरेक्टली। इवन इंडो पैसिफिक में भी देखोगे, जापान, साउथ कोरिया, वियतनाम, मलेशिया, फिलीपींस, इंडोनेशिया, जो मेजर कंट्रीज हैं वो उनके साथ ही रहती हैं। तो मेजर थ्री सुपर पावर बचती हैं इस कॉन्टिनेंट में, रसिया, चाइना और इंडिया। अब रसिया को तो डायरेक्टली डिफीट कर नहीं सकता, चाइना को भी वो डायरेक्टली डिफीट कर नहीं सकता। इंडिया का साथ उसका रिलेशन अच्छी है, तो इतना कुछ खास उसको इम्पैक्ट पड़ेगा नहीं। बाकी उसने पाकिस्तान, बांग्लादेश से कंट्री बैठाई रखे हैं अगल बगल। तो मेन फिर उसका फोकस हो सकता है कि वो इंडो पैसिफिक में अपना फोकस बढ़ाए। और अभी रिसेंटली रिपोर्ट भी आई थी कि यूएस अपने बहुत सारे जो मिसाइल्स हैं वो फिलीपींस में तैनात करने वाला है। तो मेन देन आई थिंक उसके बाद उनका नेक्स्ट टारगेट चाइना ही होगा, क्योंकि फिर जो नेक्स्ट बड़ी कॉन्फ्लिक्ट होगी इसके बाद, अगर मान लो ये निपट जाता है, ईरान का हिस्सा ही निपट जाता है, क्योंकि देखो डायरेक्टली या इनडायरेक्टली ईरान यूएस से जीत तो सकता नहीं है। ठीक है, अनटिल अनलेस कोई बड़ी पावर इंटरवीन ना कर दे कि रसिया ना आ जाए ये कहते हुए कि हम न्यूक्लियर मिसाइल मार देंगे तुम पे अगर तुमने ईरान पे अटैक किया, तो जो कि मुझे लगता नहीं, ऑलरेडी काफ़ी ज़्यादा बिजी है रसिया। फिलहाल के लिए यूक्रेन में, तो यूक्रेन में रसिया बिजी कर दिया इन लोगों ने। मिडिल ईस्ट में ईरान को रिमूव कर दिया। फिर एक ही इनके लिए बचता है हेडेक, दैट इज चाइना। देन आई थिंक नेक्स्ट जब बड़ी कॉन्फ्लिक्ट होगी चाइना और ताइवान के बीच में, देन दे कैन कम्प्लीटली फोकस ऑन हेयर, क्योंकि फिर उनको कोई और जगह सोचने की जरूरत नहीं है। तो मुझे लग रहा है कोई बहुत बड़ा ग्रैंड प्लान है। आई डोंट थिंक सो कि सिर्फ स्मॉल चीज़ को ये देख रहे हैं, या फिर स्मॉल इंटरेस्ट को देख रहा है यूएस अपने। दे आर थिंकिंग अबाउट लॉन्ग टर्म प्लान फॉर देयर डोमिनेंस, कि किस तरह से आने वाले टाइम पर भी पूरे वर्ल्ड में कंट्रोल किया जाए। तो साउथ अमेरिका, नॉर्थ अमेरिका, नॉर्थ अमेरिका और साउथ अमेरिका ऑलरेडी उनके कंट्रोल में आ गया। यूरोप कंट्रोल में है, मिडिल ईस्ट कंट्रोल में है, मिडिल साउथ अफ्रीकन कॉन्टिनेंट कंट्रोल में है, मिडिल ईस्ट भी कंट्रोल में आ जाएगा। रसिया को भी जी कर ही चुके हैं, इतना वीक कर ही चुके हैं यूक्रेन के थ्रू कि अब वो ऊपर उठ नहीं पाएगा ज़्यादा खास। सुपर पावर रहेगा बट मिलिट्री बचते हैं इंडिया और चाइना, मेनली चाइना पर ही फोकस है। तो दे आर नाउ प्रिपेयरिंग फॉर नेक्स्ट बिग थिंग विच इज चाइना एंड ताइवान कॉन्फ्लिक्ट और नॉर्थ कोरिया साउथ कोरिया कॉन्फ्लिक्ट। जब भी चाइना और ताइवान की वॉर होगी, कैसी भी हो, छोटी बड़ी, तब यूएस को इन्वॉल्व तो होना ही पड़ेगा, क्योंकि यूएस इन्वॉल्व नहीं होगा तो ताइवान आई डोंट थिंक सो कुछ रेजिस्टेंस ज़्यादा दे पाएगा। लैंडलॉक कंट्री है तो मिलिट्री डायरेक्टली तो नहीं जाएगी, मोस्टली एयरफोर्स और नेवल फोर्सेस का ही यूज़ होगा। सो देयर इज अ चांसेस इन दैट केस यूएस में इन्वॉल्व, एंड यूएस डोंट वांट कि जब वो इन्वॉल्व हो जाए इस वॉर में ताइवान और यूएस चाइना के साथ, उस समय उसके पास ज़्यादा सिरदर्द बचे हो मार्केट में क्योंकि अपना हेमिस्फीयर साफ कर दिया, यहाँ कोई झंझट नहीं है। वेनेजुएला हटा दिया, क्यूबा भी रिमूव कर दिया चाइना और रसिया से, मिडिल ईस्ट ईरान हटा दिया, सीरिया हटा दिया, इराक वगैरह सब नॉर्मल ही है उनके साथ। अफ्रीकन कॉन्टिनेंट में उनका कोई इनको दुश्मन है नहीं, यूरोप उनके साथ ही है। इंडियन सब कॉन्टिनेंट में उनके साथ ही हैं ऑलमोस्ट सारे, उनसे कोई ज़्यादा पंगा है नहीं। तो आप कह सकते हो तब वो ध्यान दे सकता है कम्प्लीटली। सो इट इज़ अ प्लान ऑफ अ बिग पिक्चर इन माई व्यू। बाकी अगर ईरान के साथ कॉन्फ्लिक्ट होता है तो इट विल आल्सो टेस्ट रसिया और चाइना का भरोसा कितना कर सकती हैं कंट्रीज, बिकॉज वेनेजुएला में हुआ, कुछ नहीं कर पाए रसिया चाइना। ईरान पे भी अगर यूएस बिल्कुल चेंज कर देता है रिजीम इजीली, बम्बार्डमेंट करके या फिर मिलिट्री या कैसे भी, और चाइना और यूएस कुछ नहीं करते, सिर्फ कंडेम करते हैं, तो समझ जाओ उससे उनकी भी इस एक जो मिलिट्री पावर है उससे पता चलता है कि दे आर कितने वीक हैं यूएस के सामने। भले ही वो कह दें कि हम कितने स्ट्रांग हैं, हमारे पास ये है वो है, बट उस केस में ये पता चल जाएगा कि कितना सपोर्ट चाइना और रसिया डायरेक्टली इनडायरेक्टली कर रहे हैं। इनडायरेक्टली तो कर ही रहे होंगे, डायरेक्टली कितना करते हैं, क्या चाइना मिलिट्री शिप भेजेगा, क्या लगता है? इट ऑल दोस थिंग्स विल डिफाइन अपकमिंग टाइम। 6 PM भी हो ही गया ऑलमोस्ट 6:30 लंदन सेशन के बाद न्यूयॉर्क सेशन ओपन होगा थोड़ा वॉल्यूम एक्सपेक्ट करेंगे और क्रूड भी स्टक हो गया एक ही लेवल पे
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Yeah, it's near a 6-month high for West Texas Intermediate, Karen, with concerns that the U.S. is moving closer to a war with Iran, putting geopolitical risk into the commodities markets. The U.S. is continuing its military buildup in the Middle East as President Trump says Iran has days to agree to a deal over its nuclear program.
Now we may have to take it a step further, or we may not. Maybe we're going to make a deal. You're going to be finding out over the next probably 10 days.
President Trump spoke as the U.S. has built more forces in the Middle East than at any point since the war in Iraq.
Well, as far as his domestic agenda, Nathan, President Trump is declaring victory in the fight over cost of living concerns. He paid a visit yesterday to the crucial battleground state of Georgia.
What word have you not heard over the last 2 weeks? Affordability. Because I've won affordability.
This signals a new approach by the president. He denied problems with his economic agenda while touting stock market gains to insist that his tariff plans have been a success.
Well, let's turn to the UK now, Karen. Former Prince Andrew has been released. He was detained on suspicion of misconduct in public office. Let's go to London and get the very latest from Bloomberg's Tiwa Adebayo. Good morning, Tiwa.
Good morning, Nathan and Karen. Well, the fallout is continuing here in the UK after the unprecedented arrest of former Prince Andrew Mountbatten Windsor yesterday. The latest is that he has now been released from police custody under investigation. That was yesterday evening. Thames Valley Police confirming the release of a man in his 60s in Norfolk, not naming him as is per the national guidance here in the UK. This arrest coming, of course, after revelations about Mr. Mountbatten Windsor's ties to convicted sex offender Jeffrey Epstein. He has denied all wrongdoing in relation to Epstein. Just in terms of the latest from the rest of the royal family, whilst this news was breaking yesterday, the King was taking part in a public engagement at London Fashion Week. He also released an official statement in which he said the law must take its course. In London, Tiwa Adebayo, Bloomberg Radio.
All right, Tiwa, thank you. Well, there's more fallout from the Jeffrey Epstein case here in the U.S. The late sex offender's estate has agreed to pay up to $35 million to resolve all outstanding legal claims from women who have not already reached settlements. This proposed settlement covers at least 40 women who say they were sexually abused or trafficked by Epstein between 1995 and August 10th, 2019, the day he was found dead in his jail cell. Their lawsuit was originally filed in 2024 against the Epstein estate's 2 co-executors, his longtime lawyer Darren Indyke and accountant Richard Kahn. Both men have not been accused of abusing women or witnessing abuse. They've denied all liability to Epstein's victims and agreed to the settlement terms without admitting fault. A federal judge still has to approve the deal.
Turning now, Karen, to the latest in the search for Nancy Guthrie. Tomorrow will be 3 weeks since the mother of Today Show host Savannah Guthrie was last seen at her home near Tucson. The FBI has received more than 20,000 tips, and Pima County Sheriff Chris Nano says every lead helps.
When those tips dry up, this case goes cold. We believe somebody out there knows who did this. We need that person to call us.
Pima Sheriff Chris Nano spoke to the ABC station in Tucson. He says DNA evidence found at Guthrie's home is still going through lab analysis, and several hundred personnel from multiple law enforcement agencies are assigned to the case. Investigators have also identified an Ozark brand backpack the suspect was wearing in surveillance footage. They're working to determine where he bought other items. The FBI reward for information that leads to Nancy Guthrie's return is up to $100,000.
Well, Nathan, let's turn to the markets now. And futures, they've erased their gains as we close out the trading week. And company news, Netflix says its proposed acquisition of Warner Brothers Discovery will lead to more films in movie theaters. And this addresses a key concern from Hollywood. In an interview with Bloomberg, Netflix co-CEO Ted Sarandos said he is highly confident he will win the battle against Paramount's Skydance for Warner Brothers.
I think in the alternative, Sky has gone, missed every deadline. They've been taking 9 runs at this bid, and they just won't accept this outcome.
And Netflix Ted Sarandos made the comments earlier in an interview with Bloomberg, and you can check out that interview as well as live streaming news, all our Bloomberg TV shows, documentaries, and more. It's all in one place at Bloomberg.com/videos.
It's a busy day in the economy, Karen, as we close out this trading week. Investors have some key reports to digest this morning. We have a preview from Bloomberg's Michael McKee.
Extraordinary early projections have come down, but the final Atlanta Fed GDP Now calculation is the economy expanded at a still very healthy 3% in the fourth quarter, much of that powered by construction of AI data centers around the country. The data are a month late, delayed by the government shutdown, but they will cheer a White House anxious for some good economic news. What will really matter to markets, however, will be the December income and spending numbers released for the first time on the same day as GDP. The GDP calculations fell as the fourth quarter went on, so investors will be very interested in whether consumers cut back during the month. The Fed, meanwhile, will be looking at the December PCE price indexes. While consumer price growth slowed last month, PCE is forecast to come in a bit higher for the core. That and stronger GDP growth would make it harder for the Fed to consider rate cuts anytime soon. Michael McKee, Bloomberg Radio.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. U.S. Olympic drama, and all of it from women. First, it was the hockey team who had been so dominant, and then in the gold medal game against Canada, shut out for 58 minutes. Finally, Hillary Knight, the captain, scored, sent the game to overtime where Megan Keller scored. The U.S. with the 2-1 victory over Canada and the gold medal. And then it was the figure skating, the free skate performance by Alyssa Liu, nearly 3 points better than anyone. First U.S. women's gold since 2002. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
As a place to do business, the UK stands apart, not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading financial centres, the UK puts over £10 trillion to work every day, fueling innovation across every sector. Home to 4 of the world's top universities, it provides exceptional talent and breakthrough research. This sits alongside a clear 10-year industrial strategy, unlocking smarter regulation and making it faster and easier to operate. Stability with dynamism. Global connectivity with local depth. It all adds up to greater growth. Visit
to be cut, and there's not a lot of natural growth in that market particularly. So Paramount will have to build on its theatrical releases and build in other areas of the business, and that's not necessarily easy to do organically in its market.
Alicia, just to wrap things up, could I get your thoughts on the other threat to the studio business and the trajectory for the price of content, given the amount of AI initiatives we've seen develop more recently? And we've all seen these examples come out on social media of people just making their own movies. I have to say, it started out not so good, and now at the moment, from what I've seen over the past few weeks, things have moved on pretty quickly. What are your thoughts on the trajectory of things?
They are moving on pretty quickly, but you're seeing the studios come out vehemently against this and, putting out some cease and desist orders. This isn't going to fly because the issue is that those models were learning based off content that they shouldn't have had access to, and they certainly didn't pay for. If there were deals in place that they had paid for to teach those models, sure, but a lot of the AI models are based on content that they shouldn't have had access to, and they certainly didn't legally. And so there are a lot of ways for the studios to protect themselves against this, and hopefully that's swift enough to be meaningful.
Over time, though, for the studios, do you see it reducing the price of content?
Sure. I mean, just as user-generated content has become more and more popular, it creates an alternative, certainly to more expensive content. But really, it comes down to what's the most compelling. And so I think, these kind of combinations, like you see, Netflix wanting to do with Warner Brothers, is more meaningful because there are a lot of content alternatives out there. But if studios are able to leverage that to get better content to screens faster, that can certainly, thwart some of those AI efforts.
Alicia, thanks for jumping on. We appreciate it.
Thanks
Thank
for
you.
having me.
Thank you. Alicia Reese there of Wedbush Securities. In Alicia's mind, Netflix has got options and Paramount doesn't have as many.
Paramount doesn't have the options. In her mind, Netflix will be fine whether or not they get this deal or not. They do have to do more in terms of convincing Hollywood that they are the right buyers for Warner Brothers, and they will continue to put movies out in the theaters. When it comes to AI, though, Jonathan, the studies that are done in terms of, AI is not going to completely take over Hollywood. There's this nature that you need authenticity, especially when it comes to movies. But production and post-production jobs, those could definitely become a lot harder to find given what is going on in AI.
Yeah, the unions are going to fight, and the companies are too, on some of these issues. Equities at the moment on the S&P, negative by 0.2% on the S&P, with an update on stories elsewhere. Let's get you an update with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. Tomorrow marks 3 weeks since Nancy Guthrie was last seen at her Arizona home. The FBI has received more than 20,000 tips in her disappearance. The Pima County Sheriff says DNA evidence found at Guthrie's home is still going through lab analysis, and several hundred personnel from multiple law enforcement agencies are assigned to the case. Meanwhile, the U.S. trade deficit with China shrank in 2025 to the smallest in more than 2 decades as President Donald Trump's sweeping tariffs reorder global trade. At the same time, the U.S. trade deficit widened to record levels with Mexico and Vietnam as China reroutes its exports. And President Trump is directing the release of government documents related to aliens and UFOs. The president accusing former President Barack Obama of giving away classified information when he discussed the idea of extraterrestrial life during a recent podcast appearance. In the interview, Obama said aliens are real, but are not being held in a top secret military facility in Nevada. That's your Bloomberg Brief. John?
Yahara, thank you. So inquiring minds want to know, don't they?
I can't wait. The president overnight said that based on the tremendous interest shown, he's going to be directing the Secretary of War and other relevant departments and agencies to begin the process of letting us know what these two presidents are talking about. Honestly, if the U.S. government lied about aliens, let's just go there. I'm going to be very upset. We deserve to know.
Okay, let's hope we find out. Up next on the program, losing the case for lower rates.
If inflation is still well above, target, and if it's not going to fall very much, it'll be hard even to justify one rate cut this year, let alone 2 of them.
Up next, we'll catch up with Colin Martin of Schwab, live from New York City. You're watching Bloomberg TV.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, you know, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, you know, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, you know, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazla Amin in Davos, Switzerland, and this is Bloomberg.
It is the most read story on the Bloomberg terminal right now. It's this story right here. It's Blue Owl. It's down again this morning in the pre-market, negative by 3.5%. Yesterday, you all saw the reports that Blue Owl said it's restricting withdrawals from one of its retail-focused private credit funds. This is what we understand from the company. Contrary to what has been reported, we are not halting investor liquidity. We're accelerating the return of capital. As part of that effort, this is what we found out today. The 4 buyers for a portfolio of loans to help pay out investors came from 3 of North America's biggest pension funds and its own insurance firm. That story driving this stock slightly lower, struggling to repair the damage done to confidence over not just the last week, but the previous few months. The stock is down by another 3.5%, a story we'll keep tracking for you. For the broader equity market, equity futures on the S&P 500 shaping up as follows. We're negative here by 0.2%. The Nasdaq down by 0.2 also. The Russell down by 0.5. In the bond market, yields just about unchanged, elevated through much of the week, bouncing off a year-to-date low, 345.70. on twos. Under surveillance this morning, losing the case for lower rates.
The data so far don't justify having lower Fed funds rates. If the economy is strong as it is and is accelerating, if inflation is still well above, target, and if it's not going to fall very much, it'll be hard even to justify one rate cut this year, let alone 2 of them.
So here's the latest this morning. Investors preparing to make fresh bets on the Fed's rate path. A busy morning of economic data on deck, including GDP and core PCE in the next 40 minutes or so. Colin Martin of the Schwab Center for Financial Research writing, good news on the economic front lately, but that doesn't change our outlook for Fed policy. We still expect 1 or 2 rate cuts later this year. Colin joins us now for more. Colin, welcome to the show. What underpins that call for 1 or 2 rate cuts later this year?
Well, it's based on our expectation that inflation will gradually lower from here, but I'll echo the points that Rubini was making in that clip you just showed, that right now, things are going pretty well. And, we're looking at real yields right now. And if we look at where inflation is, still too elevated, and relative to where the Fed funds range is, we're still seeing real yields in the, call it, anywhere from 1 to 1.5 area. If over time we see inflation continue to move lower, that gives the Fed some cover to continue cutting rates. But right now we just don't see it, especially with the improvement in the labor market lately. I think it's too early to tell if the drop in the unemployment rate will be sustained or if it'll hold there. But it's certainly good news that we're a few tenths off that peak we saw a handful of months ago.
That's an improvement in the labor market. Colin, the attention is on the other side of the mandate at the moment. Will we see a big enough improvement on the other side of things to give them the space to cut interest rates? And when I see forecasts for rate cuts later this year, the justification is often not that we'll see a deterioration in the labour market, but you'll see disinflationary trends take hold and give them the space to reduce rates, which begs the question this morning, how would your scenario shift if we got a spike in crude off the back of heightened geopolitical risk in the Middle East?
Yeah, well, I don't know if it would change too much. We're still, I'd say, more on the dovish side, if I'm going to give our team a descriptor like that, relative to market expectations, 1 to 2. But I think you're right, John, in that we've seen this shift of what's driving expectations. It was clearly the labor market for a while, but with the improvements there, now it's back on inflation. Inflation's still too high. We're hopeful it can come down, but it's still too high. With the pickup in crude, if that leads to let's say just stabilization or worse, a potential increase in inflation, that would make it more difficult to cut rates going forward. But also I think just the general economic momentum right now. The economy is doing okay. It's been growing at or above trend for a number of quarters right now. And if we look into 2026, obviously there's a lot of headlines about tax refund season, what the impact of the fiscal stimulus from last year's One Big Beautiful Bill Act means. I think that can keep growth going, keep spending going. So I think there are some headwinds for inflation that can keep it elevated. So I think that's a key reason why we're not expecting the Fed to do anything soon. If we do see those improvements, and maybe it would take somewhat of a slower economic growth trajectory to bring inflation down a little bit, that's why we would see those rate cuts. But I'm fully on board with the risks you're talking about. If inflation is staying not just north of the Fed's 2% target, but in the 2.5% or 3% range, to us, that's still too high for the Fed to consider cutting rates.
There was a recent report about how Americans are bearing the brunt, 90% of the tariffs enacted by this administration. Today at 10 a.m., the Supreme Court might rule them illegal. Do you think that has an impact on the inflation story going forward this year?
Yeah, it could. If we look at we've seen that study. Obviously, studies have made a lot of headlines. Has it
for other
translated
reasons?
into the Exactly. I'll leave that for other guests to discuss. Has it shown up in the inflation data? You can make the case that the tariffs have impacted inflation, but it's impacted, obviously, the things that are imported, specifically on the goods side. So if you look at the big picture inflation readings we get, it's tough to see that actual impact. But if you dig in, there is an impact there. So does that change our view? I'd say not much, because it really only appears to be impacting it at the margin. If you dig deep in, and it doesn't appear to be changing inflation expectations too much. If you look at inflation expectations, specifically market-based ones from tips, break-evens, and things like that, they've been pretty steady for the past few years. So I don't think our view is going to change much, regardless of what happens with the Supreme Court tariff announcement.
Hey, Colin, we got this post from the president just moments ago on social media. Let me share it with you. It says the Democrat shutdown cost the USA at least 2 points in GDP. That's why they're doing it in mini form again. No shutdowns. Also, lower interest rates. Too late Powell is the worst. So let's just go with the first line, that it cost the USA at least 2 points in GDP. I'm sitting here, Colin, trying to decide whether he knows the GDP print, and he's basically given us a number. What's your interpretation of this?
Really put me on the spot this morning. I'll put it this way. So GDP is expected to be strong-ish last quarter, despite the government shutdown. I think there should clearly be an impact to our GDP numbers. And I would assume that's the president trying to explain why, if it comes maybe on the low side. But even if it comes low, it's still okay. And that's our theme right now, that we're seeing growth at 2% or more on an annualized basis. And I think that's a good thing, even if we saw that government shutdown. And if we look ahead, I think growth's going to continue to be strong. So I'm not going to get into the weeds of what happens for one specific quarter, because we think the trend is still pretty resilient.
Colin, just before you go, you're a fixed income guy, and I'd love your reaction to developments in private markets. A lot of focus on redemptions of certain funds at certain companies. But when you look across fixed income, both private and public at the moment, markets across the board, do you see a tightening of financial conditions? Are things still loose? Any credit stress that you're concerned about?
There doesn't appear to be too much credit stress. I can't say no credit stress, because we are seeing it. We focus more on the public markets just because that's where we can see the data. And we're seeing a bit of a bifurcation right now. High yield bonds, kind of the benchmark for leveraged finance through the years, is still doing well right now. Year to date, the Bloomberg High Yield Bond Index is up. Spreads are still low, although they've been bouncing around. And we don't appear to see too much stress under the surface. We're seeing some concerns in the loan market because there's a lot more tech exposure there. The Bloomberg Leveraged Loan Index is actually down year to date. So we're seeing this kind of diversion between two what many people would think are similar investments. So we're seeing them move somewhat in opposite directions. But generally speaking, we're okay taking some risks because we just haven't seen any stressors really spread into the broad market. So for our investors at Schwab, if you're willing to take a little risk, we think actually high yield bonds are potentially an opportunity there. On the private side, it's tough to say if these things are good or bad in a vacuum, but I really think it comes down to the liquidity and investor profiles. And you've kind of gone over the headlines just this morning before we started talking about who's buying these bonds or these loans from Blue Owl. And it's pensions funds, it's insurance companies. These are the traditional buyers of private capital. And they view them as their long-term sleeve or permanent capital sleeve. And when we have a new investor base come in who doesn't necessarily think that way, who's used to getting in and out, I think that changes the dynamics a little bit. So again, I don't know if it's good or bad, but I think it's just investors need to know what they're getting into so that they're prepared to hold these things for a while.
Hey, Colin, good to see you. As always, thank you, sir. Colin Martin there at Schwab on the latest in fixed income. Up next, Titania Kandari of Morgan Stanley, Dana Taussey of the Taussey Advisory Group, Kathy Bostjancic of Nationwide, and Tony Wong of T. Rowe Price. The third hour of Bloomberg Surveillance, just around the corner.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
every decade, there's more evolution out of the S&P 500.
The three largest sectors representing the S&P are down on the year.
This is the most transformative trend that I believe we will see in our lifetime.
I wouldn't be surprised if we start to see a little bit of move back into tech.
Trying to predict when these things are going to pop is a fool's game.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. Your scores, the price action looks like this. We're down 0.1% on the S&P. After snapping a 3-day run without losses on the S&P 500 in yesterday's session, we add to them this morning. The Nasdaq is down by 0.14. The Russell is down by 0.37. In the bond market, after drifting higher all week, 2-year yields this morning turning just a little bit lower. The 2-year at the front end, 3.4528, 10 still just north of 4%. Coming up a little bit later this morning, 29 minutes away, we'll get some data, core PCE and GDP. On GDP, the president with this to say just moments ago out on social media, the Democrats' shutdown cost the USA at least 2 points in GDP. That's why they're doing it in mini form again. No shutdowns, also lower interest rates. Too late, Powell is the worst.
So you have to think, is the president just looking at some of the analysis that has come out? And a lot of people have talked about this GDP report will cover the longest shutdown in modern history. So potentially that means growth would have cooled, even though it was robust. And I think annualized pace, individuals are projecting 3%. Or did the president see the report and is somewhat leaking and telling the market, I've seen the report and this is the reason why it's lower than, what was Howard Lutnick talking about, north of 4 or 5%. At one point, the president interview said 15% when it comes to growth. So I think that's a question I asked the White House, and I'm waiting their response.
When you get that response, share it with us.
Absolutely.
We're looking out for that ahead of the State of the Union next week. Looking out for this as well. A moving crude. Let's bring up the prices this morning. Pulling back by 0.4% on Brent, down by about a third on WTI, following a big 2-day spike over the previous 2 days off the back of a couple of reports indicating we're getting closer and closer to action in the Middle East.
And those reports are going along with what we're seeing in terms of maps and military hardware moving into the region. We're going to have another U.S. aircraft carrier landing there by Saturday. Biggest military buildup, as we talked about yesterday, since 2003 and the invasion of the United States when it comes to the Iraq War. And now the Wall Street Journal has this report yesterday that's talking about what the president potentially the thinking would come if he decides to go for initial strike. Initial strike to get the Iranians to the table to have this negotiation, this deal. And if that falters, potentially then it's a longer, protracted regional war. And you have to think the immediate response the Iranians would do to retaliate is going to hit energy facilities as well as potentially close the Strait of Hormuz and go after tankers. And that just means oil is going to go higher.
Brent crude this morning down by about 0.4% following a big rally this week, up on the week by around 5%, 71.38 on Brent. Coming up this hour, we'll catch up with Jitanya Kandari of Morgan Stanley Investment Management with stocks edging lower, Kathy Bosjancic of Nationwide breaking down the latest inflation data, and Tony Wong of T. Rowe Price looking ahead to earnings from Nvidia. We begin this hour with stocks adding to losses after snapping a 3-day winning streak. Jitanya Kandari of Morgan Stanley Investment Management writing, we see a shift from concentrated sources of growth and returns to a greater dispersion and wider set of opportunities, both within the US and across global markets. Jitanya joins us now for more. Jitanya, good morning. How are you considering developments in the Middle East and the risk aversion we're starting to see and the move in crude off the back of threats of military strikes in Iran?
Yes, I do think that the probability of that is clearly rising. I do also believe that the Middle East is now one of the middle powers, as you can see, that region between the Western and the Eastern Hemisphere, which is getting dominated by US on the West and China on the East. And that region is becoming very critical from a logistics standpoint, from a trade capital standpoint. So I do think that the higher likelihood of tensions in that is going to cause some market volatility.
Geopolitics is traditionally very, very hard to predict, so I'm not going to put you on the spot and ask for a prediction. I'd like to go through a range of scenarios, one in particular. If we do get another spike higher in crude, and year to date we've already seen a move of almost 20% on crude, whether that would upend some of the cyclical trades that a lot of people have gained some enthusiasm for coming into 26.
I think the most important manifestation of an increase in oil prices will be on the CPI. And I think that the inflation outlook, which has been relatively okay, even the expectations of core PCE in our models is about 2.7%. If assuming crude prices at these levels. So I think that can really be detrimental to the inflation situation, which then leads to the rate story and therefore, of course, some of the cyclical trades unwinding. And so that's something to keep in mind. But I do not think our base case view here is there is still supply, there is still OPEC capacity to supply oil. So there could be an interim move, but I think overall, the demand-supply situation is not justifying a spike in prices once the dust settles.
Could it, though, galvanize the hawks on the Fed to potentially want to continue their wait-and-see mode or even hike?
Yeah, I mean, I think that, the interest rate expectations in terms of 2 cuts are the maximum we can get. And based on the current CPI and the PCE at 2.7%, as I mentioned, I think that at these levels, one can expect maybe a cut or maybe none. So that will definitely be an issue for Fed cuts.
When do you have your first cut priced in?
Next year.
Next year. So
Yeah.
this whole year will be wait-and-see mode when it comes to Federal Reserve. Is that even possible to Kevin Warsh at the Fed?
Well, I think it's going to be a function, as I said, of inflation, but also employment. And that clearly there has been some stabilization, but we are not out of the woods there. So there will be an equal emphasis there. So I think we could definitely see a cut, but the fact that QT is over and the Fed is expanding their balance sheet, that may be under question under Warsh because he has not been really a proponent of that.
Let's stay on equities. On the equity side in the US, the rally stalled at the index level, and we can see that the S&P within around 2% of all-time highs. It's taken off elsewhere, Japan, South Korea. South Korea's had a massive move year to date. And EM equities, looking at the EM equity story for year to date, double-digit gains so far. What's happening there? What am I buying? What's the story at the moment? What's the bet?
I think you're buying uncorrelated sources of alpha outside the AI trade and the maximum juice on the AI trade, which is the AI enablers. So in Asia, it's a lot about the semiconductors, the networking equipment exports, the capex that's coming with those exports, and the net worth effect that's happening with the buoyancy in exports. In pockets of Latin America, you have a commodity tailwind because a lot of these countries are actually in the critical mineral supply chain and copper and uranium and all that we need to power this AI story. And then in Eastern Europe, you have spillovers from pockets of Europe and the stimulus there. So the core versus the periphery versus Eastern Europe, I think the smaller cap countries look interesting, which are in the emerging space. So different sources of drivers across different regions, which is powering this. And lastly, the monetary and fiscal orthodoxy in the EM world has been much more superior than the DM world. So that is showing up in terms of central banks cutting rates, in terms of fiscal balances being in a much better situation than the developed world, especially the US.
When you look at the backdrop, how much of it is a cyclical story versus secular? Is it a mix of both?
It's a mix of, but I'd say one interesting theme that is developing in North Asia specifically, which seems to have structural legs, is US will not be able to really onshore everything, right? Whether it's shipping, some electronics, biotech, automation, robots, and that supply chain, the autonomy supply chain. They won't buy from China, but they'll buy from North Asia, which have export similarity like China, and where those vendors will be US preferred in terms of supply of all these things. So I think that's another area outside semis and tech that is seeing momentum in terms of the markets.
So you want to be exposed to those, what potentially are these partners with the United States when it comes to national security and core features of the AI trade?
Right, and even like shipping, in autonomy. Look at the robot density in China compared to the US. So the second derivative plays of sensors and LiDARs and everything that is in the supply chain of autonomy, which is coming on the factory floor in the low altitude economy in space. So yes, I think Korea, Japan are some interesting markets there to source a lot of this because China is going to not be the preferred vendor.
Do you think the midterms will be a catalyst to potentially pour money back into the United States because there'll be looser fiscal policy?
The interesting thing is that, there has been de-Americanization on the trade side where regional trade blocks and trade deals are being made. On the capital side, interestingly, we are still seeing a lot of FDI come into the U.S. So I think that is because part of the trade negotiation has been bring capital back. I was at a healthcare conference. So a lot of the companies said we're bringing manufacturing back. So I think that seems to happen and will continue. But I think the big thing on the midterm is what does a Democratic win of the House mean? We've seen a lot of Trump trades in the market. Does that come under question? Gold is a Trump trade, regional banks and deregulation. So I think one has to be really discerning because that could have some sentiment impact tactically in the market.
You think the financial story is vulnerable?
I don't think the financial story is vulnerable because I do believe that the consumer and the private sector from the banking side is delevered in the U.S. There's no excesses. The excesses are residing more else, in private, probably. But I don't think it's vulnerable. But I think there has been a decent momentum trade there, and one has to be just discerning.
Can we finish on that on private markets? So I'm not going to talk about the story too directly because I imagine you can't talk to it directly either. I'll talk about it in general terms. When you start to see redemptions and certain funds struggle to meet redemptions, people start to have concerns about what's developing. And the story this morning, of course, is Blue Owl, and the stock is down again by 3.7%. Do you see risks of contagion, broader systemic risk emerging here? Or is leverage so much lower this time compared to, say, 07, 08, that you can have pockets of instances like this that don't necessarily mean we've got bigger problems around the corner?
Yeah, I don't think there has been an excessive and a systemic crisis in the making here. Of course, that market's grown because the banks have retreated due to all the regulatory issues. Some of that will, with the deregulation, the banks will come back into that space. So the returns you made in private credit in the last few years, maybe you cannot make those same amount of returns. But there have been very strong players in this space, and I don't think this will lead to a systemic crisis, but definitely there is more competition in that space coming from the traditional banks.
Given how much, though, this economy increasingly has become dependent on being powered by private market, do you think the economy in general could be vulnerable to a tightening of credit conditions?
I really don't believe there is a systemic crisis here because in the history of markets, there is crisis only when there's excessive leverage, when credit grows way above GDP. Our thumb rule is when credit grows 20% more than GDP over a 5-year period, that is a red flag. I don't see that in pretty much many pockets of the world. Like you don't. A lot of the credit side, there's been deleveraging. So yes, there's been retrenchment on the households and the corporate side in traditional banking channels, and some of these pockets have grown, but there is not like an excess in terms of empirical numbers.
Jitanya, good to see you. Thanks for your thoughts. Lots to think about. Jitanya Kandari there of Morgan Stanley Investment Management with an update on stories worldwide with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. Blue Owl facing another day of losses. Shares are down 3.7%. The private credit giant selling a $1.4 billion portfolio of loans to help return cash to investors. Blue Owl finding 4 buyers, including 3 of North America's biggest pension funds and its own insurance firm. The sale was part of a plan to return cash to investors in the firm's Blue Owl Capital Corp. 2, a strategy aimed at retail investors. NVIDIA is close to finalizing a $30 billion investment in OpenAI. The Financial Times reporting this will replace the long-term $100 billion commitment the companies agreed to last year. Negotiations are in the final stages and could be finalized as early as this weekend. And Senator Elizabeth Warren weighing in on the recent rift between the Federal Reserve and the White House. Senator Warren demanding that nominees to the central bank commit to protect independent research after any seek Director Kevin Hassett blasted a recent study from the New York Fed. Warren says nominees should swear under oath to not silence the Fed's independent research. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next, the morning calls plus Dana Telsey of the Telsey Advisory Group gearing up for a fresh round of data. That data 15 minutes away. Live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
We have core PCE coming up. We already know the vast majority of inputs to PCE. While it's new data, it's also kind of realized at the subcomponent level. And so, for example, when we map all the individual components, we actually think core PCE is coming at a decent 0.4%. Above what is listed as the Bloomberg consensus.
That was a bit of a clinic from John Hill of Barclays a little bit earlier on this morning. Check out the full interview on Bloomberg.com and, of course, the terminal and on YouTube too. Equity futures this morning shaping up as follows. Equity futures on the S&P negative by 0.05%. Ahead of that data 12 minutes away. On the Nasdaq, we're down by 0.07. On the Russell, small caps down by about 0.25%. That's the price action. Let's get you some morning calls. First up, RBC raising its price target on Wayfair to 92, noting strong results despite a muted outlook. Elsewhere, Bank of America raising its price target on Deere to 672, citing the company's first big beat and raise in years. A stock a little bit lighter, lower, softer this morning, down by 0.5%. And finally, Bernstein raising its price target on Walmart to 134. The firm expecting Walmart to deliver in the fiscal year and recommends buying on weakness. A stock a little weaker this morning. We're down by 0.2%. Let's stick with retail. Earnings season painting a mixed picture after Walmart's tepid forecast. A fresh read on the consumer still ahead with core PCE inflation data just around the corner. Dana Telsey of the Telsey Advisory Group writing trade policy, geopolitics and tariffs remain key drivers of global supply chain costs, complicating margin management and pricing strategies. Dana joins us now for more. Dana, good morning.
Good morning. Thank you for having me.
It's good to see you. Let's start with Walmart. So conservative guide. Lots of people came on and said that's just about setting the bar lower for the new guy, the incoming CEO. Did you like what you heard on the call?
I did. Look what you heard. You heard about fashion apparel being up mid-single digits in comps for multiple consecutive quarters. You heard about tariffs and that the brunt of price increases have already happened. You've heard that their technological investments are paying off. The speed and convenience that they're offering the consumer, they're capturing a wider base of consumers from all different income levels. That sets up the stage nicely for next week. Can't wait to hear TJX's numbers, given that they've been a traffic beneficiary.
So when it comes to Walmart, though, and this guidance lower than the street was expecting, do you think that is just them doing what Jonathan said, conservative because it's a new CEO at the top, and you expect that guidance to rise then based off the call?
I think you keep going throughout the year. You have a first quarter coming up, which still has some tariff headwinds in it. Then you have the second quarter moving along. You've got the tax refunds that are coming in. That should be a sales driver, particularly in the first half of the year. So let's see what it looks like. They gave a wide enough range that there's a lot of places that they can go, and the investment spending should deliver returns.
Who else do you like in that range? The individuals that are going out shopping at Walmart. What other retailers are doing well like Walmart? Is it Target and Costco or no?
Not Target, it's Costco, but it's also TJX. Let's see what TJ reports next week. Keep in mind, TJ has diversity of categories, home and also apparel. They don't have food, because remember, Walmart is 60% food. That's different than apparel. Target reports their earnings on March 3rd. You have a new CEO there too, and he's going to have to lay out the game plan. It's a different story at Target than it is at Walmart.
Dana, so much of the last year or so, in fact, the last several years, the retail landscape has been about the success at the top and the bottom of the K. So at the very top, you've got ultra-luxury Hermes, LVMH, and at the bottom end, you're capturing the trade down, the discounters, TJX. I think there's some interesting stories happening in between now, and Ralph Lauren is one of them. Can you give us your thoughts on what's happening with that name, what the management team are doing to capture this moment?
A couple of weeks ago, I wrote this piece on enhancing the core. One of the things you're seeing legacy companies do to reinvent themselves, they're taking their core product offering and updating it, modernizing it, and rejuvenating it. That's what Ralph has done. At the same time, they're also, as they call it, expanding for more, whether it's women's, whether it's outerwear, whether it's accessories. And they're doing it globally. And they're doing it with their own DTC business, in addition to having a stronger wholesale relationships with some of the department stores and other vendors they sell through. And let's not forget the awareness. Olympics, it's going on now. What do you see? You see Ralph Lauren. You think about all the tennis matches, whether it's the Australian Open, the US Open. So their awareness is going among a broader consumer. They're able to get some higher margins, and they're driving it through product that people want at a higher AUR. We're seeing legacy companies reinvent themselves. And for discretionary in 26, let's watch Victoria's Secret, let's watch Urban Outfitters, and let's watch The Gap.
Well, when it comes to Ralph Lauren, they're unapologetically American, Americana. We saw really American Eagle also lean into this. Is this a new phenomenon in fashion that some of these brands are leaning into that legacy of nostalgia of being an American brand?
I think there's legacy. It's American, but it's also newness, because what these brands are also doing, partnering. You talked about American Eagle, Sydney Sweeney and Travis Kelce. It mattered.
And Martha Stewart.
Yes, it mattered. It meant something. You look at Abercrombie, NFL. They're the fashion partnership with the NFL. You look at Gap. Gap, and frankly, the creative direction of Zach Posen with the Gap brand, and frankly, some of the partnerships they've done on the music side have driven interest in denim. That matters, and I think we're seeing that.
After New York Fashion Week, obviously everything moves to Europe. Montclair overnight had incredible numbers. A lot of this was be driven by China. What is your take right now about the Chinese consumer?
I think overall something to still be watching. I think we still need to see the strength rebound. We've seen some improvement in travel retail, but you need to see the European luxury goods do better in China.
What do they like right now? It used to be the cliche, the stereotype was just big brands plastered over everything, big logos. Has that changed?
I think some of it is their own Chinese brands. I think that's what's been different.
That's a shift.
Yeah, that's a shift. And it's been that way for the past year or two, and that's what's made it more difficult for some of the international brands.
So we're starting to become more accustomed to some of the Chinese brands with regards to the automobile industry. What are the names that you're tracking at the moment that maybe in the West we need to be slightly more aware of?
Oh, I think basically I'm looking at the European luxury goods names and some of the American names over there. When I think of Chinese names coming over here, it is the auto names that come top of mind.
BYD. It's amazing how quickly that has dominated a market like, say, Europe, and increasingly the one to watch is what happens north of the border in Canada.
Yep, Canada potentially willing to have more Chinese electric vehicles coming in. Also, this country, we have a report that Ford executives talked to U.S. officials about a joint venture with Xiaomi. Do you know why? They can produce these EVs in less than half the cost, basically, of, say, a Tesla. Remember that $7,000 BYD that looked like a brand new luxury car?
Nuts. Dana, just quickly, home bias, forgive me, New York.
No worries.
We've had some bankruptcies, Saks. What's going to happen with Bergdorf's around the corner?
We'll have to see. So far, they're keeping it. The new CEO, Jafar Van Ramdank, wants to try to put the business back together. I'd have always thought that LVMH would have had an interest in Bergdorf's, and then you'd have them having all four corners of 57th Street.
Yeah, that corner would be ridiculous.
Amazing, right?
Just own the whole thing.
Yeah.
Okay. All right, Dana, good to see you. One to
Thank
watch.
you.
Thank
Nice to see you.
Thanks for dropping by. Dana Towsey of the Towsey Advisory Group. Ahead of this inflation data, a better story to tell coming out of Walmart to basically communicate to people on the call yesterday and through various communication efforts to suggest that the normalization in pricing story, that's done. The tariff bump might be over.
Tariff bump might be over, but you have to ask, what is going to happen in terms of the Supreme Court decision today? Do you see more companies lining up, want the rebates, only to then have to pay the tariff rates when the administration then enacts new policy?
So let's get to that economic data. Up next on the programme, the latest PCE and GDP data set to cross. Mike McKee will break it down. We'll get reaction from Kathy Bostjanczyk of Nationwide in just a moment. Into that, here are your scores. Equity futures on the S&P softer by not even 1/10% on the S&P 500. In the bond market, yields just about unchanged to the front end of the curve, down a single basis point on 10s, 4.056%.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Seconds from now, a ton of economic data. Mike McKee challenged with breaking that down for you in just a moment, so bear with us. Going into it, your scores look like this. Equity futures on the S&P just about unchanged on the S&P 500. Likewise on the Nasdaq. In the bond market, yields shaping up as follows. Across the curve, 2s, 10s, 30s look like this. Down at the long end on 10s by a basis point, on 30s by about the same. Your 10-year 4.05, your 30-year 4.68. With the economic data, let's cross over to Mike McKee for more. Good morning, Mike.
Good morning, John. We're waiting for it to drop here from the Bureau of Economic Analysis. It's not out quite yet, but any second now. Here we go. The numbers for GDP annualized, only 1.4%, raises the question, did Donald Trump leak something he wasn't supposed to? Personal consumption spending, only 2.4% higher. The personal income and spending numbers are more in line with what was anticipated. Personal income up 0.3, same as last quarter, same as last month. These are monthly numbers, and it is the same as forecast. Personal spending up 0.4. That's a little bit stronger than anticipated. The consensus was for a 0.3 move. Now, the inflation numbers, the price index on a month-over-month basis up 0.4. On a year-over-year basis, it goes up from 2.8% to 2.9%, so a rise in the headline. The core up 0.4, and the core year-over-year is up to 3% from 2.8%. That is something that does not look particularly good if the Fed wants to cut interest rates again. But again, these are December numbers. We've got the January CPI. Next week, we get the January PPI. I'll break down more of the detail, John, and you can tell us if we're getting much reaction yet.
Yeah, I'll get to some of the price action for us, Mike. Equity futures still a little bit lower, down by about 0.1%, down by 0.2. You're seeing that play out on the Nasdaq, on the Russell, down by 0.5. If we switch at the board and turn to the bond market, so yields coming into this, we're down about a basis point at the long end of the curve. This is where things stand right now, just about unchanged. So we're raising some of that move. Tends to the
ओके डेटा जो आना था यूएस जीडीपी का ऑलरेडी आ चुका है. एक नेचुरल गैस में देखो यहाँ पर एक बाइंग मुझे लग रही है पॉसिबल है. इसी लेवल से प्लान करते हैं. यूएस मार्केट ओपन होगा, कोई डेटा तो नहीं है आज खैर. तो डे लो के अप्रॉक्सीमेटली सपोर्ट एक्सपेक्ट करेंगे कि प्राइस होल्ड करे. नीचे आता है तो इस लेवल पे चेकआउट करते हैं एक बाइंग के प्लान के लिए. ठीक है, 15 मिनट में ही होगा, 30 मिनट में नहीं होगा, ध्यान रखना. दिस इज नाउ दिस लेवल में एक्ट लाइक एज अ सपोर्ट. कोई रेजिस्टेंस तो नहीं है, तो नॉर्मल प्राइस एक्शन पर ही बिहेव करेंगे. क्रूड ऑयल स्टिल साइडवेज, कोई वहां पर दिख नहीं रहा है मोमेंटम होता हुआ. ये एक ट्रेड रहेगा अब यहाँ पर वापस से. इंपॉर्टेंट लेवल है, अभी इस लेवल पे 15 मिनट का ही चार्ट है, ध्यान रखना 1 मिनट का चार्ट लगाया जरूर है फॉर बेटर व्यूइंग, अदरवाइज यू कैन ऑल्सो यूज 15-minute chart as well. फिफ्टीन मिनट में देखना अभी सेम लेवल को। Guys, don't forget to like the stream. ठीक है, क्रूड ऑयल बहुत ही ज़्यादा पॉज में चला गया है, बड़ी कैंडल बन सकती है मुझे लग रहा है यूएस मार्केट के बाद या फिर यूएस मार्केट के अराउंड। मार्केट 3 दिनों से कंटिन्यूसली बुलिश बना हुआ है, परसों बॉटम पे आया था, कल मोमेंटम था, उससे एक दिन पहले मोमेंटम था, 17 को बॉटम बनाया, 18 और 19 को मोमेंटम में था, आज रिट्रेस किया है, लेट्स होप आ जाए, अगर आज आता है तो 5850-60 के अप्रॉक्सीमेटली। सपोर्ट तो नहीं है, फिर भी प्राइस पता नहीं क्यों होल्ड कर रहा है क्रूड का। वॉल्यूम इज वेरी थिन एक्चुअली। नाउ नेचुरल गैस में आज का जो लो है बॉटम वो काफ़ी इंपॉर्टेंट है. अगर वो सस्टेन नहीं करता है तो फिर डेफिनेटली इट विल गो फॉर 254 250 जहाँ देख रहे हैं. अगर वो होल्ड कर जाता है तो फिर वापस से वही 287 289 तक जा सकता है. बीच में और कोई रेजिस्टेंस फिलहाल तो नहीं है. क्रिएट हो जाए अलग बात है, अभी नहीं है. सो दिस लेवल इज़ वेरी इंपॉर्टेंट. डे लो 269 270 268. So watching this level carefully in natural gas price को थोड़ा सा bullish होना है तो it should hold this day low level. लास्ट 2 डेज से कोई ट्रेड नहीं बना है, आज ही ये ट्रेड बना है अभी. Iranian Navy deployed the destroyer Dana to the Indian port of Visakhapatnam ahead of its participation in India's Milan 2026 naval drill.
Ausgetragenen Antisemitismus in Deutschland, von islamistischen Debatte in unserem Land noch ein Wort sage. Die schlimmsten Angriffe auf unser Iran Foreign Minister signaled that a 3 to 5 years pause in uranium enrichment could be considered as part of the potential deal with US. He suggests that the US is considering this. Take what he says with caution. US aircraft carrier Gerald R. Ford has entered the Mediterranean Sea.
We saw a long government shutdown like this. The way the BEA kind of calculated it was to take away the value of the hours worked by federal employees since they weren't working. And then that translated into higher inflation, which then translated in.
इसकी जीडीपी भी देखोगे क्वार्टर ऑन क्वार्टर बेसिस पे लास्ट क्वार्टर 4.4% थी. इस क्वार्टर 1.4% है. वैसे फोरकास्ट 2.8% का था, उससे थोड़ा सा कम ही है.
with a daring triple flip. She edged out two Japanese.
Wow, silver again 3% positive. MCX तो almost 3.59% positive हो गया. 4 hour time frame level still holding. गोल्ड अभी भी 1% के नीचे ही है. 1 hour टाइम फ्रेम पे देखोगे तो एक चांस बन सकता है 5230 तक. 4 hour टाइम फ्रेम पे 5400 500. सिल्वर 4 hour में तो कोई रेजिस्टेंस है नहीं 1 hour टाइम फ्रेम पे. टाइम फ्रेम पे तो ये ऑलमोस्ट ऑल टाइम हाई जाएगा शायद. कोई सपोर्ट ब्रेक नहीं हुआ. न्यूज़ का कुछ खास इम्पैक्ट, डेटा का कुछ खास इम्पैक्ट गोल्ड और सिल्वर में नहीं है. मिक्स डेटा था. एडवांस जीडीपी का डेटा थोड़ा सा नेगेटिव फॉर गोल्ड एंड सिल्वर, नेगेटिव फॉर यूएस डॉलर, पॉजिटिव फॉर गोल्ड एंड सिल्वर. बट बाकी तीन डेटा जो है एडवांस जीडीपी, कोर पीसी प्राइस इंडेक्स का डेटा पॉजिटिव फॉर यूएस डॉलर, बेरिश फॉर गोल्ड एंड सिल्वर. तो मिक्स डेटा. 15 मिनट टाइम फ्रेम की कैंडल देखोगे तो वॉलेटाइल कैंडल सिल्वर में भी, गोल्ड में भी. गोल्ड थोड़ा सा लेकिन फिर भी बुलिश होता हुआ. कैंडल ओपन इक्वल टू लो अगेन इन गोल्ड फॉरेक्स चार्ट. आइडेंटिकल रेजिस्टेंस बना दिया इसने ऑलमोस्ट 5075 पे गोल्ड ने फॉरेक्स में. ब्रेक हुआ तो जरूर जाएगा ऊपर. सिल्वर में इतना बुलिशनेस नहीं लग रहा जितना गोल्ड लग रहा है. डॉलर स्टिल होल्डिंग $97 लेवल अबव 97.650. $98 के अराउंड भी जाने की कोशिश करी तो थी कल. जा नहीं पाया था. लेट्स होप अगर आज जाने की कोशिश फिर से करता है $98 के ऊपर भी. $97 के ऊपर डिसाइसिवली होल्ड करके बैठा हुआ है. कल डिस्कस भी कर रहे थे डेली टाइम फ्रेम पे, चांसेस हैं अगर होल्ड करता है $97 के ऊपर तो $100 तक भी जा सकता है यूएस डॉलर. 8 बजे यूएस मार्केट ओपन होगा. देन 8:15 और 8:30 पे डेटा है इंपॉर्टेंट. एंड नवंबर मंथ का डेटा भी है न्यू होम सेल्स का. 8 PM 8:15 एंड 8:30.
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Karen Moscow. The U.S. is amassing its biggest military force in the Middle East since 2003 as it pushes for a deal with Iran. President Trump said Iran has 10 to 15 days at most to strike a deal over its nuclear program. Speaking to reporters on Air Force One, the president was asked what happens if no agreement is reached.
I'm not going to talk to you about that, but we're either going to get a deal or it's going to be unfortunate for them.
Oil trading near a 6-month high over the heightened tensions. Checking NYMEX crude oil, it is at $66.36 a barrel, while Brent crude is at $71.39. President Trump is declaring victory in the fight over cost of living concerns. He paid a visit yesterday to the crucial battleground state of Georgia.
What word have you not heard over the last 2 weeks? Affordability. Because I've won affordability.
And this signals a new approach by the president. He denied problems with his economic agenda while touting stock market gains to insist that his tariff plans have been a success. The former Prince Andrew has been released about 11 hours after his arrest by British police. He was held on suspicion of misconduct in public office related to his links to Jeffrey Epstein. Begin more with Bloomberg's Michelle Hussein in London.
Essentially, he spent his 66th birthday with the police. He was released under investigation. That's the formal term. Remember, he's always denied any wrongdoing in relation to his association with Jeffrey Epstein. And while we don't know the specifics of the allegation that sparked his arrest on suspicion of misconduct in public office, the assumption has been and remains that this relates to the sharing of confidential documents with Jeffrey Epstein, which appears to have been the case visible from the Epstein files.
And that's Bloomberg's Michelle Hussein. And for a deep dive into the arrest of former Prince Andrew, check out a special edition of the Michelle Hussein Show podcast, available anywhere you download your podcasts. Meanwhile, police today continue to search Royal Lodge, Andrew's 30-room former home on the grounds of Windsor Castle. The Jeffrey Epstein reckoning continues in the U.S. The late sex offender's estate and its 2 co-executors have agreed to pay as much as $35 million to at least 40 women who claim they were abused or trafficked between 1995 and the day of Epstein's jailhouse death. The proposed settlement follows payments totaling $159 million from the Epstein Victims Compensation Fund to nearly 200 survivors. A federal judge in New York still has to approve this latest settlement offer. The search for Savannah Guthrie's mother is now in its 20th day. Pima County Sheriff Chris Nanos said the FBI has received more than 20,000 tips in Nancy Guthrie's disappearance, but he says some tips carry more weight than others.
When those tips dry up, this case goes cold. We believe somebody out there knows who did this. We need that person to call us.
And Pima Sheriff Chris Nanos spoke to the ABC affiliate in Tucson. He says investigators are looking into whether the suspect bought other items he's seen wearing in surveillance video. A glove found near Nancy Guthrie's home failed to trigger a DNA match. Nanos said other DNA evidence found in the home is still going through lab analysis. Crews hope to resume efforts to recover the bodies of 8 people killed in an avalanche in California's Sierra Nevada and search for a person missing but presumed dead. The renewed push follows days of dangerous weather that has hampered safe access to the area. The Palm Beach Airport will soon be renamed after Donald Trump, making it the latest institution to bear the name of the president. Florida's Republican-led legislature has approved a bill renaming the airport in Trump's adopted hometown as President Donald J. Trump International Airport. Governor Ron DeSantis is expected to sign it into law. Shares of Newmont Mining are lower. The world's biggest gold miner expects to produce less bullion this year. It blames planned upgrades at some of its managed mines and lower production at 2 ventures jointly owned with Barrick Mining. And United Airlines is overhauling its loyalty program. It's offering more benefits to customers who carry the airline's co-branded bank cards while reducing some rewards for budget flyers. And taking a look at futures this morning, they are slipping as traders assess the potential impact of conflict in the Middle East and await a slate of economic data. Oil retreating from the highest level in 6 months. S&P futures down about 0.2%. So are NASDAQ futures. Dow futures down 0.1%. And the 10-year Treasury yield 4.06%. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
As a place to do business, the UK stands apart. Not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading financial centres, the UK puts over £10 trillion to work every day, fueling innovation across every sector. Home to 4 of the world's top universities, it provides exceptional talent and breakthrough research. This sits alongside a clear 10-year industrial strategy, unlocking smarter regulation and making it faster and easier to operate. Stability with dynamism. Global connectivity with local depth. It all adds up to greater growth. Visit business.gov.uk/growth. The new
Okay, 30 minutes left. US market opening.
want more slow news days than they're getting at the moment.
I mean, this is the weird thing, Silas. You've covered this sector for a while. Like, private credit is usually a little bit more sleepy, a little bit slow, and now it's like the sexiest, topic that could possibly be out there. And you're right, it's not just Blue Owl. It's a lot of these private capital giants that are being hit on this. It's a lot of BDCs that are having issues in terms of just the reaction of share prices. But have any of them come out and spoken about their own liquidity issues, or does it seem to really be centered around Blue Owl right now?
Yeah, I think Blue Owl has been the one who's been most maligned by this. And I mean, maybe part of this is just kind of that it was, largely seen as the kind of poster child, a sort of success story in private credit and was a kind of relatively newer player. Certainly under the brand name Blue Owl. So maybe that's why they're getting a bit of the brunt of it. Maybe it's also that they were kind of very much branded themselves as a big software lender, one of the largest software lenders, and with the kind of headwinds that the software industry is going through now with AI, maybe they was one of the reasons why they bore the brunt of it. But yeah, no, I think for a sort of for a once sort of sleepy corner of finance, and also a corner of finance that sort of somewhat relies on steadiness. These are long-term loans, normally long-term lockups from investors. I think this level of volatility and kind of market noise is not. I'm pretty sure they're considering this not desirable.
I'd have to assume that that is correct, Silas. Thank you so much for joining. That's Bloomberg's Silas Brown. And we're going to get more on private credit in the next hour with a GP stakes company. So they invest in private credit managers. That's Bonaccord Capital partner Brad Pilcher. Now, oil at elevated levels amid fears that the U.S. may strike Iran if no nuclear deal is reached in the coming days. Brent is near a 6-month high as traders assess the risk to oil supply. Bloomberg Intelligence senior commodity strategist Mike McGlone joins us. And Mike, it was specifically Donald Trump that said that Iran has 10 to 15 days to reach an agreement before this risk presents itself. Can we understand what exactly oil markets are pricing in right now? How much higher do they have to go if we get near that 10 to 15 day deadline with no agreement?
Well, I love your question, Danny, because it nails it. It's exactly the uncertainty. We don't know exactly what's going to happen. Will there be a sustained supply destruction? Probably not. Will there be some kind of action? Probably. You don't move an armada there like that and not do anything. But the bottom line is every time we have these pumps due to potential risks of supply curtailment in the Middle East, it pumps up prices to the upper end of the range. The Western Hemisphere, mostly the top producers on the planet now, which is U.S., Canada, and all the way down to Argentina, sell forward on the curve. They bring on more supply, rinse and repeat, the prices go back down. So to me, it's just a question of how high we go. And I think we're in that point of putting in the peak. It's just hard to trade it when you have such uncertainty.
When there's uncertainty, and we have seen this, gold has come in favor too, Mike. It goes back above $5,000, but just given the lofty prices of gold and the fact it seemed like gravity didn't apply, how useful of a geopolitical hedge is it right now?
That old store value has relative value that's just way too expensive. Now, I'm very concerned. Been a bull on gold forever, but now we're in that silly stage of just getting too expensive. And if you look at gold versus crude oil, basically takes about 76 barrels of crude oil per 1 ounce of gold. Danny, that's almost the highest ever. The 100-year mean is 20. So for the most significant industrial commodity to be that cheap versus the most significant store value, to me, the risk is when we get some kind of ease of global tensions, the market that has the most to potentially lose is gold. And that's simply going back to $4,000 an ounce. So I'm very concerned that gold's run most of its bull market rally, and even silver too. 4,000,
Mike, just quickly, if it goes back to 4,000, are you expecting it to kind of drift down there? Are you worried that there's going to be a lot of volatility and painful on the way down?
Well, I'm glad you mentioned it. Volatility on gold, 180-day volatility is the highest since 2009. At the same time, volatility in the NASDAQ, 180-day volatility is the lowest since 2018. I fully expect that gold volatility to trickle over to the stock market, and that's going to be all that matters for most investors. Gold, I think, has already priced it in, and the best leading indicator for these risk assets go down is probably Bitcoin, and we know that's done. It's already leading the way lower.
Great point, Mike. Brilliant as always. Mike McGlone from Bloomberg Intelligence. Let's get a check on your futures market this morning. Decidedly risk off. A couple things. For one, you have what Mike was just discussing, this threat of escalation among Iran, and then you have the thing the other Mike was discussing, and that is GDP numbers coming in weaker. All of that sending stocks lower as the NASDAQ underperforms and the Russell 2000 underperforms even more. But that concern about economic cyclicality, those shares in the index down about 0.8%. Coming up, President Trump says that he won on affordability and may finally find out whether the Supreme Court today views his tariffs as legal. We're going to have your DC update coming for you next. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Let's get you to high interest stories. A look at what's making headlines around the world. One we've been closely following here on Open Interest. Private credit funds have long pitched themselves as safer because investors lock up money for years. But Blue Owl Capital now faces a wave of withdrawal requests from its retail private credit fund. The news challenges the idea that private credit is insulated from liquidity stress, as a new report shows that redemption requests at large BDCs jumped 200% in the fourth quarter. Senator Elizabeth Warren is urging tougher rules and more disclosure for the sector. Palm Beach International will be renamed President Donald J. Trump International Airport after Florida lawmakers approved the change. Governor Ron DeSantis is expected to sign the bill. The move still needs FAA approval and naming agreements as the Trump organization seeks trademark control. Rebranding could cost $5.5 million, drawing criticism from Democrats over spending. And President Trump says that he's won the affordability fight, pointing towards easing inflation, job gains, and tariffs he claimed revived U.S. manufacturing.
What word have you not heard over the last 2 weeks? Affordability. Because I've won affordability.
His comments come as polls show voters have soured on Trump's economic policies, endangering Republicans' hold on both chambers of Congress and the future of Trump's legislative agenda. Joining us now is Bloomberg Washington correspondent Tyler Kendall, and it's a true treat because Tyler's in New York today. Hey, Tyler, thanks for joining.
Thanks for having me.
Maybe someone should show President Trump the most latest PCE numbers, but if Trump is declaring that he has won on inflation, on affordability, what does that mean for some of his policy pronouncements that he's been trying to hand down to tackle affordability?
Right. So, Danny, we've really picked up on this from a Washington angle because it almost felt like President Trump was signaling a shift in his messaging. This feels like a lot more of an offensive, of an aggressive messaging on affordability, considering that the White House really has been playing defense when it comes to the issue. You mentioned polling. I grabbed some of the most recent one we saw out just the other week from Pew. 72% of U.S. adults rate economic conditions as only fair or poor. And that's sort of the headwinds that this administration is dealing with. And to your question, we've seen them approach it perhaps two ways. One, floating those new populist policies that probably won't make their way through the U.S. Congress unless the president tried to take some sort of unilateral action, as we often seen him. And then also touting those policies that have already been enacted. Most notably, you're going to hear the White House push a lot about how Americans are going to get those larger refund checks under the One Big Beautiful Bill. The question, of course, then becomes what are Americans going to do with that extra cash? Save it, spend it, or pay off some loans?
I mean, Americans historically love to spend, so we'll see what happens. Of course, the other thing that could maybe change a lot of this is if we get a Supreme Court decision today. 10 a.m., the Supreme Court gives decision. Is there a possibility we could hear something on IEPA?
So maybe is the answer. We don't know when the Supreme Court will rule, though we're expecting them to rule at least before the end of their term, which is in June. But some court watchers have pointed to the fact that the justices decided to take this case on in what's considered to be an unusually aggressive schedule. So that signaled that perhaps they want to rule sooner rather than later. But at this point, there's really no telling. But it is such a pivotal part of the Trump administration's agenda. We know that it's hanging over the balance when we're talking about trade negotiations that are still ongoing. Right overnight, we just saw the latest deal inked with Indonesia. But it's also opening up this question about what potential refunds would look like if the administration ends up being on the hook. That decision may not be decided in this case. The court may not rule on whether or not we will see these tariff refunds. But Danny, keep in mind, under the IEPA tariffs alone, just this subset of tariffs, the U.S. government took in $133 billion last year.
So the other thing on the administration's agenda is this proclamation President Trump gave, 10 to 15 days for Iran to come to the negotiating table for some sort of deal. Where do conversations stand at this moment? Because there was that Axios op-ed this week that really had people concerned that we're heading towards some sort of larger conflict.
So when you ask the White House, officials will always tell you that every option remains on the table. That's what we repeatedly hear, but we have to put some context behind this, right? The first is that going into these talks, we know that there appears to be these contrasting parameters between what the U.S. and Iran want to see in an ultimate deal. Yes, the nuclear program, the question about whether or not Iran will be allowed any domestic enrichment capacity, but the second part of that is that we know the U.S. wants some of these other action items to be folded in, Iran's ballistic missile program, as well as its support for proxy militia groups in the region. And without that actually firmly on the table, it's hard to see what the Trump administration would be willing to agree on if they choose the route of diplomacy. The other backdrop of this, of course, is the massive buildup of U.S. military assets, which is raising the stakes and raising the alarms in that region.
Yeah, and I got to say, it seems like the market's finally paying attention to that, too. Tyler, thank you so much for joining us this morning. Bloomberg's Tyler Kendall. Coming up, we'll talk more about market reactions to that and otherwise. Nimrat Kang looking for software stocks that have been oversold by the AI scare. She's going to share her thoughts. That's coming up next. You are watching Open Interest.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Wall Street stock pickers are looking for winners outside of AI, as well as software stocks trading at a bargain. Among them, Northstar's chief investment officer, Nimrit Kang, saying we are leaning into industrials and healthcare and looking for AI survivors in the software space, which the market has prematurely discounted. I'm so pleased to say that Nimrit joins me now. And it's a space that's been really punished at some points indiscriminately. Nimrit, where are you finding bargains of stocks you like that have been thrown out with the bathwater?
Yes. Danny, it starts to feel to us like AI is the hammer looking for, any nail. So basically what we've seen in the last few weeks here is just indiscriminate selling. It doesn't matter, you see a tweet, a company launch some kind of a tool, and you'll see a major sell-off in the stocks. I think what we have to do as investors is to continue to look at companies that have proprietary data sets that are adding a value and are going to be the ultimate AI enablers in this whole landscape. So that's how we would be focused. And there are plenty of opportunities that we're seeing because since June of 2025, the semiconductor index has outperformed the technology index almost by 100 percentage points. That's a lot. And that's where we're seeing the value.
What is the moat then? What is the characteristic you look for in the software company to say this thing can survive whatever sort of AI startup karaoke company throws at it?
Yes. Really good question. It really comes down to what is so proprietary about it. And just to answer that, I'm going to frame this question a little bit. Back in 2016, 2017 timeframe, we went through this phase where companies were getting sold off every time Amazon put out a press release that they were entering a new market. As a matter of fact, they acquired Whole Foods, and what that ended up happening is Walmart, Kroger, all these companies got crushed, right? And reality, 10 years later, is that we have not all just started shopping at Amazon for our groceries. We still go to the grocery stores. And those stocks are up like 4 or 5 times from those lows. Same thing happened at industrial distribution. So I think for us as investors, we need to look at what is the proprietary thing that the company is doing? What is their moat? Take, for example, Verisk Analytics. This is an insurance analytics company that has proprietary data sets that are being used to determine what's the insurance loss ratios that should be used and how insurance companies can put through premium increases. Is that going to get completely disintermediated? Where are we going to get those data sets from? So those are the types of questions we're asking, and that's how we're trying to understand where the moat is.
The strange thing is also happening, Nimrit, where on one hand, you have this discussion of, is AI going to disrupt all these different companies? And then on the other side, you have a conversation of, are we in an AI bubble? Are things priced too richly that are building these AI capabilities? What about the other side of the trade, Nimrit? What do you think about the sensitivity about the hyperscalers and how much they're spending?
Yeah, it's actually a fascinating question, right? So 600 billion is what the hyperscalers are spending this year. That's 200 billion more than what they spent last year. To put it into context, the US defense budget for procurement R&D is something close to 385 billion. So we're spending almost twice that the US is spending on all kinds of procurement in on an annual basis. That's the level of tailwind that we're seeing. But what we're seeing, what you just mentioned, the market is saying this, AI is going to take out whole pools of industries, whole number of profit pools are going to get completely disrupted, disintermediated, and yet somehow we're going to keep spending to buy these semiconductor chips and powering the AI revolution. Well, it doesn't make sense, because if you're going to see the return, then the obvious companies that are going to make that, monetize that return, hyperscalers are going to be a big part of that, and the AI enablers.
Nimrit, you're going to stick around with us. We have a lot more to talk about. You're going to stay with us through the opening bell. And as futures fall, just minutes away from the opening bell, we are down by 0.33%. That's coming up next.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
I met him 1988 after my first restaurant opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did there.
You didn't know he was an actor?
No, I don't know what he doing because I never watched the movies. I was traveling, the business. But of course, after people, hey, Nobu, so you must know him, and then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He say, hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotels in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Just seconds until the start of your cash equity trading day. I'm Danny Berger, and you are watching Bloomberg Open Interest. We are down this morning. A couple things going on. Fears over Iran escalation. Also, more negative GDP data. I mean, not literally negative, but not as good as we expected. So S&P futures fall by about a third. The NASDAQ doing even worse, down 0.6%. And the Russell 2000, because of those economic concerns, even worse, down 0.7%. Bell ringers. Starfighter Space, not going to lie, a pretty sick company name. They're a commercial space flight company. They went public in December, and their shares have risen nearly 200% since then, so feeling pretty good. Down at the NASDAQ, Red Cat. Guys, not a single tie. Not a single tie. Come on. It's a special occasion. I guess it's okay if you're at the NASDAQ. Maybe it's more chill. Anyway, Red Cat, they make data storage, different services for autonomous drones. Those shares up 60% about year to date. Let me take you to some other stocks that we're watching this morning. Blue Owl is one of them. We, of course, cover private credit here for you on Bloomberg Open Interest extensively, and this is no exception. Selling $1.4 billion portfolio of loans to help return cash to investors. Blue Owl would argue, look, we did that close to par. It shows there's liquidity. You're welcome. They did have 4 buyers. They include 3 of North America's largest pension funds. And maybe the thing that's going to raise some eyebrows, its own insurance firm was one of the buyers too. So that not helping shares out this morning. They are down 6.5%. As always, we invite Blue Owl to come onto the show and to discuss the latest as to what they're doing. Let's get back to these overall markets, though. We're back with North Star's Nimrit Kong. Nimrit, you were talking about this idea in your notes that the broadening out trade is going to happen as this economy picks up. I just wonder what you make of the most recent data we had this morning, where PCE continued to look sticky and GDP disappoints. Just how sure is the trajectory of this American economy?
Yeah. The GDP data continues to be extremely noisy, right? Just like we had that bumper print in Q3 of 4.4, and now we have something like that's lower. I think rather than getting fixated on quarter to quarter, because we are going through this immense disruption in policy changes, government shutdowns, all kinds of imports, exports, so much noise. Instead, I think we need to just focus on the direction of travel. And we look at corporate earnings to get a sense of that. 13% increase in S&P earnings last year, projected to do something similar. So from that perspective, it's still a very healthy economy. I just mentioned something like, $600 billion that we're spending just on the capex from hyperscalers. We're going to get stimulus here. So there's plenty of tailwinds from the economy. But you're right, Danny. We haven't seen this translate into real economic growth. Look at rail traffic data, kind of flattish, right? Not much going on in home building. We need to see some broadening actually into economic data for the cyclical trade to have legs and continue going forward for the rest of the year.
How much of it is priced in at this moment, some of that rotation? Because it does have, I don't know, this might be going too far, but a violent feeling. Just the very fact that the surface level index has been pretty calm, but Goldman Sachs, or rather Citadel, pointing out that the absolute move of individual stocks has been averaging something like 10%. So as this rotation has been happening, how much of that is pricing in better economic data to come?
Yeah. It's primarily pricing in better economic data to come, because if you look at the analyst revisions, the revisions are still leading for technology sectors. We are not seeing that same kind of uplift that we're seeing in the stock prices. So the market is discounting well ahead of time. And that's why we would be a little cautious rather than going full on into the cyclical trade at this time. Let's take our time. Let's start to actually see some of the PMI, other economic data inflect positively. It almost feels like, the markets have become like bees, going from one hot trade to the other hot trade, right? First it's AI, then it's the cyclical rotation, then, it's outside of the US. So it's a lot of that herd mentality going on from one point to the other, and we just have to take a longer term view here.
It's a perfect analogy for what's happening right now, Nimrit. You did have Citi. They downgraded technology stocks to neutral. They say diversify away from the Mag 7, allocate into U.S. small caps. The latest Bank of America fund manager survey also showed investors rotating out of technology stocks. How are you thinking about technology exposure as well? Are you also thinking about rotating away from that, or is it just about lifting the exposure from the other parts of this market?
Yeah. I mean, technology remains essential to this story the way it is so far, right? You can't have the biggest tailwind coming to the economy from the technology sector, from the hyperscalers, and them not participating in a big way in this whole economic growth. So the two things have to happen here. Either we're going to have to start seeing a much bigger rebound in the economic activity outside of the hyperscaler spending, which we have yet to see. And a big part of that needs to come from maybe the interest rates need to come down. And that's a whole different discussion to get that segment of the economy going, but there isn't an impetus to do that yet. Or we need to go back, there needs to be just a balanced kind of a market dynamic where we're not going from one segment to the other. Rather, it's just a broader, all sectors of the market are participating. And technology, you can't have a market continuing to do well and technology continuing to lag.
You also mentioned, Imre, in sort of the B trade of where we hive around. One of them has been international stocks. You've certainly seen that. The latest Bank of America flow show note this morning saying that we're moving away from U.S. stocks into international at the fastest rate in about 5 years. What do you make of the trade? Is now time to look beyond the U.S.?
Yeah. It's always been a time to look beyond U.S. Unfortunately, it just didn't pay off, right? So if you looked at the last 10 years, international EM bottom of the pile in terms of the returns in versus the U.S. equities. Now, all of a sudden, they're top of the leaderboard, EM up 34% last year. And then, of course, we see all kinds of chasing going on there. But I think let's unpack that. What is the EM and an international trade? It really comes down to three things again. First of all, it is an AI trade. Say what you may, but, you start looking at the major emerging markets, Korea, Taiwan, it's a semiconductor trade, AI trade again. The second one is defense spending going up in Europe and other parts of the world. That's another one. And the third one is the dollar debasement trade. So it kind of boils down to those three things. And, it's always good to be diversified and have a presence outside. But again, going back to the fundamentals, look at Europe. We're not seeing a broad-based pickup in economic activity or consumption in Europe or other parts. It's really, again, tied to the same big boom in AI and defense and de-dollarization.
Nimrit, this was brilliant. Thank you so much for joining this morning. Enjoy the rest of your Friday and your weekend. That's North Star CIO Nimrit Kang. All right, let's get a check on your equity market right now. About 8 minutes into your trading day, and we have moved from decisively lower to decisively nowhere. We, though, do have breath to the downside. So quickly, let me go over some of the winners. It does seem to be big tech's day. Alphabet having a very good day, up more than 2%. Amazon up there at the top of the pile too. Nvidia, recall they will have earnings next week. How much does that change the tech trade? In terms of points moving, just because Apple is such a big composite part of this index, Apple is the biggest drag, even though it's only down 1/3%. Walmart, though, I just want to hang on that for a moment. It's down 1.7% this morning. It has fallen every single day this week. It is now down more than 8.5% so far the week. That will be, if it closes at this level, its worst week on record for this company. I mean, it's had a huge run up in share prices over the past year or so. So even with that, things are okay. But just to point out that they had earnings, and maybe there is some disappointment there with high expectations. So if you look at the sectors, consumer discretionary, or rather staples, is going to be near the bottom because Walmart's in there and all of its peers like Costco are also falling. Energy falls because the price of oil is falling today after a big pickup yesterday. I pointed out Alphabet, that was one of the biggest gainers, so communication services up there at 1.2%. We're going to get more into tech after this commercial break. Coming up, Netflix co-CEO Ted Sarandos tells Bloomberg that his deal with Warner Brothers will be good for theaters and accuses Paramount of spreading misinformation. We're going to have that fantastic interview with the man behind it, Ed Ludlow. That's coming up shortly. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Some breaking news to bring you. President Trump speaking to reporters at the White House saying that the U.S. is considering limited strikes on Israel. A limited strike, I think, is Israel, Iran, that would certainly be something different. A limited strike on Iran, please forgive me, Friday brain. This has been the concern that President Trump has given Iran a 10 to 15-day deadline in order to reach some sort of agreement. Maybe this is how he's thinking about what happens if that deadline to reach an agreement is not achieved. You can see that the price of oil, it was sinking, slightly drifts higher. Now is little change at this moment to slightly higher. We'll keep an eye on the price of oil. It's also been something that's been sending stocks lower. All right, let's get to your top calls this morning. Some of the analyst action that we are focusing in on. First up, Barclays is upgrading Etsy following its latest results and agreement to sell Depop to eBay. The firm says that Etsy is at a tipping point and needs to return to steady positive growth. Shares up 5%. Next up, Walmart is getting cut at HSBC after the retailing giant issued a cautious consumer outlook. Walmart is often viewed as the barometer for the broader economy because of its size and reach, down 2.2%. Again, I pointed this out. It's fallen every day this week, on track for its worst week on record. And finally, Barclays is initiating biopharma, calling the group a relatively safe haven in volatile markets and naming Eli Lilly as one of its top picks. The firm says Lilly is likely to lead the obesity drug market. Let's now turn to the deal and the drama over Warner Brothers. Netflix co-CEO Ted Sarandos said his company's acquisition of Warner Brothers could lead to more films in theaters. Here's his rationale.
We're going to keep Warner Brothers running pretty much like they are today. And in fact, it's even quite better for theaters because now that we're going to be in that business and own a theatrical distribution entity, we're going to take some of the Netflix films and put them through that as well. So it's very likely that you'll have even more outcome of high-quality films for the theaters if this deal goes through.
Sarandos also accused Paramount of spreading misinformation. Bloomberg Tech's Ed Ludlow conducted that excellent interview, and he joins us now. Ed, just your initial reaction to those comments that Ted Sarandos said to you.
Yeah, I think something that people have seized on overnight is at the end of that answer, he said, if the deal goes through. But in the sentence preceding it, he said, when we own these assets, we are going to have, and that's kind of been the consistent thing. In frank reflection on it, Ted Sarandos has always been confident that the regulatory road will be surmountable and that they are playing this by the book, particularly with the DOJ. And the process that it was codified in 2023. But the movie theater business is really interesting, right? That is the anxiety that they won't put in writing a commitment, literally in writing, to theatrical releases over a certain time period. But they have said that they will. And the final thing that is kind of attached to that is he was frank about Netflix's shortcomings versus Warner Brothers' advantage. Warner Brothers Discovery has been making movies for 100 years. Netflix has been making stuff for 10 years. They kind of want to leverage that with what they are good at, which is technology and of course, the platform.
Isn't this part of the issue, though, Ed, when you have Ted Sarandos admitting, here's some of our shortfalls versus Warner Brothers, doesn't that upset shareholders who, a lot of them have long said that Netflix doesn't need this deal, that Netflix, as it exists at the moment, is okay and everything else is a distraction?
Oh, yeah. Yeah, I mean, there is a big portion of the investor base that thinks Netflix should just walk away, right? That for loads of reasons. Integration risk for one, the share price has come down more than 30% since this all started. The principal argument that Ted Sarandos has is that it's not just the IP. Warner Brothers Discovery, particularly literally the studio and streaming part, they have a very, very mature, built-out distribution business. And Netflix leveraging that to put theatrical releases out into the world, not just IP that originates from Warner Brothers, but IP that originates from Netflix. It gets their stuff out there more. And he really pushed back on this idea that this is a knee-jerk reaction to Netflix has had engagement growth slow down. It was about 2% in the second half of last year. And so beyond that, it's just mechanics, right? It's mechanics and I wish we got a little bit more into the debt part of this. Maybe Ted's not the right person on the C-suite bench to discuss that with, but to them, they've just been unwaveringly confident that this is the right approach.
Hey, Ed, elsewhere in your world that I'd love to ask you about, there was this FT story about NVIDIA and OpenAI nearing an agreement for $30 billion worth of investment. Sure. That is NVIDIA investing that into OpenAI. How should we interpret that? Because there was much fanfare around this idea that the letter of intent to invest $100 billion maybe was just that, a letter of intent and not necessarily an agreement.
Yeah, they're essentially two separate transactions. I mean, Shireen Ghaffari and I had reported, I think 3 weeks ago, that NVIDIA had got to $20 billion in participation of what is a standalone funding round from OpenAI. So now, reports, I mean, we're kind of hearing this as well, it could go up to $30 billion as part of a wider $100 billion round. That is completely separate from the announcement that was made between OpenAI and NVIDIA about NVIDIA over time in phases, tranches, and based on various operational milestones, putting $100 billion into OpenAI, which NVIDIA has subsequently said was not firm. It was not a firm commitment. It was basically a letter of intent. So that seems to be the mechanism now. Yes, NVIDIA is going to participate in this massive funding round as a one-off at scale, big chunk of it. But that sort of long, multi-year, $100 billion staggered investment tied to various goals, that doesn't seem to be proceeding forward anymore.
Ed, just finally, because we're going to get NVIDIA earnings next week, what's at stake given some of the jitters around large cap tech in recent weeks?
Yeah, everything. Right now, I don't know where the NASDAQ 100 is. Forgive me, I don't have my terminal in front of me. But we're either on track for the 4 straight weeks of losses on the NASDAQ 100 or we're not. Depending on where we close. I think it was basically, we're up 0.2%. Mm-hmm. So we'll see where we end of the day. The capital expenditures numbers were everything. All of that capital expenditure largely is going to go to NVIDIA, right? Because they own so much of the content of the server. They would need to project confidence that they are seeing real spending demand from the hyperscalers plus Meta to give everyone that confidence in the market. That's a pretty succinct summary of what all the sell-side notes say, at least.
Ed, thank you so much. As always, we very much so look forward to Bloomberg Tech today at 11 a.m., which Ed leads. And we'll see that very shortly in a couple hours' time. Coming up here on this show, though, the ETF race to zero may be over as fees start to tick up. We're going to have more on that reversal. That's coming up next on your ETF Friday.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Bloomberg Open Interest. A check on your stocks this morning, about 20 minutes into your trading day. So the S&P opened lower, goes a little bit higher, now it's lower again, 0.1%. The NASDAQ, that's back at unchanged. The Russell 2000 still underperforming, though, after weaker GDP data, that being reflected in what had been a broadening trade. Citi, for example, just this morning recommended to go underweight tech or at least reduce exposure to neutral and then add to U.S. small caps. In terms of some of the other movers, Bloomberg Dollar Spot not doing a lot. Brent crude, that now drops 0.2%. It had erased some of its losses after President Trump telling reporters at the White House considering limited strikes on Iran. Meanwhile, Nvidia, that has earnings out next week, slightly lower. Amazon moves higher. Newmont Mining, they had earnings that disappointed. Their output of gold is going to be lower because of some of their joint projects having a less of an output. They're doing some upgrades to facilities too. Blue Owl Capital, those shares continuing to sink 6.6%. It had to sell off some of its loans in order to meet redemptions from one of its BDCs. Here's where the ETFs stand, reflecting on what's happening in the overall market. But let's talk more about one of the trends happening in the world of ETFs. It's been years of relentless fee cuts, but the ETF industry may be hitting a turning point. U.S. asset-weighted fees, which fell for more than a decade, have stopped declining. And now you can see they're just barely starting to edge higher. For more on what's driving this shift, we're joined by James Safar, ETF analyst at Bloomberg Intelligence. So, James, what's driving that?
Yeah, I mean, it's a bunch of different things. One, it's just the expansion of the ETF industry overall, right? We have a lot of legacy active managers, people like Capital Group, DFA, JP Morgan even launching a lot of legacy active type products. And we also have a lot of products, what we would call hot sauce, things with options overlay, defined outcome or buffer products where you're capping your downside, but you're also capping your upside. These are also a lot of times built with derivatives positions. They're very complex. So it's basically all of those things. And you add in the idea of like, we have all these single stock levered ETFs that are coming to market, you name it, anything crazy you can think in the ETF world is coming to market, and they tend to have higher fees. So yes, people are still buying the really cheap things, the things with fees in the single basis point level. But for the most part, people are expanding to other things, and that's what's causing this to tick back up.
Well, what does that mean for the vanguards of the world, James, whose entire business had been ones of just the ability to sell huge volumes of funds because the fees were so rock bottom? Do they continue with that model? Or are they now starting to offer more active funds that themselves have higher fees?
Yeah, so Vanguard is a perfect example. One, they're still selling those extremely cheap products, basically giving you beta for near zero fees. And they're doing very well. That is still the most successful area of the ETF market. It's just not enough anymore to completely offset this whole new trend of what I just talked about, the legacy managers coming in. But Vanguard is also launching active products. So we see active ETF issuance ballooning right now. So if you go back to the end of 2020, you had about 500 active ETFs and about just under 2,000 passive. Now you have 2,800 active ETFs and 2,200 passive. So you can see the chart there. It's just ballooned over time. So part of it is, one, these other managers are offering active management that charges a little bit more, but it's still very competitive on price. I mean, you're talking 20 bips for an active product, or maybe in the teens. So the fees are getting more competitive. They're adjusting to the low cost, basically zero fee access of beta. So yeah, we're seeing this trend. And the other thing I would point out is a lot of those active funds that we just saw, they're kind of active in name only. Those single stock levered ETFs, those buffer products, for the most part, they're giving you an outcome or an outcome oriented objective. But they're not really like what people think of as active, as when you're an active manager trying to pick a stock or pick bonds that are going to outperform.
Hey, James, thank you so much for that. Again, a really fascinating trend change over the past couple of years. James Safar of Bloomberg Intelligence, thank you so much. And tune in to ETF IQ. It airs every Monday at 12 p.m. New York time. You'll hear from Eric Balchunas, James, and the entire team there. It is a fantastic program. Coming up in the next hour on Bloomberg Open Interest, John Stolfus is going to talk mounting market risks and the impact of a Supreme Court ruling. Just as a reminder, we may or may not get something on IEPA coming at 10 a.m. Plus, the Points Guy is pushing back on the Credit Card Competition Act, and more on private credit fears with Bonaccord partner Brad Pilcher. All that coming up in your second hour of Open Interest.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. The economy takes center stage this morning after new numbers from the Commerce Department show growth slowed down more than expected in the last few months of 2025. Bankrate's Mark Hamrick.
This annualized increase of 1.4% comes in much weaker than expected, but you have to strip away the drag from the federal government shutdown. That could account for a little more than 1 percentage point. So we would be looking at an economy that would be otherwise humming along had it not been for the federal government shutdown.
Today's report itself delayed by that shutdown. Consumer prices rose at their highest rate since last February, thanks to the cost of food and energy. The Supreme Court could issue a ruling this morning on President Trump's tariffs. The decision could have major implications for a key pillar of the administration's agenda. Drew Greenblatt, who owns Marlin Steel in Baltimore, wants to keep those tariffs in place.
It's going to help our poor people get opportunities and jobs in America with middle-class jobs, high-paying jobs.
President Trump says the U.S. is ready to use military might if nuclear negotiations with Iran fail. Correspondent Ed O'Keefe is at the White House.
Apparently, Vice President Vance is the one that's been pushing to keep pushing for diplomacy and avoid military action at all costs. The president suggesting that Iran now, at this point, has about 2 weeks, 14 days at the most.
Jeffrey Epstein's estate has agreed to pay as much as $35 million to settle a class action lawsuit. CBS's Michael Wallace.
The suit accused two of Epstein's advisors, his former personal lawyer Darren Indyke and his former accountant Richard Kahn, of aiding and abetting his sex trafficking of young women and teenage girls. The suit claimed the pair created a network of corporations and bank accounts to help hide Epstein's abuses. Neither Indyke nor Kahn admitted to any misconduct as part of the settlement.
Britain's former prince, Andrew Mountbatten Windsor, has been released from police custody in the UK after his arrest yesterday on suspicion of misconduct in public office and ties to Epstein. He's still under investigation. If you've had a couple of kids or so, maybe you've experienced it. Extreme focus. Here's CBS's Michael George.
A study in the Netherlands looked at brain scans of mothers having their second child and found changes in brain networks relating to directing attention and responding to stimuli. These changes could help mothers focus and care for multiple children. It's already been shown that first pregnancies alter the brain in significant ways.
The research is published in the journal Nature. The Dow is down 108 points. NASDAQ up 11. This is CBS News. Breaking news, the Supreme Court has just ruled against President Trump. It says he has no right to impose those tariffs. A man in Chicago saves a baby along the waterfront.
Leo Cundiff cannot swim, but that did not stop him from jumping into Lake Michigan when a gust of wind kicked in and he heard a mother screaming that her baby in a stroller was blown into the water. He says he and the 8-month-old dipped underwater a few times.
There was one moment where I was like, I don't know how much longer I'm going to hold on. So I just kind of grabbed her hand and just rubbed her hand a little.
He fought to keep the baby above water until others rushed in to help and pulled them both to safety. The baby girl is fine. Cundiff was monitored at a hospital for a fast heart rate. Jennifer Kuiper, CBS News, Chicago.
Toy Story fans are freaking out over signs of aging.
Whoa.
Someone needs a brown marker. Comments are pouring in on social media after Woody took his hat off in a trailer for the 5th edition of the movie. Deborah Rodriguez, CBS.
This is breaking news from Bloomberg.
Scarlett Field, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and Bloomberg.com. We have some breaking news. The U.S. Supreme Court struck down President Donald Trump's sweeping global tariffs, undercutting his signature economic policy and delivering his biggest legal defeat since he returned to the White House. Tyler Kendall, Bloomberg News White House correspondent, joins us here, Washington correspondent. Tyler, give us the latest on what we know about this Supreme Court ruling.
So it appears that the court in a 6-3 decision struck down President Trump's tariffs, those broad-based ones that have to do with IEEPA, the International Emergency Economic Powers Act. The president put forward IEEPA tariffs on 2 accounts. One was those fentanyl-related tariffs related to Canada, Mexico, and in part on China, and then the other were the more broad-based ones, where he cited persistent trade imbalances. Now, we're still going through this. Cases coming in real time right now to figure out the 2 questions that were in front of the court. One was, does President Trump actually have the authority to invoke IEEPA to impose tariffs? Because this has never been done before. This is typically a federal authority that is used to invoke sanctions. So the question here is whether or not he circumvented Congress. The other question was about whether or not he actually invoked IEEPA correctly, if he's able to, by declaring these national emergencies. Did those national emergencies related to fentanyl, related to these trade imbalances, reach a legal standard of what is known as an unusual and extraordinary threat, that the president would have this authority to impose a tariff, a regulation of commerce in this way to achieve his objectives. We're still reading through this, but it appears that we have one, at least dissenting opinion was from Kavanaugh, of course, a justice. Brett Kavanaugh, who was appointed nominated under President Trump, who says, quote, the court says nothing today about whether, and if so, how the government should go about returning the billions of dollars that it has collected from importers, but that process is likely to be a mess, as was acknowledged at oral argument. So that's going to be the entire next phase of this.
It doesn't seem to matter to investors, at least for the moment. You look at the S&P 500, it did shoot up. It's come back a little bit, but what's notable here, Paul, is that the best performing group among 24 groups is the consumer durable and apparels group. Lululemon, for instance, jumping about 5% right at the open. It's paired some of that advance to 2.4%. Lululemon, along with other companies, presumably hurt by these tariffs, would benefit, therefore, with the removal of these tariffs, although, as Tyler made clear, it's not clear whether there would be a refund or how that would even be put together.
Yeah, and I'm just kind of reading some of the Bloomberg headlines. Supreme Court does not address eligibility for tariff refunds. And Bloomberg News also reporting that hundreds of tariff refund lawsuits pending in U.S. trade court. So, Tyler, this seems like that's where the rubber meets the road, to the extent that anybody's going to try to get a tariff relief or tariff refunds. It's not going to be easy, at least at this stage.
Well, if you want to hear a pretty startling statistic, IEEPA tariffs have been collected from more than 301,000 importers. Wow. And every company that wants a refund would need a distinct claim in court. Perhaps we'll likely see a class action lawsuit that could maybe put this a little bit more broad-based. But when we're looking at just the massive amount of revenue that was raised by these IEEPA tariffs alone, of course, the Trump administration has other tariff authorities that are already in place, Section 232 related to national security, for example. Those IEEPA broad-based tariffs brought in last year more than $134 billion for the U.S. government. So it's going to be a complicated process. It likely would leave the question of refunds to a lower court, most likely the Court of International Trade, which first took up this case. There's a few different wonky points that I had written down here on how this could ultimately end up happening. One thing to know is that there's something known as the liquidation process, which basically is the statute of limitation that a company can ask for its money back. That's 314 days. So some of those tariffs imposed on China have actually been
Guys, US Supreme Court ruled out regarding the US tariff on all countries. जितने भी countries पर tariff लगा रखे हैं सबके बारे में ruling आ गई है कि ये tariff illegal है. Need to see क्या refund मिलेगा नहीं मिलेगा, but that is a bearish news for US dollar, and you can see $97.98 के आसपास गया था, वहाँ से फिर से reverse कर गया. Gold और silver के लिए भी bearish news है, but they are not performing like that. ठीक है, गोल्ड को देखोगे करंट लेवल से ऑलमोस्ट 1% फॉल किया, थोड़ा रिकवर किया। सिल्वर थोड़ा ज़्यादा गिरा था, रिकवर भी ज़्यादा हुआ है, ऑलमोस्ट 2.60% गिरा था। जितना मॉर्निंग से यहाँ आया था उतना ऑलमोस्ट फॉल हो गया था, स्टिल होल्डिंग अपर लेवल। यूएस मार्केट के लिए अच्छी न्यूज़ है, गिफ्ट निफ्टी भी अच्छा ही चल रहा है। गिफ्ट निफ्टी इंडियन मार्केट के लिए भी अच्छी न्यूज़ है, क्योंकि अगर टैरिफ हट जाते हैं सारे के सारे तो वही हम 2024 से पहले के लेवल पे आ जाएंगे, कोई टैरिफ नहीं किसी भी कंट्री से। सो दोज टैरिफ आर इलीगल एज पर द यूएस सुप्रीम कोर्ट। गुड न्यूज़ फॉर इंडियन मार्केट। ठीक है, गिफ्ट निफ्टी देखोगे अभी फ़िलहाल के लिए इंडियन मार्केट की हमारी जो क्लोजिंग थी वहाँ से अभी लगभग 81 पॉइंट पॉजिटिव चल रहा है। क्या ये और ऊपर जाएगा लगभग 1% की अराउंड? अगर ऐसा होता है तो मज़ा आएगा, क्योंकि फिर मंडे को सीधा मार्केट ओपनिंग पे ही देखने के लिए मिलेगा मार्केट कितना ऊपर जाता है। बट या न्यूज़ इज़ ओवरऑल पॉजिटिव। लेट्स सी मार्केट कितना इस पे इम्पैक्ट दिखाता है। लुक एट द बिटकॉइन, क्या वॉलेटिलिटी हुई है, ऑलमोस्ट 1% ऊपर था, 1.40, अगेन सेल ऑफ कमिंग। ठीक है, क्रूड ऑयल और नेचुरल गैस पर कोई ऐसे डायरेक्ट इम्पैक्ट नहीं पड़ता, तो उस पर कुछ खास इम्पैक्ट होगा नहीं। वैसे ये न्यूज़ क्रूड ऑयल के लिए है तो पॉजिटिव, बट क्रूड ऑयल उतना कुछ खास इम्पैक्ट दिखा नहीं रहा है। गोल्ड, ऑब्वियसली गोल्ड के लिए बेरिश न्यूज़ है। गोल्ड और सिल्वर को हम एज अ सेफ हेवन देखते हैं, तो वहाँ पर तब इन्वेस्ट किया जाता है जब अनसर्टेनिटी हो। तो एक तरह से आप कह सकते हो ट्रम्प जो टैरिफ लगा रहे थे आज इस पर 5% लगा दूंगा, 50% लगा दूंगा, 500% लगा दूंगा, वो अब नहीं होने वाला। ठीक है, all tariff imposed by the United States government is completely illegal. Good news for the equity market. गोल्ड और सिल्वर के नेगेटिव न्यूज़ है, देखना पड़ेगा गोल्ड कितना रिएक्ट करता है। थोड़ा बहुत ही रिएक्शन है, कोई बहुत बड़ा फॉल तो नहीं दिख रहा। ऑब्वियसली एक पूरा तो नहीं गिर जाएगा, ऐसा नहीं कि यहाँ से 10% अभी गिर जाएगा, बट या थोड़ी बहुत वॉलेटिलिटी कंटिन्यू इन गोल्ड एंड सिल्वर। बेरिश न्यूज़ फॉर गोल्ड एंड सिल्वर, पॉजिटिव फॉर द इक्विटी मार्केट। इक्विटी मार्केट के लिए पॉजिटिव है, डॉलर इंडेक्स के लिए भी पॉजिटिव है, बट सस्टेन ही नहीं कर रहा है $98 के ऊपर। एक्स में भी देखोगे मोमेंटम काफ़ी अच्छा हुआ है सेल ऑफ का। लुक एट द मोमेंटम इन MCX, ऑलमोस्ट 2000 पॉइंट गिरा, ये रिकवर कर गया। मॉर्निंग पे ओपन हुआ था आज, ऑलमोस्ट उसी लेवल पे पहुंच गया वापस, सारा गेन खो दिया। अभी 3% पॉजिटिव, लगभग 2% पॉजिटिव चल रहा था, 1 से 2% आई थिंक। ऑलमोस्ट सारा गेन वाइप्ड आउट हो चुका है। सिल्वर को भी चेकआउट करोगे MCX में, मॉर्निंग से अभी भी गेन में ही है, ऑलमोस्ट 4% के गेन पे था, 4 से 5% के गेन पे चला गया था आई थिंक। ये मॉर्निंग की पहली कैंडल है ओपनिंग की हमारी। मॉर्निंग ओपनिंग के बाद ऑलमोस्ट 5% के अराउंड था, 2.5% का करेक्शन। हाई से देखोगे ओवरऑल तो 3% गिरा, बट रिकवर कर गया थोड़ा बहुत सिल्वर। सो ओवरऑल न्यूज़ इज बेरिश फॉर गोल्ड एंड सिल्वर, पॉजिटिव फॉर US डॉलर, बट US डॉलर भी पता नहीं क्यों गिर रहा है, ये तो कुछ ज़्यादा ही गिर रहा है अब। ठीक है, नॉर्मली अपोजिट होता है, ये डॉलर के लिए पॉजिटिव न्यूज़ है, गोल्ड और सिल्वर के लिए नेगेटिव न्यूज़ है। बट यहाँ US डॉलर भी फॉल कर रहा है, साथ साथ गोल्ड और सिल्वर तो कर ही रहे हैं। क्रूड ऑयल के लिए भी पॉजिटिव न्यूज़ है ओवरऑल देखा जाए, बट नॉट सस्टेनिंग ऑन द हायर एंड। 6050 6050 के आसपास सस्टेन नहीं हो रहा है। देखो लो ब्रेक करता है तो क्रूड ऑयल मोस्ट प्रॉब्ली डाउन आना चाहिए उस केस में। ठीक है, दो न्यूज़ हैं उसमें, एक ध्यान रखना, एक तो है कि US के जो टैरिफ US ने लगाए हैं वो इलीगल हैं या नहीं है। वो तो इलीगल हो गए, क्या US टैरिफ में जो उसको पैसा मिला है वो रिफंड करेगा नहीं करेगा, दैट इज़ अ सेकंड क्वेश्चन। उस पर कुछ रूलिंग नहीं आई है, सो नीड टू सी उस पर कुछ क्लैरिटी आती है तो। अगर बढ़िया, बेरिश न्यूज़ फॉर गोल्ड एंड सिल्वर, लेट्स सी रिकवरी आती है या फिर नहीं। एक दो डेटा भी थे वो भी आ गए हैं, उनको भी देखते रहना। लास्ट 2 डेटा 8:15 और 8:30 पे थे, दैट इज ऑल्सो कम्स। बट मेजर न्यूज़ इज राइट नाउ US सुप्रीम कोर्ट decision, US tariff on countries are illegal. Bearish for gold and silver, bullish for equity market overall.
why it took so long. And I think Justice Jackson had said last week that in an interview that there are nuances to this. So, and we won't be able to see the nuances until we get through some of this.
Yes,
170 pages.
170 pages. I mean, there are concurrences and partial concurrences. It's really, it's messy, I'd say.
It's messy, and that's exactly how Brett Kavanaugh, one of the dissenting justices, described the refund process. It was likely to be a mess, as was acknowledged at oral argument. Is it surprising then that the justices did not address the extent to which importers are entitled to refunds, that it's just basically kicking it back to the lower courts?
Well, I think what the justices try to do is write as narrow an opinion as they possibly can. So why get into an area they really don't have to get into? And that, as you say, there's a lot of, it's going to be messy. And so I think that that's the way this court operates. They don't want to rule on something that they don't have to rule on. And here they did a ruling on tariffs, a week before the president is going to make his State of the Union address. That's why I didn't think it was going to come down today. We were talking about it in the newsroom and why would they do that? And then they're going to sit there. Is he going to say something about it? He probably will say something about it while they're sitting there. A lot of them will be sitting there. The chief always goes.
Oh, I see what you're saying.
They'll be at the State of the Union.
That could
the chief always goes. Elena Kagan goes. Usually Sotomayor goes. Alito hasn't gone since Barack Obama said something about Citizens United, and Alito was shaking his head back and forth. So he hasn't been there, but maybe he'll be there for this. I don't know.
एग्रोकेमिकल केमिकल में कुछ स्टॉक्स हैं जो इम्पेक्टेड थे, उनके ऊपर टैरिफ ज्यादा थे, हालांकि बहुत सारे टैरिफ पास ऑन कर रहे थे। दूसरा ये जो डेटा सेंटर्स को जो सप्लाई करते हैं, ट्रांसफार्मर्स, वायर्स, केबल्स, कंप्रेसर्स, बहुत सारी ये कैपिटल गुड्स की जो आइटम्स हैं वैल्यू चेन में, तो यहाँ पर आपको स्टॉक स्पेसिफिक बहुत सी अपॉर्चुनिटीज मिलेंगी, जो मुझे लगता है कि थोड़ा रिजल्ट्स के बाद स्टॉक्स में थोड़ा इंप्रूवमेंट हुआ है, बट स्टिल वहां पर पोटेंशियल टू बिकम डबल इन 3 years इज वेरी वेरी हाई। तो यहाँ से भी आप 20-25% CAGR रिटर्न की उम्मीद, 25% CAGR की रिटर्न की उम्मीद 3 साल में कर सकते हैं, प्रोवाइडेड आपने अच्छा स्टॉक चुना है और उसके साथ बने रहे।
जी, तो थोड़ा वक्त आपको देना होगा। देखिए, दलजीत सर भी यहाँ कह रहे हैं 2 से 3 साल का वक्त दें तो 25 से 30% CAGR रिटर्न आपको मिल सकता है, तो जल्दबाजी क्यों करनी है फिर किसी चीज में, राइट? अनुराग साहब, आपका पॉइंट ऑफ व्यू?
जो सुनील जी ने कहा मैं सपोर्ट करता हूँ। दलजीत जी की बातें हमेशा ही अच्छी बेहतरीन होती हैं, इन्वेस्टर्स के पक्ष में होती हैं। बस ये 25 से 30% वाला मैं मिस कर गया, मेरे ख्याल से मेरा टेंशन कहीं और था, तो मुझे नहीं लगता 25 से 30% इन्वेस्टर लेवल पे देखिए वो रिटर्न नहीं आता। उसके लिए आपको दलजीत जी खुद बनना, फंड मैनेजर बनना पड़ेगा, वो फिर इन्वेस्टर लेवल पे इतना रिटर्न नहीं आ सकता। देखिए कहानी विपिन जी ये है, लार्ज कैप में रहना है लेकिन इन्वेस्टर स्मॉल और मिड में भाग रहे हैं। ये एक्सपीरियंशियल लर्निंग है, हर जनरेशन को करनी होती है। एक बार जनरेशन जब 20s में होती है तो समझाना मुश्किल होता है, वो लगते हैं कि बस उनको लगता है यही दौर है बस, और इस दौर से आगे कुछ है नहीं। हमारे लिए वो दौर 2000s एंड 2010 में था, तो हमने देखा है, तो वो इन्वेस्टर्स खुद सीख जाएंगे, कोई उसमें चैलेंज नहीं है। बट अगर जो खुद इन्वेस्टर्स इन्वेस्ट कर रहे हैं समझदारी से करें, अपने हाथ जल जाते हैं तो म्यूचुअल फंड की तरफ वापस आए, वही एक रास्ता है। लेकिन लार्ज कैप फोकस 50% जरूर होना चाहिए। और आई वुड अवॉइड, मतलब मैं इन्वेस्टर्स को लार्जली कहूंगा कि स्टे, इंडिया इज अ कंजम्पशन स्टोरी, स्टे विद इन दी कंज्यूमर डिस्क्रेशनरी कंजम्पशन स्पेस एंड दी फाइनेंशियल स्पेस, बिकॉज वो फॉर्मलाइज्ड स्पेसेस हैं। दैट इज द ओनली 2 स्पेसेस। टेक्नोलॉजी IT कहता, लेकिन अब मैं नहीं कहूंगा और 2 साल से कह भी नहीं रहा हूं। फॉर FIs लाइक ओनली दी स्पेसेस इन इंडिया, बिकॉज ये फॉर्मलाइज्ड हैं। बाकी सब में या फिर PSU प्ले है या फिर बड़े इनफॉर्मल, फॉर्मलाइज नहीं है सेक्टर्स, तो वहां पर हाथ जल जाते हैं इन्वेस्टर्स के, और वही गलती लोग मेरे ख्याल से करते हैं। इवन ये सब जो आप रियलिटीज भी कह रहे हैं, ये कहने को ऑर्गेनाइज कंपनीज दिखती हैं, लेकिन इनमें PNL का बड़ा झोल झाल है। तो आई वुड जस्ट एडवाइस स्टे लाइक दिस ओनली एंड 20%
रहे, और सीधा हॉल के बीचों बीच बने स्टेज पर पहुंच गए। स्टेज पर पहुंचने के बाद भी वो टी-शर्ट लहराते रहे और नारेबाजी करते रहे। हॉल में मौजूद कुछ लोगों ने तो बिना डरे, बिना झिझके और बिना किसी संकोच के प्रदर्शनकारियों का विरोध करना शुरू कर दिया। उन्होंने उल्टा उन्हीं के खिलाफ नारे लगाने शुरू कर दिए। हालांकि थोड़ी ही देर में दिल्ली पुलिस एक्शन में आ गई और प्रदर्शनकारियों को दबोचने की कोशिश शुरू हुई। 4 लोगों को गिरफ्तार कर लिया गया। हालांकि बाकी लोगों की भी वीडियो के आधार पर पहचान करने की कोशिश शुरू कर दी गई। लेकिन इस हंगामे के बाद सियासी बहस भी छिड़ गई। बीजेपी ने कांग्रेस पर जानबूझकर विदेशी मेहमानों के सामने देश की छवि खराब करने के लिए प्रदर्शन करने का आरोप लगाया।
हर व्यक्ति ये स्वीकार रहा था कि वर्ल्ड एआई समिट दुनिया की सबसे बड़ी अभी तक भारत में हुई है। मोदी जी के नेतृत्व में भारत का मान सम्मान ऊपर हुआ है। तो जैसे एक देश विरोधी व्यक्ति को जब भी देश का मान सम्मान ऊपर होता है उसको दिक्कत होती है, मिर्ची लगती है, जलन होती है, ठीक उसी भाव से गांधी वाड्रा परिवार ने अपने कांग्रेस के वर्कर्स को इंस्ट्रक्शन दिया और ये देश विरोधी कृत्य किया।
हालांकि हंगामा मचने के बाद भी युवा कांग्रेस के रुख में कोई बदलाव नहीं आया। युवा कांग्रेस के मुताबिक उन्होंने जो भी किया वो विरोध का एक लोकतांत्रिक तरीका था। यहां तक कि उन्होंने भारत में हो रही एआई समिट को भी केंद्र सरकार का असल मुद्दों से ध्यान हटाने का तरीका बता दिया।
जब भी इनको जवाबदेही देनी पड़ती है, अपनी जिम्मेदारियों से भागने के लिए एक इवेंट करते हैं। और मैं एक और चीज पूछना चाहता हूँ, ये जितनी भी इवेंट होते हैं उससे भारत के युवाओं को क्या फायदा होता है, कितना रोजगार मिलता है? सिर्फ अपने पीआर के लिए इवेंट करके अपनी जिम्मेदारियों से भाग जाएं और जो सवाल उनको देने हैं उनके सवालों का जवाब नहीं देते, तो ये बिल्कुल सही बात नहीं।
लेकिन दिल्ली पुलिस ने सभी प्रदर्शनकारियों पर केस दर्ज कर लिया। हालांकि सभी प्रदर्शनकारियों की पहचान नहीं हो पाई। लेकिन सवाल खड़े हो गए कि बेहद हाई सिक्योरिटी जोन में प्रदर्शनकारी दाखिल कैसे हुए, क्योंकि दिल्ली के भारत मंडपम में चल रही एआई समिट की सुरक्षा के पुख्ता इंतजाम किए गए थे। दिल्ली पुलिस के अलावा कई सुरक्षा एजेंसियों को सुरक्षा में तैनात किया गया था। यहां तक कि आम लोगों के लिए भी एआई से जुड़े नए प्रोडक्ट और तकनीक से जुड़े नए प्रयोग देखना आसान नहीं है। लेकिन युवा कांग्रेस के नेताओं ने भारत मंडपम के मंच तक पहुंचने के लिए एक पुख्ता योजना बनाई। असल में एआई समिट में आम लोगों के हिस्सा लेने के लिए एक ऑनलाइन फॉर्म बनाया गया था। इंडिया एआई इंपैक्ट समिट 2026 की वेबसाइट पर इसके लिए रजिस्टर करने की सुविधा दी गई थी। रजिस्ट्रेशन फॉर्म भरने के बाद वेबसाइट पर एक क्यूआर कोड जनरेट होता है जिसे दिखाकर हॉल में एंट्री की जा सकती थी। इसी क्यूआर कोड को लेकर प्रदर्शनकारी भारत मंडपम के हॉल नंबर 5 में पहुंचे थे। उनके पास न कोई हथियार था, न ही कोई ऐसा सामान जिससे उन पर किसी को कोई भी शक हो। सभी प्रदर्शनकारी आपत्तिजनक नारों वाली टी शर्ट पहनकर आए थे, जो उन्होंने एंट्री मिलने के थोड़ी देर बाद उतार कर लहरानी शुरू कर दी। टी शर्ट लहराते वो लोग हॉल नंबर 5 के स्टेज तक पहुंच गए।
क्यूआर कोड के माध्यम से जो स्कैनिंग होती है, जिससे आम जनता सभी के लिए फैसिलिटेशन है, उससे लोग अंदर आए। इन्होंने ऊपर से स्वेटर जैकेट ये पहना हुआ था, नीचे से एक टी शर्ट ऑब्जेक्शनेबल टी शर्ट पहनी थी। हॉल नंबर 5 के पास में आके इन्होंने अपने ऊपर से स्वेटर और जैकेट को उतारा, नीचे से टी शर्ट लहराते हुए इन्होंने प्रोटेस्ट किया। हम इनमें अप्रोप्रिएट लीगल एक्शन ले रहे हैं और जो कुछ लोगों को इनमें से डिटेन किया है और बाकी की भी पहचान कर रहे हैं।
दिल्ली पुलिस ने जिन 4 लोगों को गिरफ्तार किया उनमें एक हैं कृष्ण हरी, जो यूथ कांग्रेस के राष्ट्रीय
apparatus that maybe this gives them a little bit more confidence to push back. Is there any reason to believe that?
Absolutely. I think there's 2 ways to look at this. First of all, this is exceptional news for President Trump. Americans hate the tariffs. They know their taxes, they know that they're driving inflation, and they don't like them. So now that that authority has been stripped away from him, the president no longer has to collect these taxes. It's up to him to decide whether he wants to migrate into new and different authorities, like Section 122, that give him the ability to impose tariffs at a 15% rate for the next 5 months. If he wants to do that, he can go ahead on. But the American public will be very grateful that the Supreme Court struck these tariffs down, and even more grateful if he keeps them off. So that's one way of looking at it. And Republicans on Capitol Hill are staring down the barrel of a very ugly affordability narrative election cycle, where we've seen races as diverse as Texas swing 31 points away from President Trump just since he was elected. Those are tremendous losses for the Republican conference, and most of it is driven by the president's handling of the U.S. economy. It's influenced not just the traditional independent voter that we are always concerned with, but also with young male and Hispanic voters who have driven the president to his second term. So a lot to see here.
A lot to see here, and it's not just American stocks that are benefiting. I'm looking at, for instance, LVMH, Hennessy in Europe climbing on the news, up 4.4% in European trading.
Yep.
So companies that rely on exports to the U.S. also benefiting from this ruling. Paul asks a really important question, Henrietta.
Basic.
It's very basic. Are tariffs rolled back starting today?
They are illegal. So at Border Patrol, one of the things that's questionable here is that the White House has said all these trade deals are still going to be intact. You know, we've signed these agreements. That is null and void. Now, if you are an importer and you are at Customs and Border Patrol, you no longer will suffer paying for these tariffs. The Supreme Court has told Customs and Border Patrol they can no longer collect them. So this is a problem that the White House is going to have to address. They have a number of trade deals that they have signed. I believe there's about 8 at this point, and many of them include a reciprocal tariff of 10% in the case of the UK or 19% in the case of Indonesia. Those tariffs are illegal. The Supreme Court has told the Customs and Border Patrol people this authority is not permitted. So it's the importers who are going to rise up and say, I'm not paying. It doesn't matter what the countries, you know, independently decide or whatever the White House says.
So what do we expect this administration, how do you expect the president and the administration to respond here? Do you think they will aggressively try to work other tariff routes, or maybe just let this issue die and just fade away?
I appreciate the question, Paul. I am wildly out of consensus on this, but what I just described on Section 122 is just one of the many alternates and alternatives that the president has. Section 301, which is, you know, $350 billion worth of tariffs on China. We could re-up that and apply it to the EU, the UK, or Brazil. All of those have been threatened. But think about what functionally that means. It means that individual businesses will have to go out again, get their trade lawyers on the payroll to comply with brand new, potentially even unused authorities that they'll have to comply with once again. Is it a 15% tariff rate under Section 122? Does it exist now? When's the president going to put it on? What do I need to worry about with the national security tariff? The confusion and the uncertainty, which were the buzzwords following Liberation Day in April, are going to come roaring back in the event the president decides to migrate away from IEEPA and move into new and different authorities. I think it would be extraordinarily disruptive. And again, with my eye on the election cycle and the affordability narrative, the president, I think, is already on a very tight leash, and he's not going to have the leeway to fully reimpose anywhere near the revenue that has been collected by IEEPA so far. So I don't think these tariffs will ever come back at their current level, and I think they will be much more restrained going forward.
How does this all add up to what the president was planning to say in his State of the Union next week? Because affordability was something that the White House has signaled it's really going to start focusing on, especially with the midterm elections coming up. Now that the tariffs are ruled illegal by the Supreme Court, how does he fold that into his larger platform?
Man, I mean, that is a pretzel of some logic they're going to have to work through here because, of course, the president has been saying that the tariffs have been a huge boon to the U.S. economy. None of that is true. We just saw a very soft GDP print. We see that manufacturing jobs have lost 72,000 in the last year since Liberation Day. We see that prices have increased across a lot of the retail space. That's what consumers are feeling. And you can't sell the American public on the idea that you're fixing our deficit problem when the deficit continues to rise and the trade and goods deficit continues to rise. So all of the arguments the White House has made are false. And now he's going to have to sell this to the American public. I suspect it'll be very uncomfortable for the front row of the House floor when he delivers the State of the Union on Tuesday. I will certainly be watching that. But they really stood up for the Constitution here. And the president's message, if he wants to migrate to affordability, he can talk about other things like, you know, the housing agenda that they have. I mean, it's not realistic to think that a 50-year mortgage is coming, but those are the kinds of pieces that he should focus on. I imagine there will be quite a bit of grievance touted on the tariff front.
Interesting. All right, Henrietta, thank you so much for joining us. We really appreciate getting a few minutes of your time and your expertise. Henrietta Triz, Managing Partner and Director of Economic Policy at Veda Partners. Looking at the bond market here, a little bit of a lift to the yields on this news here. The 10-year Treasury is up a couple of basis points, 4.08%. We've got a lot of economic data today as well. Ira Jersey joins us here, Bloomberg Interest Rate Strategist here. Ira, what are you seeing in the bond market today? A lot to chew on with the Supreme Court decision, with the economic data.
Well, the economic data did not move the market very much at all. I mean, for one thing, it was relatively old data, right? You're talking about December fourth quarter data. We already have the January CPI report. So even though there were a lot of people focused on the PC deflator, it really didn't move things very much at all. We have seen some, as you noted, Paul, bear steepening of the yield curve. So 10 and 30-year yields going up faster than 5 and 10-year yields. And the reason for that is that this does incrementally increase the deficit. And so the traders and investors will be a little bit worried about debt sustainability going forward because we do have a situation where longer term, if this particular group of tariffs can't be met, then you're going to have an extra $100 billion or so in the deficit, and that's kind of in perpetuity. So, it's not a huge move, but at the same time, it is noticeable because it definitely came on the heels of this announcement by the Supreme Court.
Yeah, I guess the thinking is that Treasury would need to sell more bonds to bridge the deficit, and that would put upward pressure on yields, especially at the long end of the curve. Is that something where we think Treasury might address that soon, or will it take its time?
No. No, it's going to take a very long time. So the way that they'll repay tariffs, if they have to repay tariffs, and it's a little bit unclear how and when they'll have to do that, we're going to need lower courts to opine on that. But once they do, remember that the federal government has like $800 billion in cash right now, and they've only collected an extra maybe $100 billion from these tariffs. So they can repay that out of cash, and then what the Treasury Department will probably do is increase T-bill issuance a little bit in order to make up the rest of that. So this isn't really a supply issue in the long end, and that's why you're not seeing yields up by 5 or 10 basis points, because they're not going to be increasing 30-year debt to repay these tariffs. They're going to increase T-bills to repay these tariffs. So it's not as market moving. There's not as much market risk that's going to be put out there because of this. But it is a long-term issue, right? And it is certainly something that the market is going to have to take into account over the next 5 to 10 years, as deficits, as your previous guest noted, deficits have improved a little bit, but they're still very high.
Yeah, absolutely. So I guess, how does the Federal Reserve take this in, or does it not even acknowledge this as as Fed officials speak to the public, as they deliberate before their next policy meeting?
Yeah, I don't think this affects monetary policy very much. I mean, it creates more kind of, geo-economic uncertainty, right? And that's never a good thing. But from a monetary policy perspective, I don't think this changes things very much at all. Certainly, if, some tariffs have to get repaid, I think one of the questions is, how do they get repaid and to who, right? Because ultimately, the consumer takes on some of the, at least some of the price increases due to tariffs. So I'm not really sure how people get, refunds because of the tax repayment or tariff repayment. But ultimately, I think that certainty is always better for the economy and for markets. And now that there's even less certainty over the efficacy of these tariffs, both from a budgetary perspective and also from a price perspective, how does that permeate into things? And I think the Fed is more likely to sit on its hands and say, hey, let's see how this plays out over the next few months or a few quarters before we take any action. So I actually suspect it might be more of a let's wait and see from the Federal Reserve's point of view how this affects the overall economy.
Well, a headline crossing the Bloomberg terminal, Senator Warren urges refunds for Americans after Supreme Court ruling. So you saw that coming there. So historically, just over the last 12 months since we've been dealing with tariffs, how has the bond market kind of dealt with the uncertainty overall, Ira?
Well, the volatility, it started out very strong, right? So a year ago, when you go back to last April, we had massive volatility in the bond market because of the uncertainty around tariffs. And then that kind of went away in the second half of last year. People got numb to headlines around tariffs and a lot of the geopolitical angst that was coming out between the administration and some of our trading partners and allies. That's creeped back in at least a little bit here in the beginning of this year. And not only because of the geopolitics, but also the uncertainty around the overall economy, investments, right? Obviously, the volatility in the equity market has certainly affected the bond market far more than comments coming out of the administration. You did see after Kevin Warsh was nominated as Fed chair, that had a little bit of a market move, but again, that was very much dwarfed by what went on with the flight to quality bid, for example, that you saw in the last couple of weeks from falling commodity prices, falling equity prices.
Ira Jersey, thank you so much for jumping on right away and giving us your instant analysis. He is our chief U.S. interest rate strategist here at Bloomberg Intelligence. We should note that the president has responded. According to Caitlin Collins of CNN, who tweeted out or posted on social media, President Trump commented on the Supreme Court ruling striking down his tariffs while inside the White House breakfast with governors this morning, calling it a, quote, disgrace, I'm told. He told those gathered that he has a backup plan. Again, that is according to Caitlin Collins, reporter at CNN. The president calling the ruling against his tariffs a disgrace, Paul.
Yeah, no surprise there. And we'll see. I guess we were talking to Henrietta Trez what the response will be from President Trump, whether he will let this kind of fade away or whether he'll use some of the other options that he does have.
The many, many different alternative options, including filing for Section 232, 201, 301, 122, 338.
Oh, boy.
Yeah, there's a lot.
Exactly. All right, we welcome back to our studios June Grosso, Bloomberg's legal analyst here. June, now that you've had a couple more minutes to look at this 170-page ruling, any
Don't do that to me, Paul. Don't do that to me.
So, I mean, it is, I mean, we're just reading some of the reporting on Bloomberg Live, really calling it a historic ruling.
Oh, it is historic. And also, it's so important because, you know, as we've discussed before, this Supreme Court has been criticized for ruling for Trump on the emergency docket so many times. I mean, a majority of the times, more than the majority, a vast majority of the times, there are just a couple of cases where they didn't allow him to go forward with his agenda on the emergency docket. So here you have this enormous case on his, you know, sweeping global plans. And if the Supreme Court had not done this, if they had gone against the text of the statute and had ruled in his favor, think about what we'd be saying right now. This court is totally in Trump's pocket would be one of the things that would be said. So it's so important on so many different levels, not only the level of what's going to happen now and that the tariffs have been declared illegal, but also for the integrity, I think, of the Supreme Court. It would have been shocking if they had ruled for the tariffs. So joining us now is Dave Townsend. He's a partner at Dorsey & Whitney, trade attorney. Dave, can you explain for us the basic premise of the Supreme Court's majority opinion?
Sure, June, and it's great to be with you. Yeah, the basic premise of the opinion is that the IEEPA statute, which empowers the president to take action to regulate importation, doesn't extend to imposing tariffs. And so as a matter of statutory interpretation, the president exceeded the authority in issuing the global and fentanyl-related tariffs.
So is there anything, and I know you haven't gotten through the whole opinion, but is there anything that surprised you about this opinion?
One thing that did surprise me a bit, June, about the opinion was how definitive it was with respect to the statutory interpretation question. The lower courts had been maybe a bit more measured. They had said that the use of the IEEPA authority had exceeded what IEEPA was intended to permit. And the Supreme Court, it looks to me, went one step further and said that the language of the statute doesn't permit tariffs, full stop.
So, David, what's the 6-3 vote mean to you, if anything? Is a win a win, or is a 9-0 better than a 6-3? How should the market think about that?
Yeah, I mean, I think a win is a win, right? You only need 5 to uphold the lower court and find the tariffs were unlawful. But I do think the 6-3 vote provides even a sharper defeat here for the administration's arguments. I mean, you had the justices splitting as to some of the legal reasoning, but on the whole, 6 justices said that IEEPA isn't intended and didn't permit the tariffs here.
Is it clear that the Supreme Court says this is, as they did in the oral arguments, this is Congress's role? This is not the role of the executive branch?
Yeah, I think that, June, is the constitutional dimension of this case. It's not the primary holding of the case. It's not necessarily a strictly constitutional interpretive question. but they're looking at the Constitution granting the tax powers to Congress and saying we have a statute that doesn't clearly authorize you to impose tariffs. And given that constitutional background, we find that the statute doesn't authorize revenue-raising tariffs.
So where does the dissent find, and I know Justice Kavanaugh during the oral arguments talked a lot about what President Nixon did on the predecessor statute to IEEPA. Where do they find the authority of the president to issue these tariffs?
Yeah, so the predecessor to IEEPA was the Trading with the Enemies Act, TWIA, and the court had previously said that the language in TWIA, that is to regulate importation, did authorize limited tariffs. And so I think the dissent is pointing back at that and saying, consistent with that holding, we would find that the same language that Congress used in TWIA, they carried it over into IEEPA, would authorize the imposition of tariffs. And I mean, I do think that as a matter, if you were reading IEEPA in a vacuum, the question of whether the language to regulate importation permits tariffs is tricky. It's difficult.
Explain why it's tricky.
Well, I think the administration's argument was we can clearly ban imports under that language and under IEEPA, and they've done that for decades under various economic sanctions statutes. And so the theory would go, if we can ban imports, why can't we do something more calibrated and measured, such as impose a tariff?
Just a reminder, if you're just joining us, we're speaking with Dave Townsend, partner with Dorsey and Whitney, and June Garasso, the host of Bloomberg Law, with us here, Paul Sweeney and Scarlett Fu on Bloomberg Intelligence, after the Supreme Court struck down President Trump's global tariffs, saying that he exceeded his authority by invoking a federal emergency powers law. Dave, let me ask you a dumb question. President Trump does not respond well to legal setbacks. We know that he appeals to a higher court and authority. There is no higher court than the Supreme Court, but is there really no legal recourse for him left here? Could he, I don't know, seek to impeach a justice or 3 justices?
So, I mean, I think there's kind of 2 dimensions here in terms of what happens next. One is with respect to tariff refunds and whether importers are owed tariffs. And the second is, what does the administration do next? What is the U.S. tariff policy in light of this opinion? And the administration has been laying the groundwork, I'm sure behind the scenes, but in public too, saying continuity will carry the day as of today and moving forward. And the tariffs in one form or another will be reimposed under probably a combination of authorities. So I think, you know, the refund issue is important to companies. Moving forward, the policy issue may not actually move that significantly, at least in, you know, the near term. I think they're going to be ready to come out with something very quickly to backfill and replace the IEEPA tariffs.
All right, Dave, thank you so much for joining us. Really appreciate it. Dave Townsend, he's a partner with Dorsey and Whitney, giving us his thoughts on the legal side of this case. And of course, June Garasso, legal analyst for Bloomberg, joining us as well. All right, let's get back to these markets, get a little bit of a reset here. We'll head down to Washington, D.C. to Nathan Hager.
Well, investors haven't quite reset how they're reacting to this momentous Supreme Court decision striking down President Trump's tariffs. Paul, investors initially responded with a big surge in the market, but now it's pulling back just a bit. Investors trying to weigh some of the ramifications here and whether President Trump has backup options. CNN reported that the president told governors this morning the ruling was a disgrace and that he does have a backup plan. Right now, the S&P 500 is up 0.5%. The Dow Jones Industrial Average is 0.25% higher. The NASDAQ Composite leading the gains right now, up 0.8%. European stocks after this ruling are trading in record territory. The stock 600 up 0.75%, right around 630. As investors think about how they're going to react to this, Oppenheimer chief investment strategist John Stoltzfus says the Supreme Court ruling isn't changing his stock outlook.
This has to be baked in and then considered what will actually happen. And it will take a while for this to take effect. And then the response is likely to see, with the current administration, the tariffs likely to remain using other tenets of the law.
Right now, 6 of the 11 main industry groups in the S&P 500 are in the green following this ruling. Communication services up 2.5%, and consumer discretionary is up 1%. A lot of the retail stocks, as you might imagine, moving off the back of this. Nike shares up 0.5%. Dollar Tree is up 2%. Walmart is down 2%. 10-year Treasuries down 3/32 for a yield up to 4.08%. That's a gain of about a basis point. The 2-year yield is also about a basis point higher at 3.47%. COMEX Gold up 1.4%, $5,065 an ounce. Crude oil moving a little bit lower now. West Texas Intermediate, it's down 0.5% at $66.07 per barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Nathan Hager, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio in New York City, streaming live on YouTube and streaming live at Bloomberg.com/video. And of course, the news today, the U.S. Supreme Court struck down President Donald Trump's global tariffs, saying he exceeded his authority by evoking a federal emergency powers law. Let's see what this means across the pond here. Bloomberg joins us here. Brendan Murray, Bloomberg News global trade editor. Brendan, how do you think this effectively is going to play out in global trade? How quickly? How do you think this might play out?
Yeah, I think we could expect the administration will pretty quickly come back with another authority that the president can use to put tariffs on basically most U.S. imports. It would be a tariff of as high as 15%, but it would only really allow him to do it for 150 days, and then he'd have to ask Congress to reauthorize it. So what you're going to see is a more restrained approach, a narrower approach, and a patchwork of tariffs as opposed to the broad, sweeping declarations that President Trump has made over the past 10 months or so. So it's going to inject more uncertainty. We don't know, what level those tariffs will come in at, and the duration is going to be in question as well. So the uncertainty factor that we heard a lot last year with companies saying, I can't really invest, I can't really hire until I know what my tariff costs are going to be. We might see that come back in to some extent, although the president's ability to sort of declare tariffs on his social media account will be restrained. That's what he's done, and either carried out threats or just made threats in general. Bloomberg Economics estimates that he's made about 50 of those such threats that he never really carried out. So it's going to affect the actual tariff rates of imports coming into the U.S., but also President Trump's foreign policy. He's used this on Brazil and Colombia, and in the situation with Iran and the Greenland situation. So all of these areas, the president has used tariffs for leverage, and he's lost that big tool today.
What does this mean for the bilateral trade deals that the White House has already signed with other countries? Are they still legal, or do they have to be re-examined completely?
Yeah, I mean, that's I'm sure the phone is ringing off the hook at the U.S. Trade Representative's office on that very issue, because if the president doesn't have the authority to impose those tariffs, those are all baked into many of the roughly 20 or so trade deals, trade frameworks that the administration has hammered out. So there's going to be a lot, just adds to the uncertainty factor, right? And so there's going to be a lot of rethinking of some of those. Some of those, the bigger ones, are still not finalized. The European Union, India, those are still in, the ink hasn't even been signed on those deals yet. So there's going to be a lot of backpedaling now to figure out how they keep this tariff wall around the industries that the administration is trying to protect, steel and manufacturing, and to reshore manufacturing jobs. They're going to have to go about that now with other legal authorities.
Brendan, one of the stickiest issues here is, okay, what do you do with all the tariffs that have already been collected? Any sense of how, if there's any rebates, how that may work?
It was described in today's Supreme Court decision as it will be messy, and there's no question about it that all the paperwork that's required to declare imports and to apply a tariff on them, those are now going to have to be unwound and refiled with the Customs and Border Protection Agency. So it's going to be a bureaucratic nightmare, and if companies don't have their paperwork in order and haven't planned for this, they're just going to be further in the line, and it's going to take even longer. I've seen customs brokers and experts in this area say, we're looking at possibly a year before you ask for your refund request, and by the time it finally makes it back to the company that paid the tariff. These are big numbers too. We're in the $130 billion territory for General Motors and Ford alone. They paid $5 billion together combined. They paid that $5 billion in tariffs last year. So this is going to be something that is going to be a meaningful amount of money to a lot of companies, big and small.
Heather Long, the chief economist at the Navy Federal Credit Union, called this ruling a gift to the economy. This is according to our Top Live blog. She said it'll force a reset in tariff policy that's likely to lead to lower overall tariff rates and a more orderly imposition of future tariffs. It will boost economic growth and provide some relief to American consumers. But Brendan, that's going to take a long time before we see that relief. It's not instantaneous, is it?
Yeah, exactly. And this is what the other way to look at this is. This could be politically helpful to President Trump to provide that more orderly, sort of methodical approach to tariffs, predictable approach. That we're seeing a lot of the issues. The economic data today showed the economy wasn't as strong at the end of the last year. It showed a measure of inflation ticking up, and so the fact that this has gone against the administration sort of hurts on the surface, but ultimately in the political season, the midterm elections that are coming up, a more restrained approach. They can kind of go slower with tariffs now. That might actually benefit, especially help for some Republicans who are hearing from their constituents that the cost of living is unmanageable at the moment.
Have we heard from any of our quote-unquote trading partners as to how they're viewing this this ruling here today? Because I would think it would give a lot of them some confidence that maybe they can push back a little bit here.
Yeah, I think what they're doing, what you'll hear is a lot of is some deafening silence from trading partners on this. They don't really want to do a grandstand about this while the president is trying to figure out what his next steps are. This is, nothing they want to draw attention to themselves about. But they'll be doing some back channeling to try to figure out what it means for those reciprocal tariffs, ranging from 10% up to 30, 40% for some of them. They'll be trying to figure out whether that now is going to become much lower, given the authorities, the more restrained authorities that the president is going to have to press ahead with.
Brendan, as we wrap up this conversation, what will you be looking at? How are you going to determine what area of coverage is most likely to be most impactful to companies, to investors, as they try to figure out how to move forward in a new veil of uncertainty?
Yeah, I think the main thing to watch out for now is how Trump reacts, both on with his in the tone of his social media, but also, are we going to hear from USTR and the Commerce Departments today, even or soon, about what their plan B is? They have been talking about that they're ready for to shift gears if they have to. So we'll see how quickly they start to roll out that plan B, but it's going to be some time before it's clear how they're going to keep pressing ahead with the president's economic agenda, which is the centerpiece of which is tariffs, and how they can keep generating the kind of investments that the investment deals and trade deals that they're negotiating to see if they can see if that could still stay on track or whether it's all really going to kind of fall apart.
Brendan, thank you so much. We really appreciate getting your expertise. Brendan Murray, Bloomberg News global trade editor. He is based in London. Right now, we want to get the political angle here for the president and the administration. Gautam Mukunda joins us. He's a lecturer at the Yale School of Management and a Bloomberg opinion contributor. Gautam, thanks so much for joining us here. Again, put into context how much of a setback this is for President Trump and his administration.
Hi, Paul. This is pretty big. It's in many ways the first really significant Supreme Court rebuke of the administration. And this is a court that's kind of gone out of its way to accommodate him as much as possible. So the legal ruling is not surprising. It's not that anyone was going, oh, this was the president was okay on the law. He clearly was not. It's the fact that the court is willing to stand up to him that's really striking.
Right, standing up to him, and including by some of the justices that he nominated as well. Neil Gorsuch, for instance, ruling against the tariffs, although Brett Kavanaugh and two other conservative justices did dissent. We should mention that there's a headline here from a U.S. official. It's what we call at Bloomberg a hothead. President Trump will travel to China from March 31st to April 2nd. And I think I bring this up because this has been one of the criticisms of the administration, which is that the president has focused a lot more on foreign policy, foreign affairs, than he has on domestic issues, particularly those most relevant to Americans who feel the pressure of inflation and the pressure of the affordability crisis. Do you expect an uptick in foreign policy adventures from this White House now that we have this legal setback from the Supreme Court?
So I do expect the uptick, but I'm not sure they're related. Second-term presidents almost always focus more and more on foreign policy, partly because they are thinking about their legacy, and partly because their control over their domestic political party inevitably ebbs, since they're not going to be on the ballot again. And so every member of the Republican Party, however afraid they might be of Donald Trump, is less afraid with each passing day, just because he has less ability to influence their political fortunes. So that kind of leaves him to divert out to the foreign policy stance. But I think what's more the striking thing here is essentially how much self-control he will be able to exert when this rebuke on what is his signature policy from a court that he thinks of as essentially his property. What's going to happen next is I'm not sure anyone can predict it.
Gautam, I mean, these tariffs have been really the centerpiece, the backbone of much of how President Trump interacts with other countries, getting them to make investment announcements in the U.S. because of the threat, tacit, explicit, however you want to phrase it, of tariffs. Has he lost that power, that leverage right now?
I mean, he's clearly lost a lot of it. And what's striking is how broad the Supreme Court decision is. It's not just saying you can't do this under this particular sort of twisting of the law. The decision seems quite structured to say you just can't do this without the court. But while President Trump got many announcements of major investments in the United States, it's really not clear that any of that was very substantive. There's some combination of sort of other countries sort of playing the game and giving him his press releases. And also, I think a lot of other countries that realized that if they waited this out, there was a very good chance the Supreme Court would rule this way. So they were just better off, giving him shiny objects and letting the game play out.
From the administration's perspective, is there anything they can do to kind of drag their feet on complying with this Supreme Court ruling?
On complying, so if they do, then we are in the midst of sort of what I think everybody has been trying to avoid, even the Trump administration, which is a direct confrontation between the Supreme Court and the presidency. That could get very bad very fast, and I think no one wants to see it. What they will probably do is find other legal sort of pretexts to try and exert these tariffs. But I think what we'll have to watch is the Supreme Court ruling does not mandate whether the money that has been already collected has to be refunded. That is going to be complete chaos. And watching that legal process as companies sue for what was, after all, we now know a clearly unconstitutional, unjustified taking, I mean, it'll be a full employment act for lawyers for the next 5 years, I guess.
Gautam, boy, if I'm in Congress today, if I'm a Republican, I'm a Democrat, I feel like the president's been wounded here a little bit. Do you expect to see a change in tone with the president and his relationship with both parties in Congress here? I mean, boy, we have the State of the Union coming up just next week.
Yeah, the president has been wounded. It's not once. This might be that's not just once. This might be the most significant wound. But, you know, there is blood in the water, and the Democratic sharks are starting to circle. I think you're also starting to see, you know, right now it's only Republicans who are sort of leaving office. Thom Tillis is the most prominent example of people who are just sort of saying, enough is enough. I cannot swallow this anymore. But they're not the last one. I suspect they won't be the last ones. With every number that he tricks down in the polls, that's going to get easier. In some sense, I think the Supreme Court may actually have saved Donald Trump from himself a little bit, because these tariffs were not popular. And striking them down might actually help him a little bit in public opinion, depending again upon how he reacts to it. I think we're all waiting for the next Truth Social post with bated breath.
We certainly are. And we should mention that Caitlin Collins of CNN did send out a social media post saying that President Trump called it a disgrace, the Supreme Court ruling, and reportedly told the governors at the White House breakfast with governors that he has a backup plan. Gotham, what does this mean for companies that have been having to pony up the money for tariffs and now, because the tariffs are ruled illegal, have the possibility of maybe clawing them back if we move in that direction? How do they make decisions? How do they move forward with any kind of planning? How do they think through what their next year, 2 years, 3 years looks like?
I mean, that has been the central question of every kind of corporate decision-making since the day Donald Trump returned to office. The level of uncertainty is high, and it's going to keep getting higher because this is not an administration that seems to have a back-down mode. My guess would be that the refunds and things like that will be handled by the lawyers, and if you get it, you get it, and if you don't, well, you know, that is not, in some sense, that is not a decision that companies have an ability to influence. They should try to get the money back. Whether they'll succeed or not, I have no idea. What they have to worry much more about, I think, is what will the next step be? Because there will certainly be a lashing out. And does that mean that companies that have thought they had gained exemptions or thought they had stable windows to trade are going to lose that? They might.
All right, Gotham, thank you so much. We appreciate that. Gotham Mukunda, lecturer at the Yale School of Management and a Bloomberg opinion contributor. Scarlett, I think about what Brenda Murray says. I mean, this is a win for free trade, folks, but it is going to reintroduce another level of uncertainty into just trade in general. And companies, once again, saying, we're not really sure what the playing field is here. So that could be, in the short term, problematic.
Absolutely. And we've seen what it did to their forecast for the full year, for the upcoming quarter during earnings season. You know, they had to hedge a lot because they weren't able to give any kind of clear-cut guidance. It also creates a lot of uncertainty for other nations. Countries that were negotiating trade deals with the U.S. Maybe came to an agreement but have not finalized it completely and signed it. I mean, this kind of throws everything up in the air.
And the markets seem to like it right here. The S&P is up 0.6%, particularly the tech stocks. If you look at the NASDAQ, up 1.14%. So we'll get an angle on how the technology industry may view this Supreme Court case. We'll check in with Dan Ives in just a moment at Wedbush Securities to get his thoughts on this ruling. Right now, let's head back down to Washington, D.C. Nathan Hagerty's got a Bloomberg Business Flash for us.
Yeah, Paul, it's brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty-free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. The Supreme Court's rejection of President Trump's tariffs has investors piling into stocks right now. We check the markets for you all day long here on Bloomberg, so right to it. The S&P 500 is up 45 points, a gain of 0.6%, trading above 6,900 for the S&P level. The Dow Jones Industrial Average is up 0.25%, up 110 points. The tech-heavy NASDAQ Composite is leading the gains, up 1.1%, up 246 points. The Supreme Court ruling is taking some attention off fourth quarter GDP that came in much weaker than expected, actually, 1.4% on a record-long government shutdown. Scott Ladner is Chief Investment Officer at Ladner Investments.
There's not a whole lot to take take out of this report because, we had a government shutdown. GDP came in light largely because of that government shutdown. Nobody really knew how much of GDP was going to take out. Looks like it's about a percentage point or so was due to the shutdown. But at the end of the day, this is still like a consumer that is spending money. Consumption was fine. It was down a bit, but it was generally fine. But at the end of the day, we're going to get back to earnings. Like we're pretty much through earnings season.
Right now, of course, the focus is on how the rejection of the tariffs will affect markets. Right now, retail names with a lot of manufacturing in Southeast Asia are catching a bid. Looking at Lululemon, it's up 1.1%. Abercrombie & Fitch up 1.5%. Victoria's Secret is higher by 2.8%. Right now, 6 of the 11 main industry groups in the S&P 500 are on the rise, led by communication services up nearly 3%. Consumer discretionary is up 1.2%. 10-year Treasury now down 6/32. The yield is up about 2.5 basis points to 4.09%. Yield on the 2-year, 3.47%. Oil is still trading near a 6-month high, with President Trump saying he's not ruling out a limited strike on Iran. Right now, West Texas Intermediate is down 0.2%, just shy of $66 a barrel. COMEX gold up 1.3% at $5,061.90 per ounce. Paramount Skydance says it has cleared the Justice Department's last regulatory hurdle in its proposed $77.9 billion takeover of Warner Brothers Discovery. But there is that one big hurdle, the fact that Warner's has already signed a deal with Netflix to sell its studios and streaming business for $72 billion. Paramount Skydance right now down 1%, Netflix up 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nathan Hager. That's your Bloomberg Business Flash. Scarlett and Paul.
Thank you so much, Nathan Hagar in Washington, D.C. All right, as Nathan pointed out, markets are on the move following the Supreme Court's rejection of President Trump's tariffs, and we see equities in the green right now with the NASDAQ leading the way. The NASDAQ Composite Index up 1.1%. By the way, bonds are lower. That is pushing yields higher. So I do want to bring in Dan Ives. Dan, of course, is the noted analyst, the global head of technology research at Wedbush Securities, to get his take on what we're seeing in tech and whether, Dan, this SCOTUS ruling is kind of just risk on for the market overall, and that means a big lift for the biggest part of the stock market, tech, or whether this is specifically good news for tech companies.
Yeah, this is specific good news for tech companies because of the supply chain. Because the biggest worry is that tariffs, what that could do in terms of the data center build out, AI build out, chips, everything that we're seeing with China. Look, there's going to be other ways that they're going to try to go around this 232, Section 301. The reality is it's a huge blow to the tariff policy, and it's very bullish for tech coming out of the gates. That's going to be the initial take.
So, Dan, it's been, a little more than roughly a year that all companies have been dealing with this tariff uncertainty. How have the technology companies who do have a global supply chain, rely a lot on parts of Asia, how have they kind of adjusted here?
Look, I mean, Apple has moved a lot to India. Others have, had to make significant investments in the U.S. and also look to diversify their supply chain. But as we've talked about a lot on the show, like the vast majority of the supply chain will continue to be cemented in Asia. And where you had companies starting to look at diversification, increase costs, was this going to potentially, impact the supply chain? That's off the table now. And that's something, look, big tech companies, they'll say publicly, behind closed doors, there's a huge sense of relief right now because of this.
Interesting. Given that so many of the big tech CEOs have really aligned themselves with the president, what does this mean for the big chip makers that are outside the United States, the TSMCs, the Samsung Electronics of the world?
I mean, it's extreme positive for them because when you think about each of them, the question there was, how is that going to impact them from a policy perspective, from a tariff in terms of coming into the U.S.? And then you start to think about manufacturing. You'll continue to have some manufacturing move to the U.S. But this is actually going to put the brakes on some of the policies that some of these tech players had. Look, there's going to be Section 232, Section 301. There will be other areas that go about it. But for big tech, supply chain, chip players, memory players, it's a clear positive. There's no way to really go against that thesis.
Dan, your world has been rocked over the last several weeks by AI and the impact some people are speculating it may have on certain parts of the marketplace, including software companies, particularly software as service companies here. What's the current thinking as you talk to investors these days?
Yeah, I mean, Paul, I'm calling it's the AI ghost trade because you're trying to fight a ghost because of the view that this is going to massively disrupt software. It's going to massively disrupt cybersecurity. And I've talked about it's the opposite. I think it's the most disconnected trade that I've seen in my career on Wall Street in terms of what's happened to software stocks now. But again, like we talk about fighting a ghost, there's going to be like boxes that are checked, whether it's OpenAI in the 100 billion, whether it's NVIDIA earnings next week, whether it's Apple on AI, whether it's circular financing, software companies showing monetization. This is going to happen. But right now you're fighting a ghost and the bears are loving it. But again, that will be short-lived in my opinion.
That might be the case in the equity market, but we're seeing private credit, leveraged loans really come under pressure because of all those loans to a lot of software companies, many of which don't have investment grade ratings. Is credit driving the concerns in the equity market? What's leading what, Dan?
Yeah, I mean, look, if you look at Blue Owl, right? I mean, obviously there'll be like some concerns there, but then on the other hand, look at Apollo and others. So I think if you look relative to some of the exposure and what the credit market's telling you, it's still very healthy from a credit perspective. But look, no different than we saw with banks a few years ago, Silicon Valley Bank and others. There's going to be hypersensitivity to anything that happens here. But the reality is that these companies have more cash in a lot of countries when you actually go through it. The point is, like, they're going to continue to do. But look, Scar, it's like if there's 5 people trading CDS instruments to Oracle in their basement, that's going to be extrapolated, right? And we saw that like a few weeks ago. It's just a reality. Like, we're going through a ghost trade. It's an AI ghost trade, and you got to navigate through it. But net today, it's positive for tech, and that's one step forward.
Hey, Dan, you spend a lot of time in Silicon Valley, and it's just a great place to get a sense of kind of where the tech investment mindset is here. Has tariffs dialed back kind of the risk profile of some of the good folks on Sand Hill Road as they think about what technologies to fund? Is it tempered it a little bit, and could today's ruling be a major change?
Yeah, I think tempered and maybe it put like a little question mark in the back of the mind in terms of what was going to be the next policy, what was going to be the next threat, specifically when it came to supply chain, how companies are positioned. You can't just snap the fingers and change your supply chain. We're talking about things that could take 24, 36 months. This ruling, it does clear the path a little more. And I think that's something that's a positive as you're in a unprecedented build out of a fourth industrial revolution in AI. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Dan, thanks so much. Appreciate you jumping on there. Short notice. Dan Ives, he heads up technology research at Wedbush Securities. Appreciate getting a few minutes of his time. Looking at the bond market, Scar, they got yields up just a couple of basis points on the 10-year, 4.08%, up about a couple of basis points on the short end of the curve here. Let's check in with Ira Jersey, see what's happening in the rates market, and see how this change potentially here in trade policy may impact the Federal Reserve. Ira, again, I'm starting to see some reporting on, boy, if they got to refund some of this money, how are they going to afford it? Where are they going to raise the capital? Are you hearing any of that chatter these days?
Yeah, we get it all the time. We've actually already gamed this out. So this was, not one of the two outcomes, right? Either they were going to say the tariffs were okay, or they were going to say that tariffs had to be repaid at some point. And, it's really the how, right? So there are a few details that have to be worked out. But at the end of the day, the Treasury Department has $890 billion in cash on hand. They can use $100 billion or so of that to repay the tariffs. And then they're going to rebuild that over a pretty short period of time using Treasury bills. So from a broad market impact, it's not really going to affect things. And keep in mind, the Treasury bill, elasticity of demand for Treasury bills is actually quite high. So, we're coming to a period where typically we have very high T-bill issuance because people get tax refunds from their everyday taxes. And sometimes the change in Treasury bill issuance goes up $100 billion in a single week. So it's not an unprecedented type of amount of money that we're talking about here in terms of the Treasury having to raise $100 billion. Now, I think longer term, it's really one of the reasons you're seeing that couple of basis points sell off in the long end of the Treasury curve. It's because this does incrementally increase deficits going forward, right? It's $100 billion or more every single year that you're not going to get in tax revenue, and that means that you're going to have to either cut spending or increase the deficit, and more than likely it's going to be an increased deficit, and that's why you're seeing that little bit of a sell-off.
In terms of demand for longer dated treasuries, are you looking for anything to change there?
No, I don't think so. At the end of the day, a lot of demand for treasuries has been coming from domestic U.S. savings. Foreigners, we made a big deal a year ago. Everyone's like, oh, what are we going to do if foreigners stop buying treasuries? Foreigners have not been net buyers of U.S. treasuries for a decade. So you're really talking about, will this change the demand for treasuries domestically here? And I don't see this changing things very much at all. If anything, it might actually increase the savings rate slightly and therefore incrementally increase demand for treasuries. But again, you have this push and pull. So even if there is that incremental increase in demand, you're still going to have higher deficits, which over time means that you're going to have more and more treasury issuance outstanding. So you will have maybe supply and demand that's more or less in balance, but it's not necessarily going to be that way all the time when people worry about things like inflation. Like there is still a fear out there that inflation is going to come back. You saw the PCE deflator from this morning, kind of old data. I'm not sure that I would completely trust that as an indicator of what's going to come in the next few months. But nonetheless, there are people who are worried that services inflation in particular with higher wages is going to push inflation a little bit higher over the course of the year. That is more likely to stop demand for treasuries, and you can see a little bit higher yields, say 6 months from now, if that inflation actually turns out to be the realized.
Ira, today's ruling impact how the Fed might look at data, might think about its policy going forward here. One could argue, gee, less tariffs might be good for economic growth. That's on the one hand. On the other hand, it's like, here we are back in the uncertainty soup again.
Well, it's a good question. I think more than likely they'll wait and see how it affects the overall economy, right? Will this affect things like consumer sentiment, right? I think that's probably the bigger case of this, where if people think, oh, my imported goods that I buy regularly on, from overseas, if those are going to be stable to maybe a little bit lower in price, then I'll be able to buy more domestically produced goods, and that will be good for U.S. domestic growth. But again, it's relatively incremental. And I think that the Fed is going to look through this. And I think they have looked through the tariffs a little bit. I think they were really concerned about the price implication of this. And what you've seen in a lot of the data, like even last week's CPI data, today's PCE deflator data, goods prices are not spiking significantly on this in aggregate, right? Yes, they've gone up a little bit, but you're talking about a relatively small part of the consumption basket. I think people, for whatever reason, there's this idea that the goods that are imported are some massive part of what U.S. consumers buy. It's actually not. Most of what we buy are domestically produced services, and that spending has continued to be relatively robust. You've seen price increases in the services sector even more. Like if you go look at some of the data that we received today, services drove inflation higher in December, not goods prices, and I think that that's an important aspect that we have to consider when we consider inflation and like the macroeconomic effects. It is very small, much smaller, I think, than people really think.
Fantastic insight and context there. Ira, really appreciate your joining us. Ira Jersey is our chief interest rate strategist here at Bloomberg Intelligence. giving us the read-through on what the Supreme Court striking down President Trump's tariffs means for the fixed income market, for the economy, and for the Federal Reserve. Let's bring back our June Grasso. She is host of Bloomberg Law, for some more insight and analysis on what this ruling does mean. June, the 170-page paper ruling, you've gotten through probably the first couple of pages.
Yeah.
What are your thoughts now as you continue to look through it?
Well, so I'm struck by the fact that so much of it was forecast in the oral arguments. For example, during the oral arguments, the Chief Justice said that imposing taxes on Americans has always been the job of Congress. And that's basically what they're saying here. You know, the president, you went too far. You don't have authority to do this. It's up to Congress to do this. So I'm sort of struck by that. And even some of the things that Justice Gorsuch said, and the fact that he is usually almost always siding with the other very conservative members of the court. He's one of the three most conservative members on the side of the president's actions. And here he went against the president. I think that's very significant. And some of the things he said were that, well, during the oral arguments, what would stop Congress then? What would stop the president from taking more powers away from Congress? If we give him this, what's the next thing? Does that mean that, you know, he's going to be able to declare war? So I think it's really interesting that he has come out in this opinion with Justice Amy Coney Barrett, who's, you know, sometimes she's a little more iffy on these things, but he's always in the corner of with the most conservative justices in support of the president's policy. So joining us now is an expert in this area, Jimmy Gurule. He's a professor at Notre Dame Law School. Jimmy, we've talked about the oral arguments several times. Did anything surprise you in this opinion after hearing the oral arguments?
I'm not surprised with the outcome, with the decision, the ruling of the court striking down the tariffs. And I believe that many of the arguments in the opinion, and again, I haven't had the opportunity to read the entire opinion at this time, but I think many of the arguments were arguments that we heard during oral argument back in November. And I think it was a weak case for the government. I mean, again, we have a situation where the statute at issue, the International Emergency Economic Powers Act, which the Trump administration relied on in imposing these tariffs, never doesn't mention the word tariff at any time, at any point in the statute. B, no president in the history of IEEPA has ever relied upon IEEPA to impose tariffs. And then, of course, the Constitution is very explicit in Article 1, Section 8, Clause 1, that it's Congress that has the power to lay taxes, you know, not the president. So I think the arguments were raised at oral argument, and many of those were just codified in the formal opinion that we received today.
Where did the three dissenters find that the president has this power?
Yeah, I think they're probably reading too much into the language of IEEPA. So IEEPA, there's a section in IEEPA, the International Emergency Powers Act, that states that once the president declares an unusual and extraordinary emergency that affects, you know, foreign policy, national security, the economy, then he can regulate importation. And so that became the statutory text that the government lawyers really latched onto, the regulation of importation. And the argument was that tariffs fell within that language of regulation of importation. But it's a very thin reed to go ahead and base all of these different tariffs, the drug trafficking tariffs, the trade imbalance tariffs, and some of the other specific tariffs against Brazil and India and so on, based upon that language where, again, no president has ever relied upon IEEPA to impose tariffs.
Professor, the Supreme Court chose not to rule on how any rebates of tariffs may take effect here. Is there any precedent to how maybe some lower courts may proceed going forward?
No, I think we're really kind of and uncharted waters here. I mean, so there really, for me, two important implications, following the court's ruling. And the first is the issue that you raised. So is the government now going to have to refund the tariffs that have been imposed going back to April of 2025 when these tariffs were first initiated? And as we know, there's been about, I think that the tariffs collected to date since April of 2025 total about $240 billion. So arguably that amount could be refunded to the companies that pay the tariffs. And so the question is, well, what's the process? What's the mechanism for doing that? How is that going to happen? How are these companies going to be able to prove that they're entitled to X number of dollars? What's the process going to be for refunding those companies that amount of money? So that's uncharted. I think it really is going to be a challenge, for the government. I think the other important implication is, well, what's the impact if that happens? What's the impact on the budget? I mean, having to pay out $240 billion in tariffs, how is that going to impact the budget? And then I guess the third implication for me would be, well, is the Trump administration going to reimpose tariff, but doing it in a more precise way based on legislation that Congress has passed in the past that would authorize the president, or Congress has authorized the imposition of tariffs. So I think we haven't heard the end of this story. I think that the Secretary of the Treasury is going to look to existing legislation, use that legislation to reimpose tariffs and proceed that way.
All right. Well, this is something that will play out in the coming weeks. Reuters has reported that President Trump says he has to do something about the courts. And again, this is based off a headline from Reuters, so I don't know what the context of this is. But legally speaking, what could the president do about the Supreme Court's decision? In the past, he has always chosen to appeal. You can't appeal beyond the highest court.
No, you can't appeal beyond the highest court. And it's really interesting that two of the justices that ruled against him were justices that he placed on the court. And so Justice Amy Coney Barrett and Justice Gorsuch are Trump appointees, and they ruled against him, and they comprised the majority in the 6-3 decision. So I think that the president is very limited in terms of what he can do. In terms of the legal decision itself, I don't think there's really anything that he can do in terms of how he might seek to reimpose tariffs through other existing legislation moving forward. Well, that's a different issue, and I think that is probably what he's going to be focusing on next.
All right, Professor, thank you so much.
गाइस ये नेचुरल गैस में यहाँ पर हाफ प्रॉफिट बुक कर लेना एंड देन ट्रेल ठीक ठाक चला गया है. लेट्स सी फाइनल टारगेट तक पहुँचता है. फाइनल टारगेट, ये पहला टारगेट है 1:3 का. सेकंड टारगेट आप 1:6 का रख सकते हो. दिस इज द सेकंड टारगेट, बट बुक द हाफ प्रॉफिट ओवर हियर. ओके, हाफ प्रॉफिट बुक करके ट्रेल करना है एंड देन रिमेनिंग क्वांटिटी ट्रेल. पिछले 2 दिनों से ट्रैपिंग कर रहा था. काफ़ी लोग ट्रैप हुए होंगे बाइंग सेलिंग दोनों साइड. नाउ इट इज़ ऑन अ मोमेंट, अच्छे मोमेंटम में है. लेट्स सी फाइनल टारगेट भी देता है तो ऊपर आता है तो ये लेवल बड़ा इंपॉर्टेंट रहेगा, क्योंकि ये लेवल टेस्ट हो चुका है ऑलरेडी. आपका 17 को, 18 और 19 को कुछ मिला नहीं. 20 2 दिन तो मोमेंटम हुआ नहीं, तो आज ही मोमेंटम है. फिर अब 2 दिन के रेस्ट के बाद ठीक ठाक मोमेंटम करता हुआ. मैं क्रूड में भी एक्सपेक्ट कर रहा हूँ थोड़ी जल्दी आए सेलिंग. यहाँ पर जितना लेट सेलिंग आएगी हमारे लिए प्रॉब्लम है. आज लास्ट ट्रेडिंग सेशन 10 बज चुका है ऑलरेडी. 2 घंटे और हैं. 2 घंटे में नहीं आया नीचे तो ऐसा ना हो कि ये फॉरेक्स में गिर जाए नीचे. फॉरेक्स में गिर जाए नीचे और फिर यहाँ से सपोर्ट लेके ऑलरेडी चला जाए, क्योंकि मंडे को भी अर्ली मॉर्निंग ओपन होगा 3:30 पे. हमारा मार्केट तो 9 बजे ओपन होगा, तो कहीं ये प्राइस एक्शन में ना चला ना जाए. उस केस में ये लेवल हमारे लिए मिस हो जाएगा, विच इज़ नॉट, आई डोंट वांट इट. तो मैं ये एक्सपेक्ट कर रहा हूँ कि ये आज या तो फॉल कर जाए पूरा, मंडे को एग्जैक्टली सपोर्ट पे ओपन हो, या फिर ये अगर फॉल नहीं करता, मान लो इसी लेवल के आसपास कहीं क्लोजिंग देता है, मंडे को एटलीस्ट हमें इस लेवल के आसपास कहीं मिले. ये मैं नहीं चाह रहा कि ये इस लेवल पे फॉरेक्स में सपोर्ट लेके चला जाए ऑलरेडी. आई डोंट वांट इट. ठीक है, लेट्स होप मोमेंटम कर दे. 2.5% वैसे गिरना इतना आसान भी नहीं रहेगा। 2 दिन मार्केट क्लोज है तो कुछ ज़्यादा इशू नहीं आएगा इंडियन मार्केट के पॉइंट ऑफ व्यू से देखोगे तो। बट बेटर रहता अगर आज ये नीचे सपोर्ट एरिया तक गिर जाता तो ये फाइनल टारगेट भी मिल जाता सेलिंग का, फिर बाइंग में यहाँ से ओवरनाइट होल्ड करके भी ले जा सकते थे। उस केस में फिर टारगेट थोड़े बड़े रखते हैं क्योंकि नेक्स्ट वीक भी मार्केट ज़्यादा कुछ मोमेंटम करेगा, चांसेस कम है 10 दिन मार्केट को। नेक्स्ट वीक तक तो देखना ही पड़ेगा ईरान इसराइल और यूएस का जो इशू है वो क्या रिजॉल्व होगा या नहीं उसमें। सो वेरी इंपॉर्टेंट नेक्स्ट वीक फॉर क्रूड ऑयल पॉइंट ऑफ व्यू। परफेक्ट ट्रेड इन नेचुरल गैस। लेट्स होप थोड़ा कंटिन्यूएशन में मिले अब ट्रेड, क्योंकि क्रूड ऑयल में भी देखोगे ये लेवल यही है मेजर फिलहाल के लिए। कि मैं अब ज़्यादा एक्सपेक्ट नहीं कर रहा हूँ ऊपर जब तक अभी 6070 6080 के ऊपर प्रॉपरली सस्टेन नहीं करता। ज़्यादा बुलिशनेस भी अभी नहीं है, प्रॉफिट बुकिंग में डाउन ही जाना चाहिए। प्रॉफिट हाफ बुक कर लेना नेचुरल गैस में एंड देन ट्रेल, कोई न्यूज़ तो नहीं है। लेट्स होप टारगेट तक जाए। बाकी मैं देखो एक्सपेक्ट कर रहा हूँ कि अगर ये थोड़ा ऊपर ही निकल जाए इस लेवल तक तो बेटर रहेगा, वहाँ पर रेजिस्टेंस अच्छा है। इवन तो ये भी रेजिस्टेंस ठीक है, बट आई एम एक्सपेक्टिंग कि इस लेवल को ना प्राइस रिमूव कर दे एज अ रेजिस्टेंस, ठीक है, सस्टेन ना करे, रिमूव कर दे सो दैट हमारे पास एक ब्रॉडर रेंज बन जाएगी दिस वन, तो ट्रेड करने में मज़ा भी आएगा। So book the half profit and trail the remaining quantity in natural gas. 15-minute chart is must. ओवरनाइट लेके तो नहीं जाएंगे अब आज क्रूड ऑयल में। डॉलर इंडेक्स को देखोगे अननेसेसरी गिर गया, ऊपर जाना चाहिए था फिर भी फॉल ही किया है। गोल्ड एंड सिल्वर भी फॉल किए थे, रिकवर पूरा हो चुका है, जितना फॉल किया था उतना ही रिकवर गोल्ड, एंड सेम फॉर सिल्वर, जितना फॉल किया था रिकवर करके वापस ऊपर ही चला गया। तो क्लोजिंग तो पॉजिटिव ही हो रही है, एमसीएक्स में देखोगे तो ऑलमोस्ट 5% का पॉजिटिव मोमेंटम है। साथ ही साथ यूएस मार्केट भी ठीक ठाक पॉजिटिव हो गए, नैस्डैक हो, एसएनपी 500 हो, इवन डाउ भी देखोगे, सो ऑल आर पॉजिटिव टेरिटरी राइट नाउ। डाउ में थोड़ी प्रॉफिट बुकिंग ज़्यादा आ गई है, बट नैस्डैक इज कम्प्लीटली स्टिल पॉजिटिव एंड S&P 500 is also completely positive right now. गिफ्ट निफ्टी देखते हैं मंडे को कहाँ ओपन होता है। फिलहाल इंडियन मार्केट की क्लोजिंग जहाँ पर हुई थी वहाँ से काफ़ी ऊपर निकल गया है, ऑलमोस्ट जो हमारा परसों का ट्रेडिंग लेवल था मार्केट गिफ्ट निफ्टी में वहीं पहुँच गया है वापस से, ऑलमोस्ट कह सकते हो 360 डिग्री रिवर्सल हुआ है। कल 25,875 880 के अराउंड से सेलिंग आई थी गिफ्ट निफ्टी में, ऑलमोस्ट 2% गिरा था। फॉरेक्स गिफ्ट निफ्टी में देखोगे तो 2%, 542 पॉइंट ऑलमोस्ट रिकवर हो गया, 50 पॉइंट रह गए हैं बस। अगर ये भी रिकवर कर जाता है तो बढ़िया है, तो फिर हमारा मार्केट मोस्टली गैप अभी ओपन होगा। इंडियन मार्केट क्लोज हुआ था वहाँ से अगर चेकआउट करोगे तो अभी फ़िलहाल गिफ्ट निफ्टी इज़ वेरी हाई। लास्ट जो कैंडल क्लोज हुई है इंडियन मार्केट की अभी तक लगभग 1% पॉजिटिव हो चुका है, 240 पॉइंट पॉजिटिव राइट नाउ। निफ्टी गिफ्ट निफ्टी गुड साइन फॉर मंडे ओपनिंग, इसी लेवल पर आसपास क्लोज होता है तो वेरी हाई चांसेस गैप अप देखने के लिए मिलेगा, ठीक है। गिफ्ट निफ्टी इज़ अ गुड साइन, ठीक है। देखना पड़ेगा अब ये इंडिया करता क्या है, बिकॉज देखो यूएस ने जो टैरिफ लगाए थे बहुत सारी कंट्रीज पे, उनमें से मैक्सिमम कंट्रीज ने यूएस के साथ ट्रेड डील साइन कर दी है, ठीक है, मैक्सिमम कंट्री ने ट्रेड डील साइन कर दी है। सिर्फ मेजर कंट्रीज इन्होंने ट्रेड डील साइन नहीं करी है, जिनमें फ़िलहाल के लिए अगर देखोगे तो चाइना ने ट्रेड डील साइन नहीं करी है, इंडिया ने भी नहीं करी है, ठीक है। इंडिया ने भी कोई ट्रेड डील साइन नहीं करी है। इंडिया और यूएस की जो ट्रेड डील है वो नेक्स्ट मंथ मार्च में होने की बात हुई है। वो भी प्री ट्रेड डील है, आधी ट्रेड डील। अब वो भी इंडिया साइन करेगा नहीं करेगा को पता नहीं, क्योंकि जब टैरिफ ही नहीं लगने तो ट्रेड डील को फिर से नेगोशिएट होगा मार्केट में, देखना पड़ेगा। बट राइट नाउ इफ यू लुक एट दिस, नो ट्रेड डील इज पॉसिबल। दिस इज द गिफ्ट निफ्टी 15 मिनट का चार्ट है ये, इंडियन मार्केट की क्लोजिंग कैंडल। यहाँ से प्राइस ऑलमोस्ट 245 पॉइंट 246 पॉइंट पॉजिटिव, लगभग 1% 250 पॉइंट ऊपर चल रहा है। अच्छा गैप अप हो सकता है मंडे के दिन। बाकी नेचुरल गैस में सेलिंग ट्रेड को ओवरनाइट रखना मुझे लगता नहीं है सही है। मंडे का देखेंगे इसमें। वैसे अगर प्राइस सपोर्ट पे आ चुका होता तो बाइंग में ओवरनाइट रख सकते थे, बट अब नहीं। सपोर्ट नहीं है फिर भी पता नहीं प्राइस क्यों रुके जा रहा है क्रूड ऑयल में, ठीक है। बाकी वापस जब तक अब 6070 के ऊपर प्रॉपर्ली ब्रेकआउट करके सस्टेन नहीं करता, बहुत ज़्यादा बुलिश भी नहीं है, नीचे सपोर्ट पे आएगा तभी थोड़ा मज़ा आएगा बाई करने में। एक सपोर्ट बन सकता था, है नहीं लेकिन। रेजिस्टेंस पे पहुंचता है तो डायरेक्टली सेल मत करना, नेचुरल गैस में डिपेंड करेगा कैंडल कैसी आ रही है उस पर देखते हैं। ये कैंडल भी ओपन इक्वल टू लो है 15 मिनट की। ये वैसे 45 मिनट का चार्ट लगाया हुआ है मैंने, बट कैंडल 15 मिनट की इज ओपन इक्वल टू लो राइट नाउ इन नेचुरल गैस। जब टैरिफ ही यूएस गवर्नमेंट के इलीगल हैं तो इंडिया पे 18% टैरिफ भी नहीं लगेंगे। 18% टैरिफ भी नहीं लगेंगे तो बैक टू द नॉर्मल।
This latest headline coming in from the Supreme Court, global tariffs struck down by the Supreme Court.
Yep, so today was going to be the fate of whether or not Trump's IEEPA tariffs, which about 60 to 75% of the tariff policy right now in the United States is based off of, and the Supreme Court making this decision, a red head across the Bloomberg terminal, Trump's global tariffs are struck down by the U.S. Supreme Court. So this means that the Supreme Court has decided that using IEEPA, which this administration has done when it comes to the fentanyl tariffs and it comes to reciprocal tariffs for other countries, using IEEPA is illegal. Now, given that we are in the financial community, a lot of people may be thinking, does this mean we will not have tariffs? That is not the case. This administration has talked about Plan B. Now they're going to enact tariffs using other policies via USTR and the Commerce Department. But using IEEPA, the Supreme Court is saying that this was illegal. Very interesting considering how they've been using these tariff refunds. And also, the president is going to give a massive address next week. It's the State of the Union. A lot of Supreme Court justices go to the State of the Union. You can imagine this is going to be an incredibly difficult time for this president, considering this was paramount, a huge policy for his administration.
And not only do they go to the State of the Union, I believe often they're sitting in the front row, too. So this might be a little bit more awkward. Anne-Marie, the noise we were kind of getting from the Supreme Court, is it surprising that they struck it down, or did it seem like we were heading in this direction?
Well, there was a lot of individuals who thought potentially this is just too big. It was too big of a policy to fail, and that they would uphold the president's use of IEEPA. But others were saying if you look at IEEPA, which has not been used in this way really ever when it comes to tariff policy, they were saying this wasn't the best legal justification to enact these tariff policies. IEEPA is supposed to be used for emergency purposes. Now, some were saying maybe there would be a split decision. You use IEEPA and call the fentanyl tariffs an emergency issue, but not reciprocal. And now the Supreme Court is basically saying using IEEPA, that is not legal. So this is, really can't emphasize how big of a blow this is for the Trump administration.
Let's just get a quick check on how markets are reacting to this. And Anne-Marie, I know you probably want to look through the decision a little bit more, too. So first, here's your S&P 500. The initial reaction is one of a spike. We were little changed. Now we're up by 1/3%. Again, that's not huge gains. We'll see what some of these individual companies are doing, especially those who have joined a lawsuit in order to get tariff refunds. Lululemon, here's a great example of it. That's up 4% this morning. Consumer discretionary, which had been falling, that is now up 1%. Communication services still the best sector. There you go. Let's take a quick look at what bonds are doing this morning, too. They are moving higher, but recall they had been moving higher after PCE yields, that is. PCE had been moving higher, the yields had been moving higher given that PCE was largely hot. So your 2-year yield, that moves in up by nearly 3 basis points. Your 10-year yield, that stands at 4.08. That also moves higher by 2 basis points. So again, the reaction from this has been higher 4-year yields across the curve. And meanwhile, an equity market that's rebounding, now being led by consumer discretionary companies. Williams-Sonoma, those shares up 4%. eBay up 3.6%. Nike, those shares also up 3.3%. So again, a lot of these consumer tariff exposed companies moving higher. Anne-Marie Horjern is still around the table with us. Anne-Marie, what does, maybe we don't know at this point, but there has been this list of companies who have joined lawsuits in order